Hello and welcome. You're watching Ask Profit at NDTV Profit. I am Mahima Vachrajani. Well, before we move on to all your queries, let's take a quick look as to how the markets are doing right now. In terms of the Nifty 50, a tad bit under pressure, down by about 0.5%. The entire week, in fact, has been a consolidating phase for the Nifty 50 as well as the Bank Nifty. But today we are seeing some kind of downtick in the counter. The Sensex also down by about 0.5%. There is broader markets that is also, working in tandem with the benchmark indices, down by about 0.5% for the mid cap 150, almost 0.7% now, and the small cap 250 also down by about 0.5%. Let's put up the Nifty 50 heat map and see what counters are contributing to that kind of losing end. There you go. There's TCS on the back of its earnings, weak commentary coming in, and the stock down 2%, M&M down 2% as well, Wipro down 2% as well. So IT names seeing pressure once again in trade today. There's Bharat Electronics, Geo Financial, Apollo Hospitals and Reliance all down by about 1 to 1.5%. But counters that are doing well, HUL is that one counter that's shining in trade today and keeping the Nifty 50 in check, up by about 4.7%, almost 5% now, and this is because of the leadership change that they announced yesterday. Rohit Java to step down from 31st of July, and he's not completing his tenure. He's ending his term 3 years before his tenure, and Priya Nair getting appointed as the CEO and MD, first female ever CEO for HUL there. So a big thumbs up there, 4.7% up. There's SBI Life up 1.7%. Asian Paints seeing gains of about 1%. Sun Pharma up 1%. Nestle also doing well. Some Tata Consumer also doing well. So FMCG names doing particularly well in trade today. Let's also pull up the sectoral heat map and see how sectors are faring in trade today. It's Nifty, FMCG and Pharma. Pharma largely led by Glenmark and FMCG largely led by HUL, doing well in trade today. But Nifty Defence continues to see profit booking down by about 2.2%. Nifty Media down by about 1.7%. Nifty IT significantly under pressure, down by about 1.3%. Nifty Oil and Gas also down by about 1.08%. Let's also pull up and see the BSE 500. And see how counters are faring there as well, and then also pull up the advanced decline ratio later and see how things are faring there. There's VMart, which is seeing profit booking today, 4.6% down. Dish TV down by 4%. BEML, Jindal, Z Entertainment down by about 3%. Mazagon Dock, Sterlite, Garden Reach all seeing profit booking, but some counters doing well. Also includes counters like Glenmark, Datamatics, Global Spirits, Walk Hard and NetWeb Technology as well. But with that, let's also welcome in our guest for the day. We're joined by Sameer Dalal of Natwaral Sons and Stockbrokers and Jatin Gedia from Mirae Asset Sharekhan joining us now. Welcome to both of you gentlemen and a very good morning to you. I'll go to the first caller straight away. Dilip is calling in from Hyderabad. Dilip, hi, a very good morning to you. How can we help you today?
Hi, very good morning. Yeah, so I wanted to know about Gravita India. I'm holding 1,200 shares at the rate of 1865, and currently I'm sitting on 1.5 lakh minus. So I would like to know about the next 6 months view on this.
Next 6 months view. Okay, Dilip, I got your question. I'll take this up with Jatin quickly. Jatin, he's sitting on a loss of around 1.4 lakh rupees. What would you suggest? Should he continue to hold for the next 6 odd months?
I believe that the stock is in a downtrend. We believe that there is a scope for the stock to slip towards 1600 levels, wherein the next support level kicks in. So 1600, 1580 is the support area for the stock. Considering that he's holding on for, he's willing to hold on for the next 1 year, I believe that if he can average at that point of time around 1600, 1580, then that would be good. But as of now, no fresh additions are suggested. Hold on to the existing position.
Hold on to the existent position and do not add more on Gravita India is the view where charts are concerned. All right, the next caller, Rachit, is calling in from Mumbai. Rachit, hi, a very good morning to you. I believe you have a question on Tata Tech.
Yes.
Go ahead with the query, Rachit.
Hello.
Yeah, I can hear you.
Okay, so I have 69 shares at the price of rupees 889.
Okay.
So for a perspective of 3 to 4 months, what do I do for Tata Technology?
Okay, got your question, Rachit. I'll take this up with Jatin again. Jatin, Tata Tech on the charts?
Yeah, so despite the oversold conditions in the stock, the up move is not kicking in, and all the up move towards the 20-day average are being sold into. So I believe that the rise in the stock will be sold into. So if he is holding, then keep a stop loss of 700 for his existing positions. No need to add off as of now. On the upside, exit as of now would be the recommendation, because I'm seeing the trend is negative and all the pullbacks or the rallies are being sold into. So exit is the suggestion. On the downside, the expected level is around 650, 655, wherein the next crucial support comes in. So exit would be the recommendation.
Exit the counter is the recommendation that Jatin has for Tata Tech with respect to where charts are concerned. All right, the next question is from Naveen, who's calling in from Chennai. He's planning to buy Biocon from a longer term perspective, 2 to 4 years is what he's saying, and wants to know if he can make an entry at the current levels. Samir, hi, good morning to you. I'll come to you on this one. Do you think Biocon is the counter that you would pick from the entire space?
So good morning, Mahima. If you ask me, I mean, this person is hellbent on buying Biocon. I mean, I would say it's a good company to invest in, but it would not be the top pick of my pharma space. Okay, so first let's talk about Biocon. They're doing the medications which are in a very growing phase. They have a lot of launches planned, but it's taking them a lot longer to get scale and get even new launches going. So that's why if you see the stock has been in a bit of a lull for some time. We believe that going forward, obviously, these biologic drugs will get more preference in the US, and that will take an uptick, but it's taking a lot longer. So if you have a very long-term horizon, yes, you could stay invested. But if I think you have a slightly, 2 to 3 year view, I think something like a Sun Pharma or a Dr. Reddy could probably be a better bet to take. But one caveat, Donald Trump is constantly talking about putting these tariffs on pharma. Of course, he's also clarified saying that it'll start after a year. So the companies will have enough time to shift their manufacturing. But if something like that comes, I think the entire pharma space could go through a period of pain. So be a little cautious when you invest in pharma. And Biocon is more like a 7-8 year story, I would say. Valuations are not cheap at this point. But if you had to take a pick in the pharma space, pick Sun or Dr. Reddy.
Okay, and your quick view, Samir, on Glenmark with respect to the new partnership it has entered into.
Yeah, so that's a very good deal for them that they've got, right? The stock is, I think, locked in upper circuit this morning. Obviously, it's something that's beneficial. The first tranche of money will come through, will be good, but then we got to see how the further developments happen and when the next tranches will be possible if they get certain, how do you put it? Approvals, not approvals, but if the testing comes positive, then they will get. So we need to see how that pans out, but definitely a big positive and shorten the arm for them because it's a huge sum of money that they're going to receive.
Okay, so that's with regards to where these pharma companies are concerned. Our next caller, Arvind, is calling in from Uttar Pradesh. Arvind, hi, a very good morning to you. I believe you have a question on MGL.
Yes, sir. Good morning, ma'am.
Good morning.
मैम मेरे पास है ना 153 शेयर्स हैं 1318 रुपए पे.
ठीक है.
अब मुझे एमजीएल में एक्चुअली जानना है लॉन्ग टर्म के लिए क्या रहेगा, सही रहेगा कि नहीं रहेगा.
ठीक है. और आपने जब ये खरीदा था तब क्या सोच के खरीदा था?
तब मैंने मतलब तो ब्रेकआउट पे था चार्ट पे.
अच्छा.
20 SMA के ऊपर गया था. तो
अच्छा, ठीक है. पर लॉन्ग टर्म मतलब आप 2 साल तक होल्ड करोगे एमजीएल को?
हाँ, 2 साल के लिए होल्ड कर लूँगा.
ठीक है अरविंद, मैं आपकी क्वेरी समझ गई. मैं ये समीर के साथ लूंगी क्योंकि बिकॉज ये आप लॉन्ग टर्म पर्सपेक्टिव से देख रहे हो. समीर, योर व्यू ऑन एमजीएल and if possibly you can answer Hindi.
Yeah, so I'm quite positive on MGL and I'm positive on the entire space. I'll tell you what, today the city gas distribution space is still in the very, very nascent stages. Bombay as a full city has still not recovered. There are so many houses for them to penetrate. We also know that CNG is obviously one of the focus areas for cars. They have better mileage, lower cost of running. So, the distribution of commercial CNG gas at the stations is also going to grow. Of course, over the period of time, they're talking of reducing and only having electric vehicles. But I think that's a long way away, and I don't think that's going to be feasible right at off the block. So I think the opportunity for MGL to grow within the city of Bombay is extremely good. And then they're going to be bidding for some other cities as well. So The growth is great. Valuations are inexpensive. They're trading, if I'm not mistaken, at about what 15 times trailing. And if we even factor in a 10 to 15% growth, relatively inexpensive. This is a business that is constantly spitting out cash. So I say stay invested for the next 2 years. I think you can make decent returns. We have a 1 year target price of 1700. And I think if somebody has a view of holding for 2 to 3 years, it could well cross the 2000 mark.
So hold is the view that Samir has on MGL. All right. The next question is from Aman and wants to know if he can make fresh entries into any of these defense counters. The counters that he's talked about is Garden Reach, Mazagon Dock, as well as Bharat Dynamics. And this is from a longer term perspective. Samir, would you go ahead and buy any of these right now?
Honestly, no. So, we've been saying for some time that, look, defense counters are great things because they have long-term projects, which means they have great visibility on revenue and profitability going forward. But when you're paying top dollar for all of them, you're paying well in ahead of 50 times earnings. It leaves a little bit of risk in the sense that what will be my returns at the end of 2 years? So right now, everything is hot because of the wars that are ongoing. But what happens if there is a period of peace in the world? Then suddenly these stocks will go out of fashion. These high valuation multiples will be difficult to justify and sustain. So for me, great companies, pricing is not right. If you get corrections of 20 plus, 25 plus % in any of these, you can look at it. If you want a slight defense angle with other businesses, Bharat Forge is one of the counters in the which is actually more into forging and autos and all of that, but they also have a defense angle to it. So that is relatively more attractively valued. And even if the defense doesn't go the same way, but at least we believe the autos part and the forging part will grow quite well. So Bharat Forge is the one pick we could probably say, but it's not a pure defense play.
So that's with regards to where these defense companies stand. In fact, there was a Bharat Forge note today. Not sure which brokerage was that, but I'll try to pull that out for you. It was UBS, in fact, if I'm not wrong on Bharat Forge. Yes, and they've given a target price of 1215 for that counter. But okay, moving on to the next caller. Pradeep is calling in from Bengaluru. Pradeep, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. See, I'm a long-term investor with a vision of, say, another 2 to 3 years.
Okay.
Now, I intended to buy either of the two, Chambal Fertilizers or BEML.
Okay.
Now, I wanted to know which would be a better bet for long-term of 2 years and at what levels.
Okay, just wanted to get a sense, Pradeep, both of these counters are completely different. One is in the fertilizer space, whereas the other is in EPC. Any particular reason as to why you've chosen the two of these?
No, because these two stocks are the ones which have been quite good in their individual categories.
Okay.
So that is why I wanted to go for any of them. So that's fine.
Okay, understood, Pradeep. I'll take this up with Samir quickly. Samir, your view, should you go ahead and buy Chambal Fertilizer right now or BEML?
So BEML, we do have coverage on. I find valuations rather expensive. I would wait for corrections to buy. Chambal, we don't have active coverage. But what I can tell you is that entire space, the fertilizer space, is something that is constantly going to see good growth. Government focus on the agricultural side, more demand and more understanding of what the right fertilizer. So stocks in the space are quite good. The UPL, PI Industries. Unfortunately, Chambal is not under coverage, so I don't want to comment on that. But I think that entire space is quite good. And I don't think valuations across the board, barring I think PI, I think UPL is also quite reasonably priced if you look at normalized earnings. So I think that space does warrant some investment. And our take is UPL is a buy, but Chambal I don't have coverage.
Okay, Jatin, your quick view on Chambal Fertilizers where charts are concerned?
It has witnessed a breakdown and I'm expecting a dip towards 500, which is the weekly lower Bollinger Band. So 4 to 5 week of consolidation and thereafter a fresh leg of down move is starting, which can take to the stock to 500. So as of now, avoid around 500. We will revisit the counter.
Okay, okay. So that's with regards to where Chambal Fertilizer stands. The next question is from Yashoda, who's writing in from Bengaluru. She's bought 20 shares of Trent at 5910 a piece and wants to know if she can buy more at the current levels. And will the stock be bullish in the coming days? Is her question. Jatin, I'll come to you on this one. From a shorter term perspective, let's say 3 months down the line, do you think Trent will see some kind of recovery when it comes to the counter?
Last week there was a pretty bullish candle on the weekly charts, and we believe that there could be some amount of consolidation and one more leg on the downside, which can take the stock down towards 5150, wherein the crucial Fibonacci support is placed. So I'm expecting a dip towards 5150, and thereafter I'm expecting the next leg of up move to begin. So as of now, don't invest more. If she is holding, then currently hold with a stop loss at 5150, and if she wants to add, then 5150 is a good level to enter.
Okay, so that's with regards to where Trent stands. Our next caller, Kiran, is calling in from Hyderabad. Kiran, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. I would like to invest rupees 4 lakhs today, for the short-term perspective. Can I invest in Mahindra and Mahindra at current levels or Adani Green? And one more counter is Mazgondoc, sir have answered. So L&T, in these three counters, if sir could select any two counters, what would it be?
Okay, Kiran, I got your question. Jatin, I'll go by these counters slowly. He's talking about M&M, Adani Green or L&T to make an investment, and he has a capital of almost 4 lakh rupees. So if you can take a look at the charts, because it's from a short-term perspective, and if not these, any counter that you are liking right now that he can make entry into, because 4 lakhs is a big amount, I suppose.
Yeah, definitely. And one thing I want to suggest is that wait for this dust to settle down, because this correction that we have seen from the levels of 25,600 odd levels is not showing signs of a recovery. So 25,200 on the Nifty was a crucial support, but as of now, it's not showing signs of any recovery. So if he wants to invest 4 lakh, then I would suggest him to invest in some of the pharma names or the FMCG pack, which where the money can move in during this volatile phase or the correction phase, because these are the sectors to hide as of now. So look for Sun Pharma within the pharma pack, and apart from that, Godrej Consumer from the FMCG pack is looking positive. The names that he suggested, that is L&T, Adani Green is an avoid. L&T he can consider to buy around 34.30, and the other stock M&M we are expecting some amount of correction from a short term perspective. So avoid Adani Green and M&M at this point of time. L&T can be looked at around 34.30 odd levels.
Okay, so that's the view with regards to where these counters are concerned. And standard disclaimer, Adani Green is also a part of the Adani group of companies, and so is NDTV Profit as well. All right, our next caller, Mithun, is calling in from Karnataka. Mithun, hi, a very good morning to you. I believe you have a question on Yes Bank.
Yes. Good morning. My name is Mithun. My question is, it's been since a long time I am holding S Bank. I invested in that time and making loss of around 4,000 plus. So still, is it a good to hold any corrections come back on the S Bank, or shall I sell it?
Okay, got your question, Mithun. I'll take this up with Samir quickly. Samir, your view on Yes Bank, should he continue to hold?
Yeah, so I would actually ask him to average, because getting to 40 is going to take a lot of time. Only if he gets his cost down a little bit, I think he can probably make some money over a period of time. Now the question again comes is, should Yes Bank be the top pick in the sector? No, it's not. We believe it's a good counter which has decent growth. But if you ask me, there are other banks which are growing at a faster clip, which are slightly smaller in size. So those might probably give you higher returns. We've always said that IDFC is one of our top picks in the space. It continues to remain. Federal Bank is something one can look at also. It's a very good counter. RBL Bank is doing extremely well of recent. Yes Bank is also something you can hold on to, but like I said, average it at this point so you can bring your cost down. And then when it rallies, eventually maybe in a 2-year period, you will get maybe 32, 33 rupees. You will have made some money on your investment.
Okay, so that's the view with regards to where Yes Bank stands. The next counter that we're talking about is Infibeam. Prakash from Chennai is holding a huge position in Infibeam, is what he's saying. He's not given us the quantity and price, but wants to know whether he can continue to stay invested in the counter for the next 3 odd years or not. Samir, I'll again come to you on this one. Infibeam, what's the view like?
Sorry, Mahima, no coverage on this one.
No worries. Jatin, your view on Infibeam, how are the charts faring from a longer term perspective?
I believe that this stock is in a downtrend, and there are no real signs of a trend reversal as of now. So if he is holding, then he can continue to hold with a stop loss placed at 15 rupees. If 15 is broken, then we can expect this stock to slip towards 12 odd rupees. So 15 is the level to keep in mind. Below 15, exit, and on the upside, there is a scope for the stock to rally towards 19 to 20 odd levels. So therein the resistance is placed. So these are the levels, 15 on the downside, and on the upside 19 to 19.5, 20. So these are the levels that which he can work with.
Okay, so that's with regards to where Infibeam Avenue stands. Next caller, Harish is calling in from Pune. Harish, hi, a very good morning to you. I believe you have a question on IRIDA.
Yes, a very good morning. My question is regarding IRIDA. I have around 175 shares at an average price of 230. But keeping its results yesterday, it's reported NPA and its exposure to Gensol fraud case.
Right.
So is it still stands to be a good bet for long term?
Okay, got your question, Harish. I'll take this up with Samir quickly. Samir, your view on IRIDA, considering what he said, NPA has spiked. What's your view? Should he continue to hold? The stock is down 5% as we speak.
So I've always been maintaining that IRIDA has been trading at extremely expensive valuations in that space. I understand that they are the pure renewable energy financiers. So it's, renewable energy is something that is going to be a focus and is going to have decent growth. But that doesn't mean other companies like banks and other NBFCs which cater to other spaces don't give loans or funding to renewable energy spaces. So I would say book your loss in this one. I still find valuations expensive. Go for a similar play, Power Finance or REC. They have a very strong, large book. You're getting them valuations, I think half or less than half at what you're getting IRIDA at. They too will grow, maybe not at the same pace of 25-30%, but at least 15 to 18%. Given the fact that the book is stable, they've had a lot of legacy to them, a lot of government projects which will not have NPAs. I think these are counters which will probably give you better returns than an IRIDA. But yeah, the whole world is chasing after IRIDA just because of the renewable focus that they have.
Okay, so prefers PFC and REC over IRIDA is what Samir is saying. All right, and we also spoke to the management of IRIDA. You can catch that conversation on YouTube, our YouTube channel. But with that, it's time to slip into a very short break. But we'll be right back answering all your queries on the other side. So do stay tuned.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that marks
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. Alright, on this side of the show, we are also joined by Rajesh Bhosle, who's an equity technical and derivative analyst at Angel One, joining us now. Welcome to the show, Rajesh. I'll take up the next query. Venkat Ramani is writing in from Bengaluru, and she wants to invest 2 lakhs in the hospital space from a longer term perspective. And she's asking whether she should go ahead and buy something like a Fortis or Max Health is her question. Samir, I'll come to you on this one. Which one would you prefer? And if none of these two, which one in the hospital space would you go ahead and buy?
So for me, I find most of the counters in the hospital space extremely expensive on valuation, right? It's difficult for me to say to buy either of these. Given the kind of expansion and growth that Apollo has, I think that would probably be the one counter that I would go in and make an investment in. Plus, you'll get the diversification. I mean, the disinvestment that they're doing, so you'll get the other part of the business as well. So Apollo would probably be the pick. Again, all of them extremely expensive, including an Apollo. But over a longer term, I think Apollo will probably be able to give a better return than the other two.
Okay, preferring Apollo over these two is the view that Samir has. All right, the next question is from, do we have the name of this person? Rajesh. Okay, Rajesh from Chennai is writing in and asking about Havells. His question is on Havells because he's bought 1,000 odd shares at 16.22 a piece. And this is in April that he's bought, and he wants to know the target for the next 3 odd months. So Rajesh, I'll come to you on this one. What's the view like when it comes to Havells, where charts are concerned?
So if you see the charts of Havells, last couple of months, the stock has done nothing. It has been trading in a range where 1500 has been acting as a resistance, and on the high side, 1550 is the resistance. So as of now, any stop loss for the stock for the short term would be 1500, as if 1500 is broken, then further downside can be expected. On the higher side, 1580 to 1590 is a key resistance which coincides with 200 DMA. Once that is taken out, then we can expect a broad-based buying towards 1750. So as of now, 1500 would be the level to watch out, and on the high side, 1580.
Okay, so that's with regards to where Havel stand. That next caller, Manav, is calling in from Gurugram. Manav, hi, a very good morning to you. How can we help you today?
Good morning, everyone. Good morning. Yeah, I have a National Aluminium Nalco. I have 50 odd shares at the average price of 185, which I accumulated like in the past 7 to 8 months. I feel very positive about this counter. I want an expert view. Like, I want to, can I add more at the current price?
Okay.
Because I am willing to hold it for like a good term, like 2 years, 3 years, maybe more than that. So I would like an, expert view on long term.
Okay. Got your question, Manav. I'll take this up with Samir. Samir, your view on Nalco?
So Manav, commodity plays you can definitely hold for long term. I'm not saying they're not great, but you got to remember these are cyclical in nature. This is not, they don't move continually up. Whenever prices of the aluminium will correct, or alumina rather, because they are more focused on alumina, that time you will see the stock price correcting. So valuations are very attractive. I think in the next 1 year, you will probably get a decent upside because our view is that aluminium prices will remain firm to move up. And given the expansion of the alumina and aluminium capacities, which will come in the next 1 year, you'll see a probably slight re-rating on the upside. So positive for 1 year, but I would always tell you follow the cycles of the aluminium space, because whenever the cycle starts turning negative, to hold on to it, you will probably see the price going down even below 100 rupees. So invest for right now, but take some money off the table maybe in a year and a half from today.
Okay, so that's with regards to where Nalco stands. The next question is on Ashok Leyland. Someone is asking this question and wants a 5-year perspective on this counter, and also says that there's a bonus issue on 16th of July. Samir, do you think staying invested in Ashok Leyland for the next 5 years makes sense?
Oh, absolutely. I think the entire commercial vehicle space, I think in India has the opportunity to grow. Ashok Leyland has obviously been doing a decent job of it as well. Of course, you also know that the buses, you're going to have the revamps happening through a switch, which is the electric buses, and that is going to need a huge amount of growth and penetration. And I think they will do well from that angle as well. So definitely stay invested. If you have a 5-year view, you will make good money.
Okay, so that's with regards to where Ashok Leyland stands, and continue to hold is the view that Samir has. All right. Our next caller, Subramaniam, is calling in from Bengaluru. Hi, a very good morning to you. How can we help you today?
Very good morning to all. I hold 1,000 shares of Equitas Small Finance Bank.
Okay.
Purchased at 61.20.
Okay.
I've been holding it for a couple of years. Want to know the long-term view on it. Is it good to hold, add more, or switch?
Okay.
Thank you.
Okay, got your question. I'll take this up with Samir again. Samir, your view on Equitas Small Finance Bank?
So I think he can continue to hold, but I'm hoping that this is not his only bank, because there are other banks in the space and which will probably outdo what Equitas does. So you can hold it. There's nothing wrong here. I think over a period of time, the counter will do well. But if you want to make an investment, you could probably make it in a slightly larger bank, a full-scale bank kind of business. If you want the larger size, Axis Bank also is looking attractive at this point of time compared to the other two on valuations. Of course, HDFC is my top pick as always. But again, it's run up a bit, so I would not recommend it right now. Axis is still got a little room for valuation re-rating, and it's also going to be growing. So that is one of the counters you could try do. And like we say, my top pick in the banking space is IDFC First Bank. So I would rather take that over an Equitas Small Finance. So hold on to what you have, but diversify a little bit into another bank.
Okay, so that's the view that Samir has on all banks per se. All right, Shankar is calling us from Kolkata. Shankar, hi, a very good morning to you. How can we help you today?
Good morning. I am having 200 shares of Borosil Renewables.
Okay.
Bought at 621 rupees. Actually, this is the first stock which I had bought since entering the stock market.
Okay.
But unfortunately, over the period of last 3 years, it has not been able to make any headway, and is not able to surpass my purchase price also.
Right.
So I would want to know a long-term view of this stock.
Okay, got your question, Shankar. Samir, Borosil Renewable is the counter is sitting on a loss of 11,000 rupees. I mean, he's been holding it for the past 3 years now. What should he do? Should he wait for some time to recover his losses, or should he sell at the moment?
So we don't have active coverage. I've studied the company. I can tell you a bit about them and everything, but I don't want to give a view on whether it should be bought or sold or anything because so the company is doing extremely well when it comes to the glass, the frames that they make for the renewable space, right? The problem they had in the recent past was that there were a lot of imports coming in, and that has started reducing. And that is because government has implemented certain import duties on these glass sheets that go onto these solar panels. So the opportunity is still quite large, and the growth can come through. But obviously, valuations are what I had seen when I had last seen it were quite expensive, and which is why we didn't take it further because we didn't see any opportunity there. I don't know how that has changed recently. I haven't tracked it in the last 6 odd months. But the big problem lies that for them is that they're not going to be able to grow at the pace that the trailing valuations were trading at. And the operating leverage is not that phenomenal or anything like that. But barring that, I mean, the call is yours. But I found valuations very, very expensive.
Finding valuations very expensive for Borosil Renewable is the view that Samir has. Your quick view, Rajesh, on the charts, Borosil Renewables, can he continue to hold it for the next, let's say, 6 odd months so that he can at least recover his losses?
So in the last 2 sessions, we have seen some positive momentum. In fact, today it is up 4% in this weak market. And for the week, it is up by 14%. So overall, short-term momentum is there. Possibly the stock can head towards the 600 levels. And once 600 is taken out, then there can be a strong move towards 680 to 700. So as of now, can hold. But somewhere around 600, he needs to recheck the charts.
Okay, so that's with regards to where charts are concerned for Borosil Renewables. Our next counter that we're talking about is Prestige. Ravichandran is asking this question. He's bought 60 odd shares at 1674 a piece and wants to know if he can continue to hold or sell. Rajesh, your view on the charts for Prestige Estates?
Technically, Prestige is looking very positive on the daily chart. A double bottom kind of formation is visible. So yes, can hold on to it. Stop loss would be 1600 where double top has formed. And on the high side, 1755 would be the first target. And beyond that, the stock can further move towards 1900.
Okay, so that's the view where Prestige Estate is concerned. The next question is from Venkatesh, who's writing in from Bengaluru. He's bought Inox Wind at 187 a piece and 740 is the quantity. Wants to know if he can hold or sell at the moment. Rajesh, quickly your view on the charts on this particular counter, Inox Wind.
So no major move in last couple of weeks. Overall, if we see somewhere around 168, 167, the stock has a support zone. And on the high side, it is struggling to cross 200 DMA around 180. So once 168 or 180 is crossed, then momentum can be seen. So as of now, 168 can be the stop loss. And once 180 is crossed, then we can expect some positive traction.
Okay, so that's with regards to where Inox Wind stands. Our next question is from Jeffrey. He's asking about Interglobe Aviation. He's bought at the levels of 5247 and also sold it at 5850. And again, it hit. So he's also bought it again at 5990, if I'm not wrong. No, he's sold at the 5850 levels and he's saying that it did hit the 5990 levels, but the stock is corrected a bit right now. So wants to know if you can make an entry at the current level or not. And if yes, what's the best buying zone? Rajesh, your view again with respect to where charts are concerned for Interglobe Aviation?
So yes, we have a positive view on Indigo Interglobe. Stock is continuously moving in a high top, high bottom structure. The best levels to buy would be somewhere around 5,700. Any dip in the past has been seen that it holds to 20-day moving average. So currently that average is placed somewhere around 5,700. So 57 would be the correct levels. And on the upside, we expect the stock to move towards 6,300, 6,400 in the near term.
Okay, so that's with regards to where Interglobe stands. Our next question is from Sairam. He's calling in from Andhra Pradesh. Sairam, hi, a very good morning to you. I believe you have a question on AFCONs.
Oh, yes.
Go ahead with your question. Hi, Sairam, can you hear me? Okay, I think we seem to have lost his audio, but okay, we do have his question. He's bought AFCONs Infra 1,000 odd shares at 450 a piece. Samir, I'll come to you on this one. Any view on the counter? Should he continue to hold? He's sitting on a loss of 30,000 odd rupees right now.
Yeah, I think he can continue to hold. The infrastructure space is something that is going to continue to get a lot of traction. AFCONs is a decent company with large order book, which will see execution over the next couple of years. We believe order inflow will also remain strong. It's part of the Shapoorji Balaji group. So eventually, yes, the group at its group level was having a bit of difficulty, but I think as that fades away, I think you will probably see a re-rating in this counter. Like I said, growth is quite good, so continue to hold on.
To hold on AFCONs Infra is the view that Samir has. All right, the next question is on KNR Construction. Avinav from Punjab is writing in. He wants a view on KNR Constructions because he's holding 500 odd shares bought at 222 a piece and wants to know from a 2 years perspective whether they can continue to hold or not. Samir, your view on this one?
Yeah, I think he can continue to hold. Again, like I said, similar business model, right? It's into the infra space. Infra is going to continue to get its own traction and growth. Order book is also decent. The stock has actually seen a decent correction over a period of time. You're getting it at a decent valuation. And I think one can continue to hold. And if he's bought it a little higher, you can probably add a little more also here. There's no harm in that.
Okay, so that's with regards to where KNR Construction stands. The next question is from Baburaj, who's writing in from Kerala. He's holding Tata Steel 525 shares bought at 127 a piece, sitting on profits of 17,000 odd rupees. Wants to know if you can hold or sell at the moment. Rajesh, your view on the charts?
So yes, we have a positive view on Tata Steel. Currently, there was a price pattern breakout and we expect the stock to head towards 175 to 180 levels. So yes, bias is positive on the downside. If we see somewhere around 153 to 150, there is a base formation. So 150 would be the stop loss and on the high side 175 to 180 would be the targets.
Okay, so that's the view with regards to where Tata Steel stands. The next caller, Suresh, is calling us from Hyderabad. Suresh, hi, a very good morning to you. How can we help you today?
A very good morning. I am holding G Entertainment, G Limited.
Okay.
700 shares at 145.
Right.
So I can hold it for 6 months.
Okay.
So what is the target? What can I expect in 6 months? And if I can add more, at what level I can add more?
Okay. Any particular reason as to why you bought Z? Did you see the charts or did you see the fundamentals of the company and bought Z?
Fundamentals and recently they have a big move and just before that promoters are accumulating accumulating some more shares.
Right.
And there are some other factors also there, right? So, and I'm seeing that most of the analysts are quite bullish on this one.
Okay.
So I'm not sure. That's the reason I bought it. But I'm ready to hold it for next 6 months to 9 months, and I can average it more.
Got
even if it comes to. I'm thinking that 130 is the best level to average it, but I'm not sure. Just I wanted to know.
Yeah, okay, got your question, Suresh. Samir, I'll take this up with you particularly because, we were talking about how promoters were looking to infuse 2,200 crores in the company. What's the view like? Should he continue to hold Z?
So first we'll answer the question. Yes, I think he can continue to hold Z. Why? Because I think the company has good growth opportunity going ahead. Now, I'm very happy in a way that the promoter was not allowed to put this money into the company because the company at the moment is already a cash-rich company. They don't need the additional capital. It would only hurt their return on capital employed and return on equity, which can, going forward then hurt the earning. If the promoter wants to increase his stake, nothing stops him from doing it in the open market, right? So please go ahead and do it in the open market. You will also help the stock price go up. So from that perspective, I believe earnings can grow, but one can hold on to the stock, because now if the promoter wants to increase his stake, the only way for him to do it is buying in the open market, and that by itself can run up the stock price.
Okay, so that's with regards to where Z Entertainment stands. Okay, the next question is from Kaushik, who's writing in from Kolkata. He's got 150 odd shares of Gravita India at 1853 a piece. We already took a short-term view on this one, but Samir, your view from a longer-term perspective, would you go ahead, would you like to hold, in fact, not go ahead and buy? What's the view like?
So, the question is whether to hold this or to hold something else, right? Look, this is a unique business where they're doing the recycling of a lot of the commodities. They're expanding. They've had decent return on equity. If you see, they're working well ahead of 23, 24%. The expansion, once it comes on, will obviously help to some extent on the operating leverage side as well, which will help the margins and the profitability go up. But the point is, you're paying absolute top dollar for it. Now, the question is, do you think that the premium valuations can sustain? So even when the growth comes in, do you think that the valuations can continue to remain at this higher level, or will they contract? Now, if they contract a bit from these points, that means my upside gets capped. So for me, I would not buy for sure. Question of whether to hold or not. I think if I have an opportunity in a counter which has better valuation, comfort, and growth on its side, I would rather take that. So unless you have something which that person feels is something better than Gravita, then only sell. But I find valuations expensive. I wouldn't be buying at this point for sure.
Okay, so that's with regards to where Gravita India stands. The next question is from Gerard, and I hope I'm pronouncing this name correctly, from Chennai. His query is on Oberoi Realty. He's bought 50 odd shares at 1880 a piece and wants to know if he can continue to hold or not. Rajesh, I'll come to you on this one. Oberoi Realty, what are the charts indicating?
So in the last couple of weeks, we have seen some price correction, and in the short term, yes, the stock can slip further, but somewhere around 1780 to 770, we see a strong support of key retracement levels. So as of now, can hold on to it. 1770 would be the stop loss, and on the high side, once stock resustains about 1860, the stock can further move towards the 2000 levels. So as of now, the short term momentum is negative, but we do expect some strong base around lower levels.
Okay, so that's with regards to where Oberoi Realty stands. The next question, in fact, the next caller, Ashok, is calling us from Hyderabad. Ashok, hi, a very good morning to you. How can we help you today?
Yeah, hi, very good morning.
Good morning.
I am holding Anup Engineering shares, 40 shares at 3,200. I bought it last quarter. Just before the result, I bought the shares, but after that result, it has been fallen down, and now I'm seeing some kind of recovery on that. So, is it the right time to average, or can I hold, or can you? What could be the targets for next 1 year?
Next 1 year. Okay. Got your question, Ashok. I'll take this up with Rajesh. Rajesh, from a 1 year perspective, what are the kind of targets that you're seeing on the charts for Anup Engineering?
Also, if he wants to average, then the stock is forming a double bottom structure somewhere around 2600. So if we see a base formation recently at 2700, so if there is any kind of dip, 2700 would be the buying levels, and on the high side, 3100 is the immediate resistance that we expect to retest. Once 3100 is crossed, then possibly 3350, 3400 can be expected. So overall bias is positive. Some kind of dip toward 2700 can be taken to re-enter or average the stock.
So that's with regards to where Anup Engineering stands. Let's also take a quick look at how the markets are doing right now. Let's pull up the Nifty 50 and see where it is trading at. There you go. It's further gone in the red, trading at almost at its day's low point, down 0.7% as we speak. We started at 0.5% negative, but it's now 0.7% negative. Let's also see the action in Nifty Bank. Ideally, yesterday was expiry, but yesterday we did not see that kind of moves on the counter. But today we are seeing Nifty Bank also down by about 0.5%. Let's try to pull up the overall sectoral heat map and see how sectors have changed, if at all. There's Nifty FMCG, of course, leading the pack. Pharma in the green, about 0.2%. Nifty IT still under pressure, down by about 1.8%. So that's with regards to where the markets go. But our next question is from Rubel Biswas, who's writing us from Silchar, Assam, and wants to know view on IRB Infra. He's sitting on a loss of 20% is what he's saying right now. He's not given us the quantity and number though. But Samir, IRB Infra, what's the view like?
Yeah, so, like I said, the infra space, the projects continue to keep coming through, and I'm sure IRB will also get its fair share. We believe that at the end of the day, the valuations are not that bad. One can probably hold on, and I think he can probably get a price of 60, 62 in the next maybe year and a half.
That's the view with regards to where IRB Infra stands. The next question is on Abot India. DJ Rao has bought this counter 10 to 15 days ago at an average price of 31,821 and wants to know if he can book profits right now or continue to hold. So he's sitting on profits. The stock is currently trading at 34,500 levels. So that's a significant amount of up move that the stock has seen. Rajesh, on the charts quickly, do you think there's further upside left in the counter? Should he continue to hold or book profits?
So yes, as you highlighted, there was a strong traction from the levels of 30,700 to 37,000, and then there is some consolidation happening. As of now, can hold on to it. 33,500 would be the stop loss, and on the high side, we expect the stock to retest 35,800. So as of now, hold 33,800 would be the.
Let's also cut across to Gautam Adani, chairman of Adani Group, who is speaking at the 5th annual conference of the Society for Minimally Invasive Spine Surgery. Listen in.
So thank you, Dr. Kulkarni. Distinguished doctors and my dear friends. It is an honor to stand before you addressing some of the finest medical minds in India. Let me begin by saluting you for the work you do. Your humanity is what restores your patient's dignity. It gives them the strength and the courage to stand tall again. To the world, you may be known as our spine doctors, but for your patients, you are something far greater. You represent hope. And speaking of hope, let me share something personal. One of my all-time favorite movie is Munna Bhai MBBS. Not just for the laughter, but for the message. Munna Bhai was not just healing people with a medicine. He was healing them with a humanity. It reminded us all that true healing goes far beyond surgery. Healing is hope. Healing is humanity. जैसा कि मुन्ना भाई ने कहा था कि जादू की झप्पी हो या सर्जरी का स्कैल्पेल, दोनों में एक ही बात होती है और वो है इंसानियत. My dear friends, when I was first invited to speak here, I hesitated. What could I, as a builder of enterprises, possibly offer to you, the healers of spines? But as I sat with that question, a deeper metaphor came to my mind. The spine you meant is the ultimate architecture needed for resilience of the human body. And just as you restore resilience to our bodies, leadership is about restoring resilience to the organization. So perhaps today, this shared metaphor will remind us that the spine is both a medical miracle and a corporate necessity for self-belief. It was with this same spine of self-belief that I made my first bold decision at the age of 16. I bought a second-class train ticket and left for Mumbai with no degree, no job, and no backup, except burning desire to define my own path. आखिर में किसी चीज को दिल से चाहो तो पूरी कायनात उसे तुमसे मिलाने की साजिश में लग जाती है. My dear friends, in Mumbai, I began learning to short and polish diamonds. Each stone I polished taught me patience, precision, and perseverance. My first deal with a Japanese buyer earned me rupees 10,000 in a commission. The money never mattered. The moment did. Because that was the moment when I realized that my beliefs would have to always outpace my doubts. And that is the truth about entrepreneurship. It never begins with a grand vision. It begins with a spark of conviction. It begins with the courage to act, even when the future is uncertain. And it begins with the willingness to dream alone and then walk alone before others join the path. क्योंकि सपने वो नहीं जो नींद में आते हैं, सपने वो है जो नींद उड़ा देते हैं. Just as I was settling down in Mumbai, I was called back to Ahmedabad to help my brother to run his PVC film factory. It was 1981 and I was just turned 19. Managing a factory at this young age taught me what no textbook could. It taught me the resilience needed to manage daily operational challenges. I got exposed to the complexities of managing people, especially factory workers. And I learned the challenges of the license Raj, where just a few companies controlled the landscape and did not want any change. Reflecting back, all of these experiences proved to be invaluable for me, as the most significant decade of India's transformations was just about to get started. And this in turn gave me the platform for transformations that was to reshape my thinking forever. मुन्ना भाई फिल्म की सबसे गहरी बातों में से एक ये थी कि बापू ने कहा था बदलाव लाना है तो सोच बदलनी होगी. In 1985, Shri Rajiv Gandhi, then the Prime Minister of our country, began liberalizing our economy by easing import licensing norms. This was a quite but significant reform. It was as if an economic pressure valve had opened up. We moved fast, becoming early importers of polymers and laying the foundations for our trading house. I was 23. Then came 1991 and India faced one of the darkest ever, with just 10 days of foreign exchange reserves left. Under the decisive leadership of the then Prime Minister, Shri P.V. Narasimha Rao, and Finance Minister Dr. Manmohan Singh, India launched a historic economic reset. 3 words define it: devaluations, deregulations, and globalizations. This marked the fall of many major established corporates who had the protection of license Raj. But for us, first generation entrepreneurs, it was the spark of reinventions we had been waiting for. We immediately established a global trading business, which in just 2 years went on to become India's largest trading house. This year was 1993, and I had already turned 31. Progress is never linear, and the biggest opportunity almost always emerged on the other side of the hurricanes. जहां सबने तूफान देखा, वहां कुछ ने अपनी नाव निकाली और समंदर पार कर लिया. Because in moments when others back off in fear, it is those with courage that step forward and build the bridge to the future. This belief in the future would become the operating DNA of the Adani Group. It was this spirit that carried us into 1995. Adani Exports, which you know as Adani Enterprise, went public. The listing came at an extraordinary 14 times premium. I was 33. On paper, it was a moment of a great validation. But within me, it also raised a deeper question. Was I trading value, or was I truly building it? I realized that if we were to shape the future, it was a time to make a bold decision. Trading commodities had given us a momentum, but it was time to build. The very infrastructures that carried those commodities, connected economies, and enabled nations to grow. From that moment on, I decided to build. I decided to chasing the tide and instead become the coastline that shaped the tide. And I decided to stop reacting to change and instead become the foundation that shaped the change. And it all started in Mundra with the objective to build a salt export jetty along with a US partner. To make a long story short, the partner backed out and we were left to build the jetty by ourselves. Around this time, in 1995-96, Gujarat government pioneered a public-private partnership policy for port development, aiming to tap private sector capabilities. We dived right in. Keep in mind, we had never laid a brick before. Almost everyone called it madness. A port in a marshland to be built by a team with a no construction experience. The fact is, in October 1998, our Mundra port commenced operations with his first berth, thereby making India's first private port launch. Thereafter, a few years later, the SEZ policy was announced. Once again, we moved fast, while others saw a barren land. We saw 40,000 acres of possibility. My dear friends, Mundra is the manifestations of a belief made real. It is a reminder that vision dares, destiny bends. It is now India's largest multi-cargo port, the world's largest private single-site thermal power plant, India's first HVDC transmission line, India's largest integrated solar and wind manufacturing hub, and a cluster of vital industries that include petrochemicals, copper smelter, solar accessories, and much more yet to come. However, the real story of Mundra is not about what we built. It is more about what it built within us. It gave us the courage to look beyond limits. It gave us the belief that barren salt lands could be converted to a world-class infrastructures. And it gave us the convictions that if we could make it happen once, we could do it again, bigger, faster, and bolder. And what started in our Karma Bhumi has now become a pan-India network of dreams, powering our growth that has made us the world's second largest solar power company and building world largest single-site hybrid renewable park of a 30 gigawatt spanning over 500 square kilometers. India's largest integrated private airport operators with over 25% of India's passengers and 38% of our nation's air cargo. India's largest ports and logistics network, handling 30% of nation's seaborne cargo. Most highly integrated energy business, encompassing thermal and renewable generations, transmissions, distributions, LNG, LPG, CNG, PNG, battery storage, hydrogen trucks, EV charging stations, pump hydro, and mining. India's second largest and most efficient cement manufacturer, as well as aerospace and defense, data centers, and real estate. My dear friends, one point I would urge you to keep in mind is that our investments are manifestations of our belief in the future of India, in our energy grids, in our logistics arteries, in our industrial backbone. And it is with these convictions that we are preparing for a capital expenditures investment of nearly 100 billion US dollar over the next 5 years. The scale and pace of this investment and its commitment is unprecedented in India's private sector history. As we do our part for strengthening the very spine of India's rise, a spine that must be unbreakable, a spine that must carry 1.4 billion dreams, a spine that tells the world that India's rise is inevitable. My dear friends, let me now shift gears and speak about the role entrepreneurs like us and potentially like you can play together. But first, allow me to share a deeply troubling statistics. I was shocked to learn that low back pain is now the leading cause of a disability in India, ahead of conditions like a diabetic and heart disease. India is facing a spinal epidemic, a silent crisis far more widespread than a global average is. Nearly 1 in 2 adult Indians experiences low back pain. This is not merely a health issue. It is a national crisis, measured not just in pain, but in lost productivity, mounting healthcare costs, and destroyed dreams. If we are to carry the full weight of our national ambitions, we must first heal the spine of our people. To me, this is not just a call for medical interventions. It is a call for entrepreneurial imaginations. And it must have active participations from your side. So today, I would urge you to consider that one of you build India's first AI-powered spinal diagnostic platform that detects degenerations long before disability. Another reimagines rural surgery, creating low-cost, high-impact mobile operating theaters that bring hope to the villages. The third pioneers, the Spinal Hospital of the Future, a global center for a robotic surgery, regenerative medicine, and a next-gen bio-integrated implants. As an entrepreneur, I can say that the possibilities are endless. But we must have the belief and the audacity to pioneer this change. That is why I urge you to see yourselves as more than just medical professionals. And in turn, here is my promise. The Adani Group stands ready to walk with you, and we have already embarked on our journey. 3 years ago, on my 60th birthday, my family pledged rupees 60,000 crores towards healthcare education and skill development. We did not enter healthcare because it lacked momentum. We entered because the momentum was not enough. The pace of change was out of step with the urgency of future demands. As the landscape unfolded, one truth stood out. Healthcare does not need incremental upgrades. It needs a system-wide redesign. Not an evolutions, but a revolutions rooted in intelligence as well as empathy. We saw the opportunity not to compete within the system, but to help reimagine it and build a systems that evolves with science, respond to shifting needs, and harness the full power of AI without losing sight of the human at the center. At the heart of our approach is a comprehensive, multidisciplinary model that breaks traditional silos. Today, clinical care, academic training, and research operate in parallel, but rarely in sync. We envision a system where they converge, each reinforcing the other, where adjacent sectors like technology, management, and service are not afterthoughts, but part of an integrated fabric delivering outcomes. Therefore, we are investing in modular, scalable infrastructures of the kind that can expand rapidly in the face of pandemics or emergencies. We are championing the creation of large, world-class healthcare institutes that bring together innovations, patient care, and applied learning under one roof. We also believe that academic training must evolve. So our focus is on fostering doctors who not only heal, but also lead with skills in robotics, AI, systems thinking, and healthcare management. Their educations must go beyond anatomy to include empathy, ethics, and enterprise. We also realize that we cannot speak of transformations without making stronger the spine of the systems that comes from our nursing and our paramedical forces. Hence, we are also investing in building top-tier training institutes and establishing rigorous protocols to ensure that quality becomes a habit, not an exception. Finally, we must reimagine how healthcare is financed by placing people and not paperwork at the center. Human-centric insurance products that support and empower families will be a cornerstone of the new healthcare architectures we'll do our best to build. We are here to build India's healthcare for tomorrow and a system that is integrated, intelligent, inclusive, and inspired. And we'll be delivering on this promise through the Adani Healthcare Temples that are 1,000-bed integrated campuses that we will initiate from Ahmedabad and Mumbai. These are designed to be world-class, affordable, AI-first healthcare ecosystem. And we are proud to have the Mayo Clinic guiding us on the design, implementations, and global standards in a medical infrastructure and research. And so, my dear friends, in closing, let me leave you with my final thoughts. If you dream of a medtech breakthrough, go for it. If you can imagine a spinal care revolutions, go for it.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded.
Hello and welcome to NDTV Profit. You're watching Earnings Edge, and my guest today is Kritik Kritivasan, who is the MD and CEO of TCS. Kritik, thank you very much for joining us.
Thank you.
On NDTV Profit.
Thank you. Hi.
Last couple of quarters, there's a huge turmoil which is happening within the sector, IT sector. And at the end of Q4, you said that you hope that by Q1, you get much more clarity on the entire geopolitical environment, how the sector is going to do. Do you have that clarity today?
I won't say that. See, if you remember, towards the first week of April when we met, I did tell you that there is a heightened amount of uncertainty, and that has continued throughout the quarter. And I think till all the trade discussions are concluded, that clarity will not emerge. In fact, the current uncertainty is primarily around trade discussions, and to some extent around the big beautiful bill. Like I think at least the bill has been passed, that has given some visibility on what is the impact on some of the sectors, particularly the healthcare. But the what happens to trade discussions, that will determine what happens in the consumer business and other sectors, and those are sectors that are more import dependent.
You know, there's a statement in your earnings today that you saw contraction of demand in Q1. And I want to just juxtapose that to what's happening in the US. You have labor market which is holding up. You have growth which is there in the US. Of course, there is no Fed rate cut coming in because of the uncertainty of tariff which is there. But you know, the market is holding up with respect to growth and earnings as well to some extent, and labor especially. And still you are saying that there is a demand contraction. So is it happening from US, or the demand contraction is happening in the rest of the world?
You see, like if you first look at the headline numbers, our US grew a little bit, like marginally on a Q-on-Q basis. We had a negative growth, so a small negative growth in UK and a bigger negative growth coming in Europe. And of course, everything is to some extent interrelated. Now, if you look at the demand contraction, okay, while there is a moderation almost in all sectors, there are some sectors, like particularly the consumer business, okay, which is more heavily impacted almost across the globe. But whereas banking, you see, banking is slight growth we witnessed in North America as well as in UK, but Europe we had a bigger degrowth. So some sectors are universally impacted. If you take manufacturing, auto is impacted, but industrial and aerospace we have done well. The tech sector we have done well, but telcos are not done well. So it varies, but it's very difficult to call out which sector is doing better. Like I said, there has been a moderation in demand across all sectors.
And how do you see the healthcare? Because you spoke about the big beautiful bill. How will it pan out for you?
Healthcare last quarter, the healthcare itself, essentially the payer segment, it had a small degrowth. The life sciences did better. Medtech did better, but pharma didn't do well. So that's broadly the commentary.
How do you see the pipeline? Because you did a total contract value of $9.4 billion in Q1, and it's coming on the back of around over $12 billion in Q4.
That's right.
I heard in your call that it's not fair to compare both the TCVs because both are different characters. But how do you look at the pipeline when you go into FY26?
Overall, the pipeline remains strong. Like while we did declare, still it's a very healthy and robust order book. We have been able to replenish and grow the order book even further. Like our order book stands at, pipeline is one of the highest in the recent quarters. And our qualified pipeline also is very good. When I say qualified, it's a late stage pipeline. That's also quite strong.
So when you say late stage means it's not part of $9.4 billion. It's something which will come in the next quarter.
Which has advanced quite well. See, like typically we characterize pipeline in multiple stages. Some of them are very early discussions. Some of them are late stage discussion which can conclude, which has a higher probability of concluding in our favor.
And you see a good, healthy pipeline that will get concluded in the next quarter, by the next quarter?
We are looking at a good pipeline, so which means that we are looking at a healthy order book closure in next quarter as well.
And which are the sectors it is coming from, just to get an idea of where the order and demand is coming in from?
That I would say is more well spread across both, in fact, both in terms of geography as well as sector. We are anticipating some good pipeline, that momentum definitely in banking. In fact, we are also seeing good pipeline in CMI, which has been dormant for some time. So it is quite well spread now.
How do you look at the year? Because you said that in Q4, on a quarter-to-quarter basis, your constant currency revenues fell by 3.3%, 0.5%.
Q1, you mean?
In volume.
In Q1.
In Q1. And that was primarily because 0.5% came from international.
Negative 0.5% came from it.
And 2.8% from the BSNL order.
That's right.
But you also said that in FY26, my international revenues will be growth will be more than what I have done in FY25.
Yes, it is true. See, we've been growing with albeit a small number in FY25. So that momentum continues. And we are confident, when I say confident, we are very hopeful of a even modest revenue in international revenue in the coming quarters, which would give us at least on international revenue year-on-year comparison basis, a better international revenue in 26 compared to 25.
You know, you had the BSNL order which tapered down in Q1. Now you have another BSNL order which may start in Q2 and maybe peaking towards the end of the financial year. There was an expectation that when the BSNL order tapers down, it will bring in or increase the margins for you. Did you miscalculate hiring in end of Q4, Q1 because of the demand situation?
I won't call it miscalculate. We hired in anticipation of higher demand in Q1. Since the demand did not materialize, we had a higher labor cost compared to the demand or revenue. But definitely it provides us the opportunity to tweak it in Q2, like how much we hire from the lateral market, because we have that capacity with us. We should be able to utilize that capacity for additional demand that might come in Q2.
Just to get a clarification, did you, it was primarily because of deferment of the orders, or is it because orders didn't come through at all?
It is more two things, like it's not nothing more, the impact is probably more on the work that we're already executing. Okay, the work that we're executing, some places the work was paused, there was a scope reduction. That caused and there were some places the orders which we were expecting got delayed. But I would say the bigger impact was where the ongoing work was paused or delayed, or some places the scope was reduced. So that caused the reduction, because that happened pretty swiftly, so that we are not able to anticipate how much of additional people need.
How sensitive is the client today with respect to spends? I think everything boils down to that.
They are sensitive because...
Is it at a peak now as compared to last 4 quarters?
I would say they are also trying to manage their budget on a quarterly basis. So when they realize that their quarterly numbers or targets are not being met, or they see future uncertainty, they would like to control their expenses now. So there's that amount of sensitivity and interest to act very fast.
And is that bringing in opportunity for you in terms of cost, rationalization, vendor consolidation?
It does bring in opportunity. That's the reason. Otherwise, if we had only negatives, we will have a much deeper problem. It does get offset by some positive new opportunities, but how much of these opportunities, how much is it able to offset the negatives is a question. Like if you are not able to fully offset, that's what happened this quarter. We had a marginal degrowth.
BFSI is one segment which has been mixed in some way, right, for you. It's seeing some bit of softness there in the US for you. I remember in the last 2 quarters we've been talking about how GCC is going to change or disrupt the model for IT companies. How is it looking for you?
See, GCC...
Have you changed the view on that? Is GCC having any impact at all?
It is having some impact. We find that some work that otherwise we could have probably diverted to us, it does go to GCC, not necessarily only in BFSI, in many sectors. Okay, but That is one portion of the, but as I said, the main reason still is a pause in demand or reduction in scope. That is the primary reason. But GCCs do have an impact. I am not saying GCCs don't have an impact.
How is AI also helping you in consolidating or vendor consolidation and orders? We've been hearing about the fact that AI is now inbuilt in almost all orders.
That's correct.
And you've been saying that if there is a way that you can provide, even if it is going to cannibalize your revenue, you will go ahead and do it. How is that helping you in expanding your base?
So it helps you in providing better cost optimal solution to our customers, and it gives them better outcome. And while there could be a overall revenue deflation, but it can help in market share gains, so that offsetting the whatever reduction you get in individual projects. So we do see that it will be over in the long term, it will improve the overall. I think it can even improve the margin, because we will be able to achieve better productivity in such programs.
And our
revenues as well.
And clients are telling you that, are they putting a percentage saying that this is the kind of percentage productivity gain I need as part of
depending on the, there are some
clients.
These
discussions which is
there are some clients that demand a minimum productivity improvement. There are some places where we go proactively and say, this is what, in fact, we have gone some places where we went proactively and offered some gains to them. Seeing what we are able to deliver, in fact, they consolidated a larger book of work with us, because they found what we were committing and what we are delivering was quite attractive.
I'm coming to an end of my interview, but I have a final question for you. Going into FY26, now that you have one quarter of revenue behind you, what do you see are the big headwinds for you, and what are the tailwinds for you?
See, the headwind is a continuing uncertainty. The uncertainty continues, that would be the headwind. Okay. The tailwind is everything else. One, our strong order book. The pent-up demand in technology, like many of the customers have not spent big time in over the period of time, be it in cloud, be it in AI, be it in modernization. And of course in cost optimization as well, where there are vendor consolidation opportunities. So once there is a better clarity, I think the tailwinds would outweigh the headwind.
And which means that you will be able to maintain the current level of margins going into...
That's our aspiration. Like we've been talking about a 26 to 28% margin as our aspiration band. We'll continue to drive towards.
Despite the fact that the wage hike for this year hasn't been announced yet, and you plan to hire some more.
As I said, no, that will always be our aspiration band. We will keep trying multiple levers to reach that band.
And attrition is not a worry for you?
See, it is like Milind mentioned in the other meeting, it is slightly above our comfort zone. So we have to increase our employee engagement to bring it within our comfort zone.
Kirti, it was a pleasure talking to you today. Thank you very much.
Always. Thank you. Always.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores.
Hello and welcome to Markets at 12. It's a packed day in terms of where the stock-specific action is covered. Just to talk to us about that, we'll talk about how the markets are doing currently. Now, in terms of where the benchmark indices are concerned, we are looking at cuts of over 0.7% in terms of where the Nifty 50 is concerned. So, there's some bit of pressure that we are looking at over here. In terms of the Nifty mid-cap 150 and 250 also, broader markets also mirroring the moves of that as of the benchmark indices what we are looking at. So there's some bit of pressure building into markets. Now we did see that the last 2-3 days of sessions were relatively lackluster. So over here the markets continue in their somber mood is what we are looking at. In terms of the point contribution table, HUL right at the top, and this is on the back of the management change that has taken place. While what is not doing so well is a TCS, and this is on the back of its first quarter results. Reliance Industry, HDFC Bank also leading to that pressure that we are looking at Nifty 50. But let's say the BSE 500 also, there's a lot of stock specific action also which is taking place. Glenmark Pharma, the big stock in focus, up over 12% in trade today. In fact, let's address that more in detail. Now, in a landmark deal for the Indian pharmaceutical sector, Glenmark's US-based subsidiary, Ichnos, has signed a licensing agreement with global biopharma giant AbbVie for its novel cancer drug. My colleague Varsha joins us with more details on this.
Yeah, thank you for that. So yes, as you rightly said, IGI, which is a wholly owned subsidiary of Glenmark Pharma, has signed a licensing agreement with AbbVie. Now the deal is for their investigational asset, that is ISB 2001, which treats a type of blood cancer. Now this drug, if I were to talk about a little bit about this drug, this is currently in phase 1 clinical development, and they also received FDA fast track designation in May 2025. They've showed strong phase 1 data though. 79 out of 100 patients showed a positive response, and for 30 out of 100 patients cancer completely disappeared. Talking on the financial terms and how this will benefit Glenmark as well, the upfront payment which IGI will receive is $700 million. They are also eligible for $1.2 billion in development, regulatory and commercial milestone payments, and the total potential value, if you see, is will go to $1.925 billion plus royalties. Now, if I were to talk about how this will benefit Glenmark, so this $700 million upfront payment provides immediate and substantial capital, and this revenue will more than cover the IGI's expenditure for the next 3 years, making IGI a self-sustaining company. And they're also, if the deal will with a major global biopharma like AbbVie validates Glenmark's 25 plus years of R&D investment. Onto the roadmap of IGI, so if post licensing deals, IGI is projected to be self-sustaining in the next 3 to 4 years. And also, if I were to talk about the vision for IGI, is the eventually IPO for in next 3 to 4 years. Let's see what brokerages are speaking about this deal. Nomura has maintained a neutral rating with target price of 1500. They say they view this as a largest Indian licensing deal exceeding expectation despite ISB 2001's early stage. HSB has also rated by hiked its target price to 2,275, calls it a transformative deal, and estimates a significant potential net present value of 320 per share. Lastly, Access Capital, they have also rated by target price hike to 2,300. They label the deal and ISB 2001 jackpot due to its sweeter than expected terms, and the unique mechanism of action. They're also projecting $4 billion USD cash flow potential, and they expect a substantial re-rating and raises consolidated EPS as well for Glenmark.
Well, certainly, Varsha, as you mentioned, it's a landmark deal that we're looking at, and it's reflecting in the performance as well. 13% of an up move that we are seeing for Glenmark Pharma. But let's also address Adani Green, which came up with its company's operational update. Varsha, talk to us about that as well.
Yes, so Adani Green Energy, if I were to talk about the operational update, that is Q1 FY26 is highlighting a very strong growth and operational performance. The operational capacity was up 45% year on year to 15.8 gigawatt. This is a huge jump now, and also the 15.8 gigawatt is a very significant amount of renewable energy that a company has. Their Q1 sale of energy, if you see, is up 42%, and with more operational capacity, they are naturally selling more electricity, and a 42% increase in energy sales, if you see, is a strong indicator. They have also operationalized 3,763 megawatt solar, 585 megawatt wind and 534 megawatt hybrid power plants in Q1. Their greenfield RE capacity of 1.6 gigawatt has been added in Q1 FY26, and their operational RE capacity now, if you see, stands at around 15.8 gigawatt, continuing to be the largest in India. And lastly, if you see, the unprecedented greenfield RE capacity addition was almost 4.9 gigawatt over the last 1 year, and they are consistently delivering generation which is significantly higher than the PPA commitment that the company has made.
Okay, thank you, Varsha, for bringing in all those key details. But let's talk about some other earnings which are in focus as well. I'll start off with something like a Tata Elxsi, which is not doing so well in trade today, and this is on the back of its first quarter results that we are looking at. A 3% of a downtick is what we are seeing now. The revenue saw about a 2% of a dip. Even the margins, they declined to 18.2% of a 193 basis points of a contraction that we are looking at. Media and communication revenue, if you are seeing in particular, has seen out 5% of a downtick, and the company on the positive expects steady improvement in the bottom line and the margins going forward. If you talk about the attrition rate, that stood at 15% as compared to 13.3%. So it's a spike up that we are looking in terms of the attrition as well. Now, management did note that this was a challenging quarter across all the key markets that we are looking at, but the company does expect to see that growth number coming back in the on the back of large deals expected to take place in the second quarter. Let's also talk about IREDA now. Now here the main focus has been on the NPA, which has seen a spike in this quarter. Gensol, this is on the back of the Gensol account, which has impacted the NPA that we are looking at. Even the provisioning impairment was up over 3 times that we are looking at. If you talk about the numbers, net interest income was up 36% at 691 crore, while net profit was down about 36%. We are looking at a 5% of a downtick in terms of where the stock performance of IREDA is concerned. And lastly, what is something in the positive, however, is Anand Rathi Wealth, and this is on the back of some strong growth numbers that we've seen this quarter. In fact, even the operating profit did aid to those numbers that we are looking at. Just walking quickly through those numbers, revenue stood at 274 crore. This is a growth of 23% that we are looking on a sequential basis. Even the AUM saw about a 27% of a growth, while if you are talking about the net profit, that saw about a 27% growth. So this is the overall picture that we are seeing in terms of where the earnings are concerned. Anand Rathi up over 5% in trade currently. But that's all that we had on this edition of Markets at 12, but do stay to NDTV Profit. Lots more lined up on the other side.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Dhatia. With me is Puneet Javeri, and we have Mahima, who's joining us to have a great chat with the management of Yatra shortly. But before that, let's quickly take a look at what markets are doing at this hour. It's an interesting day of trade because you're trading at the day's lowest level. So good amount of profit booking that's coming in terms of Nifty, Bank Nifty as well. If you pull up that one on the screens, 0.7% lower in terms of Nifty 50, Bank Nifty as well, seeing cuts of around 0.4%. We've hit a high of around 57,091 on Bank Nifty, and from there on, it's again cooled off. Let's look at the sectoral heat map and then a very quick look in terms of what's happening with the broader markets and individual stocks. FMCG continues to lead the gains with HUL contributing to it. Pharma, it's mainly a Glenmark, and seeing what's happened with the Glenmark, all your other pharma names which are innovating have followed suit. So it's MNC's healthcare which are doing the trick today. IT continues to trade under pressure, taking cues from what's happened with TCS in terms of numbers, and you have all your other IT majors which are, reacting to the same as well. Defense also continues to see profit booking. Auto, media, a few of the other sectors which are trading weak. Oil and gas, interesting, is seeing cuts of 1% in spite of crude, really hovering between that $65 to $67 per barrel kind of a range. So no major surprises on that front. It'll be interesting to see, Puneet, what the broader markets are doing, because last couple of trading sessions, you're seeing a lot of stock-specific action that's coming in. Nothing major happening in terms of individual, indices.
Well, definitely, and that's one of the key aspects as well, because we are very close to the long-term support of the Nifty of 25,000. While for the mid-cap 150 and the small-cap 250, that has been resilient, but continues to be a market where there's a lot of stocks are reacting on the basis of news flows as well as quarterly earnings that have started to come in. and also quarterly updates at the start of July. So we're seeing that trend right now on both mid cap 150 as well as the small cap 250. Let's quickly look at the BSE 500 as well before we move on to our corporate conversation of the day. The key aspect is Glenmark Pharma, one of the biggest BSE 500 gainers. We've been speaking about the transaction that it has entered with Abibi, and that's been one of the key aspects of a very strong up move, 13%. It was locked in upper circuit for most of the day, and that's largely because of the new regulations coming in for the upper circuit. Now that has finally hit that circuit. We've seen multiple buyers both on the selling side and the buying side, and now seeing it moving upwards. It's slightly down from the 15% levels, but still trading up in the green. The other one, something like a VST Industries is the other one. The Ramco Industries is the other one, which is doing very well. On the loser side, though, we are seeing some pressure on V-Mart. Amber Enterprises is on the downside after a good day yesterday in trade. It was on the basis of news flow of about 2,500 crores that the company is trading. But Mahima, set us up for the next conversation that we're having with the management of Yatra Online, and what's the key aspect about the company.
Right. So basically what's happening is that Oyo has entered into a partnership with Yatra, and basically this will strengthen their Oyo, Yatra Online's presence in Delhi, NCR, Mumbai as well as Bengaluru. They have planned over 500 odd hotels on that they've onboarded on Yatra's platform, and going forward what they're going to do is they're going to plan to add 1,000 more hotel bookings on Yatra's platform by September, and this will overall strengthen the inventory for Yatra as well, and especially in the emerging metros and tier 1 cities as well. So that's with regards to where the company update is concerned. But as Puneet mentioned, we're joined by Dhruv Shringi, who's the co-founder and CEO of Yatra Online, joining us now. Dhruv, hi, a very good morning to you. I'll come to you on the on the part that I believe that this particular partnership with Oyo will strengthen your overall presence in terms of onboarding hotels as well. But just want to get a sense, because Oyo is a budget-friendly hotel. So how much of a revenue impact will you see? And considering that this is going to scale to almost 1,000 hotels by September, overall, how much of a top-line impact plus a margin impact is something that you're looking at because of this partnership?
Sure. So firstly, good morning to, or rather good afternoon to you and your viewers. In terms of the partnership with Oyo has, over the course of the last 3 odd years, significantly changed the profile of properties that they are bringing on board. Now we are focused on, their more premium properties, their property chains like Collection, Hotel O. These are properties which are more focused on the mid-market and slightly up-market business travelers. Those are the properties that we are looking to bring on to our platform. And this is largely focused towards our business travel platform. We will have about 1,000, almost 1,100 properties of Oyo, which will come onto our platform by September. And if I just look at the overall landscape, in India today, there are approximately 200,000 branded hotel rooms available every day for sale. This will add almost to the tune of about 75,000 more to that category. So it meaningfully expands the branded portfolio of properties which will be available on the Yatra platform through this partnership. Okay. In terms of the margin impact, I think it's a bit early right now to talk about margin impacts of this, but we think from a product portfolio point of view, this does improve the product portfolio quite meaningfully.
Dhruv, good afternoon. This is Hiral on this side. So in terms of your shift, if you have to look at the business mix, the concentration is with regards to corporate and B2B. Taking that aspect into consideration, what's the outlook looking like in terms of contributions from here on, because this portfolio is getting strengthened?
So today, our mix is almost about 2/3 coming in from B2B. And our endeavor, the way we've been speaking to our investors as well, is that over the course of the next 3 years, we will get to a situation where almost 80% of our mix will come from B2B. So that push continues, and this will be a interesting contributor towards that acceleration.
Okay, Dhruv, also wanted to get a sense because 500 hotels, from what I understand, is already live. What is the kind of traction that you're seeing right now in terms of booking, considering the target segments that you have right now? And overall, currently, in your catalog, this is the newest edition. But over the past 1 year, you've also seen multiple editions that have happened. What is the kind of growth that you've seen in this entire hotel segment?
Sure. So the hotel segment overall is growing quite rapidly. I mean, for us, it's been growing almost 50+% year over year as a segment. So we see strong traction behind the hotel segment. This is largely driven by more and more corporates wanting to bring their hotel program, their employee hotel travel program, into a managed stay program. So that's what's driving the high traction for us. In terms of OYO itself, see, this is, while we are today making them live at a larger scale, there is dip test which has been done over the course of the last 6 months. We've run numerous experiments and pilots with them in different markets with certain set of customers, and we've seen that there is high degree of customer acceptance, and also the feedback coming in terms of the NPS score for this property. And the kind of properties we are now bringing live with OYO, the NPS score has also been quite positive. So it's been on the back of that pilot that's been running for the last few months that we've now expanded this to now open up almost 1,000+ properties by September.
So Dhruv, what does all of this take you to in terms of your revenue and profitability run rate? Because clearly in terms of top line, there has been a year where you've probably gone towards that 850 crore mark already. I think it was back then in 2019. You're inching towards that 800, but will this probably peg you to 1,000 crore number soon?
See, in terms of the guidance that we've given for the year, we've given a 20% guidance in terms of revenue less service cost, which is the gross margin, and 30% growth in terms of EBITDA. And we are confident of the guidance that we've given to the market.
Wondering any kind of impact because of the recent geopolitical developments, considering the Iran-Israel conflict, plus the entire Air India impact also. Are you seeing any dip in the air ticketing revenues, especially for Air India?
So I think there was definitely, a period of time where there was an impact. So in this quarter, we've had a conflict situation which played out first for about 10, 12 days. Then we've had the unfortunate incident with Air India, plus there's been the backdrop of the Iran and Israel conflict. So there are numerous things which have been going on. They have impacted some aspects of the demand, but thankfully, what we've seen is that the business travel demand has come back quite strongly. The underlying economy in India still continues to do well. There are obviously segments which may not be performing as well, but in general, we are seeing a very positive outlook. And on the back of that positive outlook, business travel has rebounded quite quickly after these disruptions. In terms of Air India specifically, I think Air India is impacted to a certain extent on account of one, customer perception. And secondly, Air India themselves have taken out certain aircrafts out of circulation for incremental maintenance. So that's also affecting their numbers.
Dhruv, I just want to, circle back to that OYO point. Do you think that this partnership that you've entered into for these specific properties, is that exclusive? And second thing on that, you've guided for a customer acquisition cost anywhere between that 2.6 to 3% mark. Will that change because of this contract?
See, I don't see the customer acquisition cost changing, but what I would see is a gradual improvement in the overall margin.
Okay.
So the gross margin should improve. So ultimately, that should impact your operating profitability as well on account of the improvement in gross margins. It's maybe a bit too early today to quantify what that actual impact will be. And we'll keep everyone updated over the next 2-3 quarters.
Okay. And what about the exclusivity?
So this is, as of today, we are running this as one of the first partners to go live with OYO on this platform, but it's not really an exclusive contract.
All right. Thank you, Dhruv, so much for joining us on the show and sharing the views. So that's the management of Yatra talking to us about their partnership with OYO. To be noted, this is not going to be an exclusive partnership so far. And thank you, Mahima, as well for coming in with all the relevant questions. But moving on, IT as a space has been in focus today, and this is not only on the back of earnings, But with the kind of commentary that has come in from TCS, specifically with regards to what's happening with wage hikes, the way the attrition has been climbing, the way utilizations have been panning out, and I think no one better than Puneet to do this for us.
Well, definitely, and it has been a concern in terms of wage hikes, because it has been delayed by TCS. Now, in Q4, they did give an indication that it might be difficult for the company to do wage hikes in Q1, and that's largely played out. But we wanted to just take a perspective of what's happened with the other companies as well in this particular time frame. So the wage hikes for TCS is largely undecided of when it will happen, and this is big because the company has been one of the most consistent companies in terms of both wage hikes as well as promotions within the company. So while it is common for the industry to delay the wage hikes by a few months or quarters, for TCS, it was one of the key aspects. Now that has been delayed by this in this particular time frame, and they have mentioned that they will look at the demand scenario as well as the uncertainty because of tariffs that's caused this impact. And let's look at also Infosys as well, because that was the other one we've compared with the other IT players. They've delayed the wage hike for FY24 and they announced it in FY25 specifically. In wage hikes came after roughly about 15 months of stagnation as well. But let's take all these points forward with our guest as well and talk more about this. Mahante Sabarmad, who's the partner EIP India, as well as an independent expert who's joining in. Mahatesh, a very good afternoon to you and thanks so much for joining in. Essentially about this delay in wage hikes, we've not seen that from TCS as until now in this particular year, and that's based on what they've highlighted as demand scenario among other issues. How do you view the comments by the management essentially in terms of wage hikes which have been deferred? They've also done a headcount addition of 5,000 people in this particular time frame. So how do you view all these couple of aspects in terms of the wage hikes for its employees?
Okay, firstly, let's look at TCS's business itself, why they have been so, hung up about the employee costs. It's the first time that we are seeing after 5 years post-COVID that the year-on-year business has declined, year-on-year revenues have actually declined. Now, this is quite shocking when it comes to TCS. And the second aspect is in such a declining revenue phase, if you look at the employee costs as a percentage to the overall revenue, they have shot up quite a bit. In fact, TCS used to have this under control somewhere around that 54-55% of revenues as employee costs in the past. That has now surged to about 59.5%. In fact, last year, Q1, it was 59.45. This time around, it's barely 59.2% or thereabouts. So that tells you there is a 3 percentage points kind of cost increase, partly due to the business itself declining or growing very slow, and partly because the employee headcount base has sort of remained static or marginally growing.
Okay, so Mantesh, taking this aspect into consideration, how do you see it moving from here on for IT companies as a whole? Because we've spoken about TCS. If you talk about Infosys as well, they actually went ahead and delayed their wage hike for FY24. In fact, announced it only in Jan 2025. So there was a period of almost 15 months of stagnation coming in at Infosys as well. I think Wipro, the last wage hike came in the month of September, and this was ahead of its usual cycle. Tech Mahindra, again, Jan 2025 is when they announced with a delay of 18 months. And if you talk about HCL Tech as well, Q3 of each financial year is what they announced their wage hikes. But with the ones where there is a delay, where business is slowing down, where do you think this is headed? Because attrition levels are also on a high.
So firstly, from a company's perspective, employee cost is the biggest cost item for all these IT companies. We just heard from that the wage cost for a TCS is somewhere around that 59% mark. So this has been the common theme or thread across all these IT companies. The wage cost as a percentage of their revenues is gradually inching up and is becoming very uncomfortable for most of them. So there is some urgent measure that is required to be brought in, particularly related to wage hikes, promotions, or perhaps even headcounts. So that is what we are seeing. We are seeing most of these IT companies deferring wage hikes just to curtail the overall cost, employee costs to the revenue line item. Plus, there is not much in terms of meaningful leverage available through, let's say, productivity increases or through outsourcing and so on and so forth that's aiding any of these IT companies. So purely from a financial perspective, it is imperative that these companies choose to bring down the employee cost from a percentage perspective to the revenues, especially when the revenues are either declining or slowing down big time.
So Mantesh, my question over here is, what is the message that the companies are giving out? Because these are biggest names in terms of employers. Within that, if there is a concern from a demand perspective, you're talking about employee attrition, which is rising. There could be, supply side issues that could come in. Wage costs is a concern right now. And if all of this is not going to match, specifically with regards to the new employees that they will have to bench, how does this dynamic work? Because you've been tracking the space pretty closely since quite some time. Have you seen a scenario like this in the past? And if so, how has it been dealt with?
So firstly, to answer the last part of your question, have we seen such a scenario in the past? Probably not. It's been a phenomenon that is happening only in the past 3 odd years, maybe 4 years if you were to stretch it. Earlier, the employee cost used to remain under control because the revenues used to be rising. Take TCS, for example. The last time they did a double-digit year-on-year constant currency growth was in the year 2023, somewhere in Q1 2023 or thereabouts. So it's been it's been like 3 years. I'm talking of fiscal year FY23 Q1. So which means 3 years have not seen any meaningful growth from the likes of TCS in terms of the revenue growth. It's all single digit. So from what we can see ahead is that we will see the employee headcount actually remaining more or less static, because you have new age tools available to these IT companies. AI tools are available that can improve productivity per se for in a situation where you have low revenue growth. And you don't need to bring in wage hikes unless there is a linkage to the productivity, underlying productivity coming in. As it is, NASSCOM has forecast only a 1% growth in overall employee headcount for the entire IT industry. That's pathetically low. In fact, we should be seeing a trend where there could be a employee headcount degrowth happening in the IT sector. That's where the startup ecosystem should have to come up and absorb this excess that is happening. Today, we don't have a supply constraint per se from employees' perspective. They're fairly skilled. It's just that they probably aren't skilled relative to what the companies would want on a current basis. So therefore, there is a bit of training that is involved. But most of the employees will be trained in a manner of 6 months, in a matter of just 6 months. So I foresee that supply is not a constraint. Cost is becoming a worry. Rising costs can be curtailed only if your revenues outpace the employee growth. If that's not happening, you need to start retrenching.
That is an interesting point to make. Thank you, Mantesh, so much for joining us on the show, because the revenue growth versus the employee cost mismatch, that is or probably could be troublesome as well with regards to where IT companies as a whole go. And that's a trend we should be looking at pretty closely. In fact, we did speak to TCS MD and CEO who talked about the attrition being a worry and global headwinds. Let's quickly listen into what he had to say.
It is slightly above our comfort zone, so we have to increase our employee engagement to bring it within our comfort zone. Headwind is a continuing uncertainty. If the uncertainty continues, that would be the headwind. Okay. The tailwind is everything else. 1, our strong order book. The pent-up demand in technology, like many of the customers have not spent big time in over the period of time, be it in cloud, be it in AI, be it in modernization, and of course in cost optimization as well, where there are vendor consolidation opportunities. So once there is a better clarity, I think the tailwinds would outweigh the headwind.
So that's with regards to where TCS goes. But let's quickly pull up a Z Entertainment on the screens and see what that counter is doing in trade. The stock was seeing cuts of almost 4 to 5% right now as well. 2.5 to 3% lower. Now 40% of the shareholders have said no to the warrant issue in terms of the vote. And the promoter funding plan has been rejected by the Z investors. Z resolution has fallen short of majority. Let's get in Jinesh Joshi, research analyst at PL Capital, to tell us more. Jinesh, the entire saga with regards to Z Entertainment, what would this actually mean for the company according to you?
Fundamentally speaking, does this rejection have an impact on 1Q earnings? I think the answer is no. Even if you talk about FY26, does it have a fundamental impact on earnings? The answer is no. Definitely, the promoters thinking of raising skin in the game was basically seen as a positive step. But obviously, smart money was thinking otherwise, and this resolution has not gone through. But at least, as I mentioned, from a fundamental standpoint and from an earnings standpoint, in 1Q and FY26, there's no concern as such.
Hi, Jinesh. Agnidev here, joining in from NDTV Profit. Thanks for taking our questions. So I would like to take this a bit further. So I wanted to check, according to you as an analyst who's covering the stock, clearly you are very bullish on it with a 22% upside on your target price. But could a fundraise have changed things for Puneet Goenka in terms of a board seat? We know he was ousted in 2024, and we know that there's an effort from the promoters to get a board seat. So would a promoter fundraise where their share goes from 4% to over 18% have changed things with the way how they can push for a board seat?
Could have been. But if you look at the overall situation, Z already has about 2,400 crores of cash on the balance sheet. And if the promoter warrant conversion would have gone through, additional 2,200 crores would have come into the company, right? And out of that 2,200 crores, the plan was to invest about 1,000 crores into new businesses like user-generated content, live events, etc., and 700 crores into M&A. But I think the broad thinking with respect to the public institutions was that you already have about 2,400 crores of cash on the balance sheet. Why not deploy that first? And secondly, you also have the FCCB approval wherein you can draw about 2,000 crores. 200 crores has been drawn. Only one tranche has been drawn. So sufficient liquidity was there into the system, and maybe that is the reason why the rejection has come through. But yeah, definitely from 4%, if the warrant conversion would have happened and the stake would have gone to 18%, definitely the board dynamics would have changed.
So you're saying board dynamics could have changed if it had gone to from a 4 to an 18%. But the other point that you have raised, and again that was one of my questions, they have cash, the company has cash with them, they have an FCCB approval. Why then jump in with a promoter-led infusion when the timing in the market is not really favoring the promoters, where investor sentiment is not clearly in favor of the promoters? And they have given a breakdown of the funds, but they have said that the time it will be deployed in will be 24 months after they get the money, and there's no clear breakdown of which projects exactly, where exactly will the funds go. And I mean, is that not something or a point of concern according to you?
So I think, basically, if you look at the corrigendum which had come out after they came out with that notice with respect to EGM, the breakdown was definitely available. So for instance, as I mentioned, that 1,000 crores will go into new businesses like user-generated content, or for example, live events, animation, etc. And 700 crores for M&A. But as I mentioned, they had sufficient cash on the balance sheet, and maybe that was the reason why the existing shareholders, especially the public institutions, they were not too convinced about the preferential allotment thing, and maybe that is why the rejection has perhaps come through.
I would like to now ask you about the corrigendum that you have brought up. So earlier we were told that there would be two entities, one would be Altitis and one would be Sunbright, and they would put the money. But the corrigendum came in and suddenly changed things. They said that the Mauritius-based entity will be infusing 99.9% of the funds, and of the Mauritius-based entity, one of the beneficiaries was Puneet Goenka. So essentially the money is coming entirely from an entity which ultimately benefits Puneet Goenka. What was the need of a corrigendum where, we saw the breakdown? So Altitis is clearly sidelined. It's contributing 0.08% to the fundraise. So why do you need an entity based out of Mauritius to put in the money into this company where it ultimately benefits Puneet Goenka? And to build up on that, why should the money come from a Mauritius-based entity? Subhash Chandra has come out and said that the money is coming from overdue pays by state governments, which includes payments for infra projects. He said this in an interview to another TV channel. So why then route this money through a Mauritius entity and not through an Indian entity?
See, that's a difficult question to take, and see, honestly speaking, that could have been perhaps one of the reasons why the fund approval has not gone through. So I would not read too much into it, because what has happened at this point in time is that even if that approval has not gone through, your earnings impact, see, at the end of the day, what matters the most is, will this decision have any material earnings impact on the company at this point in time? And the answer to that is no. Obviously, they were trying to kind of shore up cash in the balance sheet, given the fact that you have two big names which have merged very recently, and you need cash pool, especially on the sports side. If not, say cricket, I mean, other regional sports was also one of the avenues which they were thinking. But given they are stuffed with liquidity, and the fact that the public institutions perhaps were not fully convinced, you saw this not going through.
My question is this good news or bad news that the capital infusion by promoter has been rejected? Does this actually probably now open up a room for an acquisition for a Z Entertainment?
See, I mean, this decision, effectively, we should also think from this perspective, that this decision is taken by the minority shareholders of Zeal themselves. This decision, for example, you don't have promoters going ahead and buying Margo and then the shareholders ranting about an unrelated investment being done. This is something that which you, as a shareholder of the company, have decided that maybe the vote of confidence at this point is not required. Whether that there are chances for buyout or something like that is something that is very difficult to preempt at this point in time. So I would not like to comment on that.
Short question again. So if the promoters have gone ahead and said that, a promoter fundraise has been denied by the shareholders, what then is the next step? How else can they raise money? And will you still be bullish on the stock, given the people are very worried about the governance and the promoter push?
Sure. So see, I mean, vote of confidence can also come in other form. For example, the 25% of the warrant conversion, which they were to kind of make it upfront payment into the company. They can also buy shares from public market, but that would mean that money will not come into the company, but that vote of confidence which they wanted to give to the street, it could come from that angle as well. And again, if I talk about, I know I'm speaking this for the third time, but ultimately what matters is how are earnings going to move. So for example, if you look at their FY26 guidance, they are guiding for an 18 to 20% EBITDA margin, about 8 to 10% ad revenue growth, a free cash to PAT conversion of about 1.2 times, a viewership share of about 17.5% in 26. So if I think if they are able to achieve these kind of numbers, for example, our FY26 EBITDA margin is about 18%, which implicitly assumes that the ZEEFA EBITDA loss, which was at about 510 crores in FY25, comes to about 210 crores, and you have the plain vanilla EBITDA margin of the linear TV business at about 23%. I think if the delivery comes at the end of the day, what matters is what kind of earnings delivery comes in 26.
So basically, Jinesh, what we are saying is the news does not really impact the earnings as of now, so nothing changes on that front, and your view remains the same with regards to Z Entertainment so far. Completely running out of time, but thank you so much for joining us on NDTV Profit. An interesting conversation, and thank you, Agni, for pitching in as well on this one. Let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back to Profit Buzzers right here on NDTV Profit. Let's now just quickly pull up Glenmark Pharma after the company announced a mega deal of $1.9 billion, and that was one of the key aspects. The stock was locked in upper circuit today. It's a licensing deal with AbbVie. Company chairman Glenn Saldana says that the IGI, which is a subsidiary of the company, will earn double-digit royalty on the back of this pact. Listen to what he had to say.
IGI is a 100% subsidiary of Glenmark, and I think with the upfront payment itself, IGI is well funded to continue research on the other products that they are currently developing. From a commercial standpoint, once this product commercializes, I mean, multiple myeloma today is a $30 billion market. It'll go up to becoming a $50 billion market, and I think with AbbVie's amazing capabilities in terms of commercialization, they could get a big chunk of the multiple myeloma market, and IGI in turn will receive double-digit royalties on their sales. So these are pretty large numbers when you look at it.
Absolutely a big deal in the making. In fact, apart from that, you have Mankind Pharma, which is in focus as well, and this is on the back of Jefferies, which has come out with a note on them. The stock has cooled off from the day's highest levels, but still trading in the positive. What they're saying is that the reboot is complete and it's poised for a recovery. From here on, the target is around 3,000 rupees. Let me get in Sneha Podar from Motilal Oswal and Akshay Bhagwat from JN Financial as well to talk to us about both these counters. Welcome to the show, Sneha and Akshay. Akshay, let me come to you first. A 13% up move already in terms of Glenmark. Are the charts showing further strength?
Good afternoon. Absolutely, it's a strong gap up, and as I believe that it was locked on upper circuit for a pretty long time, and circuits have just opened. So I think there is a lot of volatility. There is a lot of buying intent which is seen, but so it doesn't make sense to just jump the running train and buy it at the current market price. Those who are holding it, the levels on Glenmark show that 2100 can be a short-term support, and in the next round of upside, there is a good possibility the stock will try to make an upside possibly till 2450 on the short-term charts.
Sneha, between a Mankind and Glenmark, where would your bets be, taking into consideration the strong moves that you've already seen on a Glenmark, and you have a brokerage note which is absolutely positive with a target price of 3,000 on a Mankind?
Okay, a very good afternoon. So probably I would stick with Glenmark because this deal which they've procured is a very big one, and this will actually be a game changer for the company. So it will basically strengthen their overall IGI's R&D segment, and from there there's a huge potential in terms of revenue generation. The kind of the royalty that they'll be receiving in a tiered fashion. So obviously that will add a lot of value to the company. So roughly basis on the entire deal, what we believe is that 470 is a kind of per share value which is getting derived, and that will be added to the overall company, and it will help the company to overall strengthen their offerings. And what they've done is that in the developed market, the AppVi will be focusing, while Glenmark will be focusing on the developing markets. So this kind of strategy that they have reworked, they'll be able to capture a huge potential in the oncology space. And with that in mind, we believe that there's much more upside which can be seen from here.
Yeah, Akshay, a quick view on HUL as well. It's a surprise move that we've seen. The managing director Rohit Java has now stepped down. They've appointed Priya Nair as one of the new CEO and MD. How do you view this on the chart? Do you see some more leg up, because we saw that up move coming in from the last week as well on HUL? Anything on this aspect?
Yeah, absolutely. So if you look at the last few trading sessions, the FMCG names have been in the limelight, and HUL has taken the lead today, especially after we have seen a strong breakout on the charts. Now, 2400 was the breakout zone. The breakout comes with on the back of strong volumes, which is a very positive sign for the stock. So overall, if you were to look at the price targets, there is some bit of resistance at the levels of 2575. But the way the stock is shaping up, forming a very strong support base at 2300, with a holding of 2 to 3 months, you can easily see the stock revisiting levels of 2850 to 2900 again. So hold for targets of 2850, 2900 is the medium term trade on HUL.
Interesting. That's HUL. PC Jewelers is another one that is in focus as well, and that is because of the plan to raise 500 odd crores through a preferential allotment of shares and warrants. Mahima is yet again with us. Mahima, I mean, does this tell you that PC Jewelers is out of the woods and this is a completely new strategy and a new beginning again?
Well, we cannot say it is out of the woods, but yes, the company has gone out and said that they will become net debt free by FY26, and that is one of the reasons as to why they are raising funds, because FY25 ending, they were sitting on a cash flow of roughly only 64 odd crores. So they'll need money to pay off that debt. Just to give viewers a perspective, they've already reduced debt by more than 50% in FY24 to 25 itself, and further debt reduction of 7.5% has already taken place in Q1. And overall also, in terms of their business, it's been a turnaround, because Q1 updates also suggest that they've seen a growth of 80% in the revenues. But in terms of where the stock is going, the stock has seen significant amount of up move on the back of the news that it was supposed to go ahead and do fundraise, but now it's seeing some profit booking, because we've seen a significant amount of rally in the past few odd days for PC Jewellers.
Well, and also Mahima, just give us some perspective on DMart as well, because the results are expected today. It saved you the weekend, so by coming today.
usually DMart comes in on Saturday, right?
So, yeah,
so what are some of the key aspects that we should watch out for?
Yeah, so basically they've come out and said that revenue growth is going to be at that 16%. So we already know that. But in terms of EBITDA, as per what Bloomberg is suggesting, there might be a rise of around 11% there. Margins will take a slight dip from that 8.7 mark to around 8.2% mark. Profits, however, are expected to rise at 14%. So a double-digit growth there. But something to expect, sales growth overall slightly on a moderate note. Overall gross margin contraction on account of competition plus higher OPEX as well, because store additions is something that they're going big on. Slight rise in terms of revenue per square feet could be expected, considering the stores that they added in FY25 will mature, and competition intensity may put pressure overall on same store sales growth as well. Key things to watch out for, of course, commentary on competition from quick commerce, discounts being offered because of the competition coming in, and lastly store expansion and the kind of maturity when these stores that they've recently added will achieve, and that will continue to add to the overall sales per square feet growth.
Well, thanks so much for that, Mahima. But Sneha, let me come to you on DMart. Expectations are of a good growth, but competition is one of the key factors. How are you looking at this, and what are some of the key aspects you will be looking out for from the results? Sneha, I think Sneha, go ahead, Sneha.
Yeah. So DMart, we are really not very positive with regards to, because given the kind of heightened competition that we are witnessing, so somehow there will be a lot of volatility in the overall, the segment's performance. Though this quarter somehow the numbers are expected to be a little better given the kind of rollouts that they've done recently. But overall, if we talk about from the long-term view perspective, we are a little cautious, and we would wait and watch how the the quick commerce segment really evolves out, because DMart, though they have their online business, but somehow it is not at par with the some of the good names that are there in the quick commerce business. So either DMart has to ramp up on that front, or it would have to really expand into various other geographies, which they have started doing so. Like for example, they recently opened in MP, and they're planning to open in UP. So the plans are there. We'll have to really see how it plays out in the near future going ahead.
Right, so that's with regards to Avenue Supermarts. Let's quickly look at IRDA as well, what that counter is doing in trade. In fact, the management has come out and said that they will write back some of the provisions taken on Gensol. Let's quickly listen into that conversation.
As far as resolution of this is concerned, in Gensol, we are the first lender who approached to NCLT. We wanted the IRP and RP to be in place so that we can take stock of our assets. These assets are particularly the asset which need to have faster action, because vehicles. And if you see that typically the vehicle life, normal body life is 10 years and the battery life is 6 years in case of an e-car. And we have finance for 5 years. And some of our loans for 3 years have been repaid and some are 2 years repaid. On an average, 50% has been repaid. So balance period 2.5 years. Battery life is still on an average 3.5 years is there. If you take out this 6 months of delay slack period, and once the IRP takes over and RP takes over the control, and since the business model is having no problem in it, only promoter related issues, so we are confident things can be sorted out. What has been provision, we may not have to keep in our book in the time to come.
Okay. So
second, the other group is in pipeline for resolution that I cannot divulge now. and we are confident to sort out maybe within this year.
But within this year, you reckon it will get sorted out? Okay. Just one quick follow-up to that, sir. So, did I hear you say that 50% of this Gensol piece has been written off already, which means the other stays as of now? Hopefully, you recover and hopefully resolve this, but 50% has been written off, not the entire thing as yet, right?
First of all, right, that you said written off. It is not written off. It is only provisioning. And if you connect with written off, no, let me touch one point, which is very critical. Good that you have touched this word. In the history of IREDA, cumulative written off is only 135 crore. When we have financed 1.62 lakh crore in last 38 years. So that speaks that account can become NPA, but it is essentially doesn't turn into written off.
So there, IREDA talks to NDTV Profit on the back of the entire Gensol saga, and the provisioning that they've done is only 50%. Akshay, let me come to you. What are charts indicating? Because almost a 30% downtake in FY25. Are you seeing any buying interest that could emerge from here on, taking the correction into consideration?
The price chart for IREDA has been in a range, and this range is extended for, I think, over 4 long months. And really, the volumes are pretty dull in these 4 months. So it's a neutral setup if you are trading short to medium term. Clearly, the range which is evident is the resistance of 180, from where time and again you are seeing selling pressure, and supports near the levels of 155. So clearly, there is no trade setup, and the broader term charts are still weak, with the possibility that the lower end of the support might breach. So better to avoid if you have not invested in this, or in case you have a buy position, maintain strict stop losses below 150. That's the trade evident on IREDA.
Got that, Akshay. But let's also look at, quickly pull up Anand Rathi Wealth as well. And, the company did report its results yesterday. Stock reacting very positively as well, up almost 4.39%. The company's witnessed strong growth based on its inflows as well. And that's been one of the key positives as well about the results. Now, let's quickly look at some of the key highlights. The mutual fund distribution revenue was increased by 27% YOY to 113 crores. The net inflows has been the highest ever in a particular quarter, is up 14% as visible on your screen, with the monthly SIP inflow number has risen by 51% to come in at 75 crore. While the quantum is lower, it is one of the key aspects that the company and the management has also highlighted earlier on that they want to build on this as well. The share of equity, my mutual funds in its total AUM hence has risen to 54% because of that. And in this particular quarter, net profit is up almost 27%, revenue is up 23%. Sneha, on Anand Rathi, do you have any particular view on within the capital marketplace, but specifically, do you prefer something like an Anand Rathi based on the company's results?
See, the results has been really good for the company, and if you see, it's one of the few companies which has consistently, outperformed its guidance. So quarter after quarter, we have seen that the company has been actually outperforming it. We only have the concern with regards to valuation. Valuation seems to be a little stretched. Otherwise, we are expecting about 20% kind of growth over next 2 to 3 years. That it will continue to maintain this kind of growth trajectory. But since the company valuations, it's trading at about 41 times its FY27 EPS. So that seems to be a little stretched, and that makes us a little neutral on the overall company stance.
Valuations are seeming stretched, but 20% growth is what Sneha is looking at. That's interesting with the Anand Rathi. Moving on, let's quickly look at Enviro Infra. An interesting one. In fact, NDTV spoke to the management as well at around 9:40, and from there, if you see the kind of upside that the stock has seen, a clear NDTV profit impact, 11.5 to 12% up move, where they're giving a 2,500 crore order book guidance for this year. Let's quickly listen into what the management had to say.
The order book position as on 1st of April 2025 was around 1,200 crores. Within this first quarter or till now, we have bagged orders in the range of 900 crores. So this single order value is 400 crores. So it has given a lot of boost to the company visibility in future as well. this being the one of the largest projects right now in the company's order book, then we have entered into ZLD space. We have entered into reuse sector as well. So reuse with advanced treatment technologies in terms of ultrafiltration, RO, and then MVR for the treatment of the concentrated stream. So that says that this segment wherein we were not present at least till now, so that advanced treatment technologies in these terms, the company has entered into this as well. The order guidance for current financial year is 2,500 crore. 900 crore is already there, which we have won in the current financial year. Another 300 crore order book is expected in another 15 to 20 days time. So we are quite hopeful that the guidance of order book of around 2,500 crore additional in the current financial year that can be easily maintained.
Akshay, do the charts suggest some more positive momentum on something like an Enviro Infra? It's fundamentally done very well for its investors since its IPO price as well of about 140 per share. Is there any more legroom from here?
Yeah, absolutely. There is more to go from here. If you look at on the week-on-week performance, I think it's the third week that the stock is showing some very strong upside movement, and volumes too are supportive of this move. So yes, if you are a short-term trader, 290 might be the area where the stock might face some bit of resistance. But overall, the way the charts are setting up from a 3 to 5 month time horizon, there is a very good probability that the stock should aim for its swing or all-time high near the levels of 325 to 330.
So that's with regards to Enviro. Very quickly, in terms of volume buzzers, strong moves coming in terms of Kirloskar Oil Engines, Glenmark, we've already spoken about. Tata Elxsi after earning 7.5 times is the volume. Mankind Pharma and HUL, all of these very interesting volumes on these ones. Akshay, what would your top pick be out of these?
Well, out of all this, I think the pharma space is one space where I think there can be some momentum uptick considering the recent volatility, and Mankind Pharma is one of the names. There's a good strong support base which has been set up at the levels of 2300. Yes, we are trading at a resistance zone from where today we have corrected post testing the resistance of 2650, but from a positional outlook with 1 month plus in horizon of holding, I think this stock should eventually stage this breakout of 2650 and move for levels of 2900.
Sneha, very quickly, 30 seconds, your top pick in this market today, what would you recommend?
Okay, so we can look at Kirloskar Oil Engines. I mean, good numbers are expected from the company despite the high base of last year. Basically, a very strong performance is expected on the B2B front, and we expect the overall power gen segment performance to improve quarter after quarter. So this is one stock which can be kept on radar with a target price of 1150.
Neha as well as Akshay, thanks so much for joining in, giving us a whole host of views on a lot of stocks today. We'll look forward to our next conversation as well. Speaking at the 5th annual conference of the Society for Minimally Invasive Spine Surgery, Chairman Gautam Adani laid out a historic 100 billion capital commitment over 5 years. He said that the move symbolizes India's unbreakable backbone, one that carries 1.4 billion dreams. Listen to what he had to say.
We are preparing for a capital expenditures investment of nearly 100 billion US dollar over the next 5 years. The scale and pace of this investment and its commitment is unprecedented in India's private sector history. As we do our part for strengthening the very spine of India's rise, a spine that must be unbreakable, a spine that must carry 1.4 billion dreams, a spine that tells the world that India's rise is inevitable.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, it's not a good day for markets. The Nifty is down around 200 points. None of the sectoral indices are trading in green except for the Nifty FMCG and the Nifty Pharma Index.
Right, Samit. So, that we are seeing pressure building in the markets today. In fact, if you look at the benchmark indices, Nifty 50 down about 0.75% in trade today. Currently at the day's low point that we are seeing at the mark of 25,150. In fact, if you look at Nifty Bank, that is also facing some pressure in the trade. It's down about 0.4% as well. In fact, let's see the point contribution table to see which of are some of the stocks which are under pressure. So if you are looking at HDFC Bank, Reliance Industries, all of those heavyweights under pressure. Bharti Airtel also down on the back of brokerage which came out. TCS, another stock in focus, and this is on the back of its Q1 FY26 results. While certainly what is doing well is something like a Hindustan Unilever, and this is on the back of the management change, which did surprise the markets in a positive manner that we are looking at. Axis Bank and Eternal also in the positive that we are seeing. Now, this is in terms of the Nifty 50 stock action that we are looking at, but let's also take account of the sectoral heat map and see which are some of the sectors in focus. So if we are taking the sectoral chart in focus, we have all the sectors in red currently, leaving pharma and FMCG. Pharma up over 0.8% and FMCG also seeing an uptick of around 0.5%. But clearly IT not doing so well. TCS also under pressure because of the Q1 results that we are looking at, down about 2%. Auto media, again, we are looking at a downtick of 1.5 to 1.4% over here. Let's see the broader markets as well. If you are looking at the Nifty mid-cap 150 and small-cap 250s, somewhat mirroring the moves that we are looking at the benchmark indices. In fact, mid-cap 150 is also down about 0.8%, small-cap 250 at the day's low as well at seeing a downtick of 0.7%. Let's take account of BSE 500 to talk about some of the stocks which are in focus. So in BSE 500, if we are looking at the stocks, right at the top, we have Glenmark Pharma, VST Industries also up in trade, while Jindal, Amber Enterprises and Hitachi are seeing cuts of over 4 to 8%. So this is the overall picture that we are building in terms of where the benchmark and the broader market indices are concerned. But let's take account of Heramba Industries, and this is an interesting stock to watch out for. The company has been in focus recently on the back of its commercial plants which have started. Along with that, even the recent updates in terms of the agrochemical industry. But to talk to us more about that, we are joined in by R.K. Shetty, the Managing Director of Heramba Industries. Hello and welcome to the show, Mr. Shetty. My first question to you, you did specify that FY25 was supposed to be a transitional year for the business. Now, considering overall good monsoons, what is the expectations that we are seeing building in for the first quarter of this year and overall expectations that we can see for FY26?
Yeah, good afternoon, madam, and the viewers. Thank you for having me in your channel. Your question of quarter, of course, last year was a very bad year for us, and for the entire industry, it was not good. For us also, there was a lot of challenges since our two projects it was lined up and could not start. Only the last quarter we started one of our projects. We had initiated two new sites in Gujarat, one in Saika and one in Sarigam, in phased manner. And in the last quarter, we started our Sarigam first phase, and now it is both the sites, both the phase in phase Sarigam is started, and Saika, the new site of agrochemical herbicide segment, we initiated there, and there also the production has started. So the overall last year it was approximately around 1400 crore turnover we have made, and this first quarter was almost it was a jump of approximately 30-40% of jump in the last quarter to this quarter. So because last quarter was not good, but this quarter, since the new sites has come up, the jump was good, and this year looking it's extremely better compared to the last year.
Right, so as you're mentioning that the revenue has increased more than 30%, any color on the margin front also if you could share, because FY25 margins were very low, but you have guided for 12 to 14% margins for FY26. So is that something that is achievable, or you have already achieved in the first quarter and confident of achieving it for the next 9 months as well?
First quarter still we couldn't conclude it. but I am hopeful that it will be much better than the last year. The financials are yet to come. We are working on that. But compared to that, last year, since both the projects were lined up and all the expenses like your overhead and all, it was there, and that is why the margin was less. But this year, since the production has come up in both the sides, the overhead and other expenses will be average. It will be made averaged out, and the profit should be much better than last year.
Okay, so this is the profit picture that we are looking at for FY26. Also want to get a sense in terms of the exports. Now 28 to 30% is the mix that we've seen last year in terms of exports, and this is a reduction from the 35% in FY24. Just want to get your sense in terms of exports. What is the kind of number that you expect for FY26, and how are margins different in exports versus the domestic?
If you see our overall performance last year in terms of top line, it was in three segments. In B2B, then brand and exports, it was almost like 30% plus a small amount of public health we are into, around 50 crores of that. Overall, it is, we can say 35% of segment-wise our top line. So profit also, this year also we will be continuing that trend. And of course, the Indian market, the monsoon started very well in advance, as well as seems to be very good. So domestic market should be in both B2B and brand should be very good this year, to not only to Heramba, to the entire segment in the PS also.
Right, sir. So in FY25, high receivables and inventories were an issue for the company. So have inventories come down to normalized level, given the fact that there has been good pickup in demand, given the fact that there was normal monsoons, and have receivables also come down a bit?
Comparatively, it is much better than last year, because overall there was a lot of inventory last year to us as well as the industry. Since the season is good, the overall inventory will come down, and it is going to come to a normalization in the coming quarters.
And if any color on the pricing side also, if you could share, have pricing improved? Are you expecting more improvement going forward?
So last year there was a lot of stock lying, so there was a lot of pressure. This year slowly it has much better than last year. So it should be good.
Carry on, you're saying. Mr. Shetty, yeah, so I'll ask you about the production units as well. You know, you talked about Dicafil, which was your unit. What's the update that we are looking at, the new capacities which are on stream? If you can give us an update on that as well, the incremental revenues that you expect from there.
See, overall, it will be, in all, it will be around 25-27% of revenue growth. It will be maximum, mostly it will come from the new sites, and some growth in from our B2C segment. That since the monsoon is good, the B2C also should do well. And from the new sites, combined, it will be around 25 to 27% revenue growth this financial year.
Right,
it's a better margin than last year.
Right. Well, thank you, sir. Thank you for joining us and giving us more perspective and insight about your company. Moving on, Heavy Industry Ministry has allocated close to 1,345 crore to a scheme for producing rare earth magnets. In a press conference, H.D. Kumaraswamy, Heavy Industry Minister, and Kamran Rizvi, Secretary of Heavy Industry, said that the rare earth magnet scheme is under ministerial consultation and will soon be considered by the cabinet. Let's listen to what they had to say.
We already allocated 1,345 crores, I think. 1,345 crores. We are selecting 2 manufacturers. Yes.
So, a scheme has been circulated for 1,345 crore subsidy for manufacturers. It is under 345 crore. It is under inter-ministerial consultation.
Magnets manufacturers or element of processing companies?
We are interested only in magnets. Anybody who gives us magnets will get incentive.
All right, let's welcome in our guest for the show today, Vaibhav Vidwani, Fundamental Research Analyst at Bonanza Portfolio. Vaibhav, coming to you firstly on Herrenba Industries, have you looked at this counter? The stock has moved nearly 34-35% in the last 1 month. Is good monsoon the only reason? Anything that you have, any views that you have on the stock?
My view is that yes, they are doing expansion and their targets are better than industry. But if they even deliver better than expected results, then also their stock is trading at a very higher valuation of 600 above PE. So I will say it is not always important that if a business is good, we should buy. We should always also check that at which valuation that business is trading. So that's why I will say that stock is quite expensive at this point of time.
Okay, so expensive valuations is what we are seeing for Herrenba Industries. The stock can focus on that. But let's also talk about Ecos Mobility. And this is after the company has announced its guidance for revenue growth in FY26. Vansh joins us with more details on this.
Right, the stock is already up 74% in the past 2 months. So let me start off with the business. Now the company is in a quite interesting business segment. So they are in a CCR. They have two segments. One is CCR, that is the chauffeur-driven car rentals, where they provide professional drivers along with the rented cars. Second is the ETS segment, that is the employee transportation services, where they cater to corporates and provide transport requirements for the corporate customers with 24/7 operations. So if we look at the revenue mix, the top 4 cities account for majority for the company's revenue. In fact, Delhi, Gurgaon, Mumbai and Bengaluru account for more than 60% of the company's revenue in FY26. Also, if you look at the financials, the revenue is up 18% at 654 odd crores and net profit is down 4% at 60 odd crores. But when you look at the guidance, now the company has guided for a 15 to 18% revenue growth in FY26 with the margins expected to be around 13 to 15%. Company also expects a 15% growth in the client additions for YOY. Also, when we look at the capex figure, now the company is expecting a capex of 35 to 50 odd crores in FY26 and FY27. Now the capex will be utilized towards purchasing of a new fleet. That is, the company looks forward for purchasing 150 to 200 cars, and the remaining capex would be towards the tech platform enhancements. And also, it's a key thing to watch out for would be the Plutus Wealth Management holds 4.1% stake in the company as of March 2025. So this is what the overall picture is looking like for Ecos Mobility.
Okay, thank you for that, Vansh. So, Vaibhav, coming to you on this stock, what's your view on this?
So if we see, they have that stock is currently trading at a PE of 33, while industry PE is of only 16. And if we see previous year, they have delivered a revenue growth of 20%, and this year they are expecting marginal decline in their revenue growth. So that's why I still consider that stock is trading at an expensive valuation. So we should be a little cautious regarding this stock.
Well, another stock that remains in focus in trade today is Datamatics Global Services. It's up 9% in trade. What could be the reason behind this up move in the share prices? Let's get in Jasmeet with more details on what the company does and the way forward.
Well, right. Thank you for that. Yes, the stock is up 9% in trade today, while it's up 15% over a month. While if you look at the trading volume of the company stands at 19% today. Let's understand what does the company do very quickly and then break down the business step by step. Firstly, the company is in digital technology, which helps company to enhance the productivity by tech-based solutions. Company has 3 main segments. Firstly, it's data tech, then digital operations and digital experience. Now let's understand the operational update for the company. Company has over 300 clients and it's spread across the world with about 16.4% employee attrition for FY25. While if we look at the margin, the first segment, the digital technology, contributes roughly 3.6% of margin, while the size of the business is at 38% of overall revenue. On the other hand, digital operations contributes 15% of the margin, and the size of the business is 45.5%, and this is the biggest segment of the business where it gets revenue from. The smallest segment will be digital experience, which contributes roughly 14% of margin and accounts for 16% of the overall revenue. Quickly running you all to the financial updates of the company. As of FY25, the company's margins stand at 13%, while the revenue is up 11.2% from the last year, and it stands at 1700 odd crores. While with regards to net cash flow and current investments of the management as of March 25 stands at 400 odd crores. It'll be interesting to watch out how the company's coming quarter turns out, given the company's already performed well in trade today.
Well, yes, Vaibhav, any view on Datamatics Global?
First of all, yes, Datamatics is available at a very attractive valuation if we see at a PE of I will say 16, while at a PE of sorry 23. While if we see they have that ability to maintain their client base, and their BFSI sector is also performing good. So overall, we can expect good revenue growth in upcoming years, and they have that ability to protect their margins also. So my view is quite positive for this stock.
Positive stance is what we are seeing for Datamatics, but let's talk about something like an Enviro Infra. The stock is up over 12% in trade today. Now what's happening in this counter is its recent order win, because of which the stock is buzzing. The company received an order worth about 400 crore, and this is from Maharashtra Industrial Development Corp that we are looking at, and this pertains for Panchganga river pollution control measures. Now with this, the company is also foraying into the zero liquid discharge technology, and for this it has entered into a JV with Altero Pro for the execution period being 2 years for this. Now, in fact, if we look at the company's recent performance also, they've received another 306 crore of an order, and this was also the domestic market that we are seeing. The company is also marking its foray in the renewable sector, and this is with an acquisition of 69 megawatts of solar power projects that it had done this in this last 2-month period itself. If you take the order book into account of the company, that stands at 1,186 crore, which is about a 1.1 time of a book-to-bill ratio that we are looking at. Overall performance in the last 2-3 years, if we are looking at, has been on the stronger side. The company has clocked in a 35 to 40% of a revenue CAGR growth, and this is expected to continue forward as well. While core business margins are expected to be in the range of 22 to 24%. What would be interesting is the renewable side of the business, wherein the expectation of margin is 18 to 20%. How that transfers is something that we should be watching out for. FY26, the contribution would be relatively smaller, however. So this is the overall stance that we are seeing on Enviro Infra. But in fact, we also had the conversation with the management, and this was regarding the 2,500 crore of order book guidance that he had outlined. So do listen into what he had to say.
The order book position as on 1st of April 2025 was around 1,200 crores. Within this first quarter or till now, we have bagged orders in the range of 900 crores. So this single order value is 400 crores. So it has given a lot of boost to the company visibility in future as well. This being the one of the largest projects right now in the company's order book, then we have entered into ZLD space. We have entered into reuse sector as well. So reuse with advanced treatment technologies in terms of ultrafiltration, RO, and then MVR for the treatment of the concentrated stream. So that says that this segment wherein we were not present at least till now, so that advanced treatment technologies in these terms, the company has entered into this as well. The order guidance for current financial year is 2,500 crore. 900 crore is already there, which we have won in the current financial year. Another 300 crore order book is expected in another 15 to 20 days time. So we are quite hopeful that the guidance of order book of around 2,500 crore additional in the current financial year, that can be easily maintained.
So that was the management of Enviro Infra. But Vaibhav, coming to you on this counter, now while the order book pipeline continues to remain healthy, FY25 we did see issues relating to its working capital, and this was on account of delays in payments from the Jal Jeevan mission that we had seen. Want to understand your stance on this overall space, and if you have picks in the water infra companies.
So if we see this stock is trading at a means I will say appropriate valuation as compared to industry at a PE of 27, and they have a order pipeline of 5,000 CR, and their conversion rate is of near about 40 to 50%. So as per that, we can expect a higher order book than 2,500 CR as per management. So, and their revenue growth is also better than the industry, and their margins are quite robust. So, I will say this stock is quite good as compared to the industrial stocks.
Right, phase 3 is another stock that's up 5% today and over 13% in the last month. What could have led to this surge? What does the company do? Jasmith is joining with more details on the same.
All right, thank you for that. Yes, let's quickly understand what the company does and understand the breakdown of the business. Firstly, the company is into manufacturing and export of textile business. While they produce items like bath mats, ropes, blanket and curtains. While the company has in-house incubation where they produce yarn up to a complete product by their own manufacturing unit. Company majorly business lies in exports as most revenue comes from the US. US contributes roughly 70% of the overall revenue, while UK and Europe stands at 25% and rest 5% comes from the rest of the world. While in terms of operational highlights, company also has 8 factories across India, while the 95% of revenue comes from the export business. While in terms of financial performance, FY25 revenue is up by 22% and stands at 680 odd crores versus that of 564 crores in the previous year, and the margins are at 11.2%. While if you look at the FY26 outlook, where management is pretty positive, what they say is they estimate the revenue to grow by 20 to 25% in coming couple of years, while they also estimate the revenue for FY26 to exceed 855 crores, while the company expects to double its revenue under the next 4-year category, while they also expects the current revenue CAGR to exceed what they had in last 5 years for the coming 5 years. So it'll be interesting to watch out how the coming year pans out for the company, given the tariffs are still in discussion with tariff.
Vaibhav, any views on phase 3? If you look at the last 3 months chart, the stock has moved from 350 to 650. Any views here?
So if we see today, India have a tariff of 27%, while USA imposed a tariff of 35%. And for the textile products, while if we see India, that phase 3 have an exposure of near about 70% for their revenue in USA. So I say that they have that ability to deliver robust results in upcoming quarters because all international geographical factors are supporting the revenue growth of this company.
Yeah.
Okay, thank you, Weber, for joining and sharing that perspective. But that's all the time that we had on this edition of Profit Top Trades. But do stay tuned for India Market Close coming up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. Let's quickly look at where the Nifty is settling in at. We're very close to the day's low. Frankly, it's not looking like a very great day of trade. And largely the drag is IT. But let's quickly look at the Nifty, which is down roughly 200 points. Similar kind of number on the Bank Nifty, but relatively doing better. The Bank Nifty, just 1/3% lower. You have some banks lending support today, and that's helping the Bank Nifty. Let's look at the chart on the Nifty 50, the intraday, and it'll give us perspective because we've slipped very, very early on in trade and we've sustained at that level for quite a while now. So just off the day's lows, frankly, look at the day's low, 25,137, somewhere midway through the day. We're trading just about 25 points above that point. So that's how it's playing out where the Nifty is concerned. Now I want to quickly look at the heat map as well and get you perspective, because what it will show is some of the heavyweights, especially within the IT pack, packing a punch on the Nifty. 3% lower on TCS, HCL Tech also down nearly 2% or so, and you can see a couple of auto names as well, Hero, M&M, and we'll talk about that because a very interesting UBS note suggesting that maybe it's gonna become tough for some of the automakers and the run-up has been too sharp. So some of those names also languishing at the bottom of your screen. You look at Kotak standing out along with an HUL, which is 5% higher. Not sure the last time I saw that kind of a move intraday on an HUL, but we're certainly seeing it today. So we'll discuss that. But Kotak's doing well, so is Eternal, and maybe some part of Pharma, which is Sun and Cipla, seem to be doing okay in trade on an otherwise pretty tough day of trade. The breadth continues to remain weak from yesterday, so it's been a bit of a carry forward there. Let's look at sectors, and within sectors again, there'll be FMCG which will stand out, largely driven by the way in which you're seeing that move on HUL, frankly. Otherwise, Pharma doing well as well. We spoke about that. PSU banks have turned green. Healthcare in the green, no surprise there. Some of the defensives coming to the fore. But look at metals, 1/3% lower. The big pain sits in IT, 2% lower. Auto 1.5%. The India Defense Index also is down 1.5%. So that is where a bulk of the pain sits at. Otherwise, it's an okay market, but of course with a negative bias. Let's look at the breadth before I toss it to Neeraj for broader markets. The breadth, well, of course, it looks extremely weak, and that is also largely the texture of how broader markets are also looking. Neeraj.
Well, and you rightly pointed out that the market breadth has not looked very good today, so bear that in mind. But market breadth is one. I think the key takeaways from the market mood today are that one, that the index is of course seeing selling at the higher levels, but two, it's also that the global slowdown fears are likely weighing in on sentiment. Even if India were to outperform, I think the global slowdown will weigh in on the Indian growth as well. IT stocks, Harsh pointed out, it's the weak link down for the third day of trade. Usually we've seen IT play tic-tac-toe, up one day, down the next. This time around, that hasn't been the case. And pharma stocks are abuzz post the Glenmark deal. Yes, the index is up 1% relative to what's happening. That's a really good move. Now, on to specific pockets of strength and weakness. First, the stock of the day has to be Glenmark, up 14% and no surprises thereof. One would have thought that maybe it will just keep on moving higher. I think some bit of supply coming in at this 15%, 16% mark. People who were lucky and got in earlier are obviously getting out of the stock. So that is one. Post that, if you just look at the earnings impact being seen, so Ireda is down 5% post the earnings. Elecon Engineering, which numbers came out today, is down 4%, and I think we'll be talking to the management very shortly. On the other side, Anand Rathi on a weekday is up about 3%, guiding to about 25-27% growth for the quarter and for the year, guiding towards a similar growth for the year. Then weakness in trade seen in Z Entertainment because of the developments yesterday, and Metropolis, second day on a trot now, has corrected down about 3%. So that is also looking slightly wobbly. And then, of course, a clutch of other stocks, which we will talk about. But let's get in Ruchit Jain, Vice President, Equity Technical Research Wealth at Motilal Oswal Financial Services. Ruchit, great having you. Thanks for joining in. This is now turning out to be a week which is quite an opposite, Ruchit, of what the last week was, right? Wherein there was maybe some glimpses of strength last week. All glimpses of weakness this week. Are we near some supports, or do you reckon we are likely to head lower?
Yeah, very good afternoon, Neeraj. Very good afternoon, Harsh. Well, if we look at last 1 week, I think markets have seen signs of more of a consolidation within an uptrend. And the thing is that there has been some negative divergence along with the RSI in the price, where we have seen higher high formation on the indices such as Nifty as well as the small cap index, but the RSI has failed to lift up to the previous swing highs. So whenever such divergences form out, we generally see a corrective phase, which may be either a time-wise correction or a price-wise correction. Now, if you look at the short-term charts, then major support for the Nifty would come in around for 25,000 to 24,900, where the 40 days exponential moving average is placed. So it seems that we are going through some of a time-wise corrective phase where markets would continue to consolidate within a range. But since the broader trend continues to remain positive and we are not in the price-wise correction, so there will be selective pockets which would continue to show positive momentum. But on the index front, we are expecting some more consolidation to continue, maybe 25,000 to 24,900, where the 40-day exponential moving average and a rising trendline support is placed. That would be the zone where the market may try to form a short-term support base. So if any index-based buying has to be done on the index, then I believe we should see some more corrections towards 25,000, 24,900. The risk-reward ratio would become favorable then to take long positions over there.
In light of that, Ruchit, are you taking short trades on specific stocks this afternoon, or are they longs?
Not really, not on the short side really, because we are looking to play in that trend of the in the line of the broader trend itself. So selective buying opportunities are there. PFC is one stock where the technical sector is looking quite bullish. Now, this is one stock where if you compare this stock within the NBFC space in last 3 months, in the entire this rally from April to June, PFC, REC had not participated. But now, the stock has given a breakout from its consolidation post the positive news flows which we had seen. The volumes are also good. So I think there would be some catch-up move to the recent underperformance in this stock. Comparatively, if we see both PFC and REC, then strength is more than in Power Finance. And hence, we have recommended this to buy at current levels with a stop loss below 419, expecting an up move towards 460.
Wow, up move towards 460 in a matter of a couple of days. This one has really moved, Neeraj. Yesterday up 3% and today also holding strong on an otherwise weak day. Ruchit, what are your top picks within the banking space? You've given us one, which is an NBFC. Give us a couple of banks to look at. Something like a Kotak, extremely resilient today. Give us your perspective.
So Harsh, if we first see the Bank Nifty index, the kind of consolidation that we have seen in the Nifty, I think similar consolidation has been seen in the banking index as well. The index has not breached any of its important support, and no major support on the downside is there around 55,700 to 56,000 zone. So it remains a buy and dip market, where the dip towards the support should be bought into. Now, if I look at the stock specific performance within the banking, especially the heavyweights, then two stocks are standing out. One is Kotak Bank, which is clearly bucking the trend amongst the large cap names, and second is State Bank of India. Now, SBI already has, although this has not shown any positive move, but the stock has already went through a decent consolidation phase in last 4 to 5 months. So no trended up moves have been seen, but in this entire phase, we have not seen the stock breaking its important support too. So I think that price-wise correction has been done, the time-wise correction has been done. So I think in the near term, as we see, whenever we see the resumption of the up move in the banking space, we believe that SBI would be the next stock where we should see some leadership coming in again. So the consolidation has been done. So it's on the verge of a breakout above 820. So Kotak and SBI would be two stocks where, in case of any kind of up move in the bank nifty going ahead, we believe that the leadership and the outperformance would come from these names.
Okay, so the outperformance will come from a Kotak, from an SBI. But where the other pocket where the outperformance is coming from, at least today, let's pull up an Elecon Engineering. And a very good set of numbers. But, well, the stock which was up is now slipped 5% in trade. I'll just quickly read out the Q1 FY26 numbers for you. Revenue up 25%, EBITDA up 41%. Margins are up 300 bips to 26.56%, and profitability has surged. It's more than doubled. 175 crore is where the profits are at. The momentum is led by material handling equipment versus the gear division. Let me bring on board the management to speaking to us live. Mr. Kamlesh Shah, who's the Group CFO at Elecon Group, who's with us to give us that perspective. So talk to us about the quarter gone by. It's a very strong set of numbers. Give us perspective on those numbers and talk to us about sustainability for FY26 full year.
Thank you. Good afternoon.
Good afternoon.
So numbers are concerned, we are quite satisfied. I think it is coming up very better on quarter-on-quarter basis also. And we are quite confident about our annual target, what we are given. And we are just going to see a good traction, which is going to come up from the defense sector in the coming quarters. We see a good traction is there. Everything is getting lined up so far as the different organization is concerned, the different defense PSUs. That is coming up. These numbers, if we talk about, there is some exceptional income is there. One on account of an arbitral award, which is of 25 crore in the revenue and 10 crore in the interest side, which is the settlement of the claim with the customers, along with interest it is there. And second is on account of my one associate company, that is Emco Elecon India Limited, which is no more an associate company of Elecon Engineering Company Limited, effective from April 23rd, 2025 onwards. So there is an exceptional gain on account of nearly, which is all put together is coming to 150 crore net of tax, which is there, which is also an exceptional item which is disclosed, both in financial statement as well as by way of a note. So if we remove them, still we are in a better off in terms of the revenue growth as well as on account of the EBITDA growth also.
So why have you... Sorry, sir.
Yeah.
So why have you... Sorry, apologies. So let me ask you my question. So why have you guided, therefore, that your margins will fall for full year? You've guided for full year margins of 24%. What's happening? And give us perspective on the gear division. What's happening there? Because you're seeing some bit of margin contraction there as well.
Yeah. What we have said, we are not reducing our margin profile, which we have said 24, but this is a sustainable margin. Because margin profile generally changes on account of the change in the product mix also. So far as the gear is concerned, we see a good traction is going to come for. And the first quarter is always lower. In the history, if you see the history, first quarter is always lower. And which is catching up from Q2, Q3 onwards also. Last year also the same thing was there, when there was some challenge in the sense, general election in India, where the flow of the orders was lower. And where my sale of the standard product was higher and the engineering product was low. The same is the trend is there in this year also in the Q1, where my sales from the standard product is 43% and sales from the sales from the standard product is 57% and 43% from my engineer product, that is customized product, which will now change this product mix to quarter on quarter, and we will be at least going to achieve our margin profile margin, as well as the growth for that. And we are seeing the good open order book position for the quarter as of 30th June 2025. My open orders are 1,110 crore, which is up nearly 14% compared to the Q4 compared to 31st March 2025.
Mr. Shah, good afternoon, Neeraj here. Just trying to understand. So, does your EBITDA margin, which is at Q1 at 26.6%, as per your release and as per the comment of Prayasvin Patel, for the year, does it come off to maybe 24% or 24.5%? Or does it stay at 26.5%?
If you remove the exceptional, that is a one-off item, which I just said a while ago of arbitral. If I do, then adjusted EBITDA is coming to 22.6%.
Oh, okay. No, I was reading the comment from Prayasvin Patel, wherein he has mentioned in your release itself, right, that EBITDA margin is at 26.6%. So, which is why I was trying to understand.
It is 26.6%, but if I remove that one-off item, then it is coming to 22.6%, which is sustainable. And we say by the end of the year, it will be for 24%.
Okay, so you are saying that while in quarter 2, the adjusted actual EBITDA is 22.6%, for the year at large, you will probably clock in about 24%.
What happens, generally, Q1 is always lowest compared to the balance 3 quarters.
Right.
Then from Q2 onward, the sales pick up. That is the history of the organization.
Got it.
And the sector in which we are there also.
I hear you. Okay. The other question is about, one, the pace of execution that you will have and the pace of order inflow. So I understand you said that you will reach 2,650 crores of revenues in FY26, but your order book is at 1,100 crores, if I'm not wrong, at the end of June. How do you sense order inflow for the next 9 months? And do you expect your book-to-bill ratio to go up over the course of the next 9 months?
So what happens, my manufacturing cycle compared to the industry standard is drastically reduced. So which is, today I'm manufacturing my standard product within 1 month, considering some add-ons. If I consider standard itself, then I'm manufacturing within 15 days of. So, and if you say my order book position, which is there today, 1,110 crore, and if I say about the same for my gear division, which is 710 crore, these are, most of them are of engineer product only, where the manufacturing cycle is 3 to 4 months for us, whereas the normal cycle is 6 to 8 months. So those are the things, whatever the standard products are there, which I'm manufacturing the same month and delivering the same month.
Got it. So therefore, sorry, just one follow-up here. So therefore, what you're saying is that at any point of time, your order book number will not look very large because there are some 3-4 month or shorter cycle orders coming in. So they come in, you execute them, they help you in your revenue growth, but not in your order book.
And now what we have also said to the investors community and the other stakeholders also, because now the order book portion will not be so much relevance, because my accelerated manufacturing processes and my robust R&D and even my manufacturing facility with the fully automated and robotic machines, the things are now, and the way in which we are growing. So this is no more relevance. Yes, it will be relevance to some extent in the MHE division, that is material handling equipment division.
Consolidated. Okay. So sorry, I'm just asking one more question. I'm then sure Harsh has a couple of other questions. But therefore, my question, Mr. Shah, is that how does one, so the traditional way of analyzing what an infra company like yours might do or engineering yours might do would be the book-to-bill ratio or the current order book as it stands, extrapolate some of it, etc. How does one now figure out what will you do over the next 3 years? Do we ask you and therefore are in a position to say that what's the kind of CAGR growth that you will clock in, not just for FY26, but maybe for the next 2 or 3 years?
So far as my growth stories are concerned, it is very much intact. What we have placed our target by FY30, our revenue from India and revenue from the rest of the world will be 50-50. And further, considering the current momentum which is there in the global market, which is challenging, that is creating an opportunity for us. And we are going slowly and steadily to capture those opportunities, because we are not going in a greedy way, but we are capturing very strategically, because we have to position ourselves on a global map now. And all our mindsets are clearly on the global side. So the numbers which are there on a quarter-on-quarter basis will not be so much relevant to capture my growth momentum because it is a timing difference for us. Even the current quarter also, it is quite good, and I think it was much better than what we expected also. And the same momentum will continue going for both for the order intake. But order intake, will be measured in terms of the long term. That is the engineer product which is there. And if you see some of the things, if you compare my today's my order book position or order intake vis-a-vis conversion into revenue, which is there today and which was there I think a few years back, it was quite complete U-turn. It is there for us, honestly to speak about. The things are yes. If you talk about my employee cost, which is higher, yes, it is always the employee costs are always 12 divided by 3, whatever is coming to us. It is to be equally divided over the period of 12 months. So that will be there. But by the time I capture the, my growth momentum, that is getting, averaging out over there. Even today, my employee cost is quite low. If you compare about it, compared to the other peer companies, we are the lowest in the industry.
Okay. So, trying to understand therefore, so what's the aspiration like? What's the rate of growth that you're looking to clock? Just give us that perspective. Maybe not in the current year, but maybe over the next 2 to 3 years. What's the growth CAGR aspiration?
Compare us over the period of 3 years, my growth revenue would be 25% year-on-year growth will be there.
Wow.
The gear is already having that growth, but gear what happened when I'm doing the business with the OEM, we started now getting a momentum. Before the year, my OEM business, the number of OEM business was 11. Now it is increased to 18 as on today when I'm speaking in front of you. And that is getting a momentum for us. When I'm getting the OEM is giving the business to me in a staggered way. They don't offload all their requirements for the gear to me immediately. But I'm getting this moment very well.
So Mr. Shah, 25% CAGR fine, but you referred to something around a target of by 2030 of 50-50 between global and India. But I was looking for a number as well. So 2,227 crores as of March 2025. What's the number you reach by 2030?
By 2030, I will definitely more than 5,000 crore in terms of the revenue, which is there. Because I'm getting the momentum on the OEM business, which is coming up very well. Just current geopolitical scenarios, if I look into that, the order flow from that OEM is, not as per the pace which is there. But I think that will catch up anytime now.
So you're saying a large chunk of that will come from global, because if I'm just trying to zoom out, if 5,000 crore is your top line and currently you're at 27% mix, which is coming from global, which is just about 500 to 600 crore, a 2,000 crore contribution will come only from global. So you're predominantly focusing on global. In this environment, how are you doing that, sir? Give us that perspective.
Current environment itself is an opportunity. Okay. If I talk about the impact, when I was not quite confident to get even the 5 numbers in terms of the OEM business, in that year I captured 11 numbers, and that also from the reputed organization which are on the global maps. So things are going very steady for us, and we also are not greedy, because I don't go as a manufacturer from India, which is a low cost country because of the lower employee cost. I'm going with my my strength, which is of my technology which we are using. The other thing is my accelerated manufacturing cycle, as well as the widest range of gear application available, which only few will have that. And we are in the specialized kind of product which is there, where the competitive for us in India, if I talk about the engineer product, it is very few. I can count also. And generally, I'm a preferred supplier for the customers, particularly the OEMs over there. Nearly 70% plus customers are repeated customer for us. Though it is, I'm having the better pricing, because I'm giving the value additions to the customer, and my product reliability is quite in terms of the technology which we are offering to the customers.
Mr. Shah, sorry, I'm just coming in because I'm running out of time completely, but I'm curious about the numbers, right? I'm just going to probe you a little bit on that. At 2,200 crores in FY25, if you do 25% CAGR for the next 3 years, you touch 4,300 crores. Simple math. But you are telling me that if by FY28, if you hit 4,300 crores, and FY30, if you hit only 5,000 crores, then that's a very low back-ended growth.
So sometimes, we also have to be, conservative. And I always learned that conservative always plays a.
So are you being conservative when you're talking about 25%, or that is realistic and 5,000 is conservative?
No, 25% is quite realistic for me.
Okay,
And
but
that
5,000 is conservative.
Yeah, naturally, because 5,000 that clear visibility will not be there, and the outside world will be after me. So that will focus on the business. That is more important for me rather than talk on the numbers.
And sir, what is
I love that comment that the outside world will be after me if I give that 5,000 number. Sorry, Harsh, your question.
No, not at all. So sir, give us perspective with regard to what the filter is. Clearly, orders are coming in thick and fast. Is the filter therefore margins, and will you not, accept below a particular margin number? Is that what one should expect?
That is a very clear SOP for us. If you have seen that, what it is there in the MHE, because of change in the philosophy of my business, that always helps. Though the top number will be at least, lower, it appears to be compared to what the rest of the world is doing. But I'm ensuring that my whatever the margin I'm generating, that is immediately a cash in my bank account. That is very much important. And we always do the business because I know about my technology. I know about the product, reliability of my product. That is more important to get the business. And for that, I can ask the price from the customers, and customer is happily paying the same for me. Then why I should compromise? Why I should compare myself with a low cost product compared to what I'm giving the technology and value additions to the customer? That is important.
Okay, Mr. Shah, thank you so much for joining us. We'll let you go on that note. Very, very candid chat. So thank you for that, sir. It was a pleasure speaking. Okay.
Bye.
Okay. Bye, sir. So, Ruchit, still with us. Ruchit, do you have a view with regard to Elecon and what's happening on charts? It was sitting in the green till 1 p.m. and suddenly we've just seen the stock completely lose its ground.
We do see such reactions often on the day of the result. But what actually matters is what the follow-up move is after the results. And we can clearly see that post the numbers, the stock has seen a correction, that too with high volume. So I think there could be some further down move in the short term. That does not change the longer term trend, but in the near term at least we can see a dip towards 570, 580, where the 200-day moving average for the stock is placed.
Okay, so those are some levels to look out for. Ruchit, thank you so much for joining us, being very patient with us and answering all our questions as well. We'll let you go, but we'll also slip into a very short break. On the other side, we'll have Heard on the Street, so stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry.
Welcome back. Thanks for staying with us on India Market Close. That time on the show, we bring in Somit Sarkar, who joins us with all of the chatter he's been hearing from dealing rooms on our special segment, Heard on the Street. Somit, over to you.
And multiple stocks as usual, given the fact that it's also earnings season is starting. A lot of stock that is interesting in the market. Firstly, it's Religare. Now today is the company's board meet to consider fundraise. And the buzz on the street is the fact that there could be a preferential issue to the promoters. Burman family could put in close to 1,000 crore rupees is what the buzz on the street is. So it would be interesting to see what the outcome of the board meet comes in. Second on the list, second stock on the list is UPL. Now if you look at the chart of UPL, it was down at around 2.5% at one point of time. From there, we have seen a recovery. Dealers are indicating that there is institutional investor interest when it comes to UPL at lower levels. For Maruti Suzuki, the stock is down on the back of the big downgrade that had come in from UBS, where they downgraded the rating to neutral from a buy. But despite that, there are buy flows on DI desk when it comes to Maruti Suzuki. For BLS International, dealers are indicating that large HNIs have been accumulating this counter on expectation of some positive development that could come in going forward. For Infosys, largely all IT stocks are down in trade because of the weak numbers that TCS has posted, but Infosys specifically continues to see buying interest at lower levels. So that, and Infosys will be reporting its numbers next week, I believe. So it will be interesting to see how Infosys reacts in trade on Monday. For Wockhardt, there are buy flows on large HNI desk, and this is after specifically the Glenmark deal has happened. Now, if you remember, Wockhardt also has a novel asset in phase 3 trials and best-in-class trial data. So they are dealers expecting that similar announcement could come in for Wockhardt as well, and hence at one point of time the stock had hit an upper circuit of 5%.
Well, all very interesting, Somit. Wockhardt in particular, buzzing. It's up 3% in trade, and Pharma Index also doing decently well for itself, Neeraj. But the most interesting part of this is Infi, where if buy flows are being seen, and we have seen that there is just so much in terms of reaction that happens generally when IT stocks are coming out with their numbers. In
fact, for Tata Elxsi also, if you see, the stock opened, I guess 7.5%, 8% lower, but then we have seen a recovery.
So why, Samit, just probing this a bit more, are anybody telling you about why is it that the buying is happening? Is it in anticipation of TCS being an outlier and other companies not doing the same, or is it because people are saying that चलो 6 महीने में 20-22% गिर गया है और कितना गिरेगा?
Exactly, 6 महीने में 20-22% गिरा है, valuation सस्ता है, और मतलब in other sense they are also expecting Infi numbers to be a bit better than what TCS was. And for Tata Elxsi specifically, if you see, though the numbers were very bad, but they have hinted for some margin recovery and some deal wins for the second quarter. So that could be valid.
You know the other interesting thing, and I just want to pull up maybe even a LTTS, but a KPIT Tech for sure. I mean, though Tata Tech is now the more pure play ER&D, but Tata Elxsi you can loosely classify as an ER&D too, right? LTTS is in the green through the day. KPIT is trending and trading at the day's high.
And Tata Tech as well.
And Tata Tech as well. So therefore, it's not that the ER&D space is taking a leaf out of Tata Elxsi's numbers.
That's looking at the positive side, that there are some deal wins and margin recovery that they're expecting.
Maybe. Should be interesting. Okay.
In fact, Tata is down just 1.5% now.
Yeah.
It was down 8%.
Recovery.
Yeah.
What a recovery from the opening take. Okay. Somit, thanks for that. Thanks a lot for bringing us all that data. And by the way, if anybody is bearish on the markets currently, it's good to get a counter view, right? Always. Hear out this from JP Morgan's Rajiv Batra. He's bullish as a bullish voice can be. More so on domestic demand this year in this earnings season. Listen, and he also talks about his top Q1 sectoral bets.
Definitely, I'll go with the domestic demand because the environment is quite supportive for domestics to do well. Indicators are also showing in this direction versus the export-oriented indicator. So sectors like banks, consumer, auto, then healthcare, which is largely hospital, real estate, defense, and power. These are the spaces which are going to be chased for higher growth compared to your global export sector, where valuations are not that attractive enough and growth is also in a low single digit or a mid single digit kind of a levels.
Okay, so that's Rajiv Batra's take, of course. But let's talk a little bit about IREDA as well, because we spoke with Pradeep Kumar Das of IREDA earlier today about the whole Gensol fiasco. At least we'll call it that, at least on the numbers and the way the stock has reacted today and the impact on the provisioning. Listen in to what he had to say.
As far as resolution of this is concerned, in Gensol, we are the first lender who approached to NCLT. We wanted the IRP and RP to be in place so that we can take stock of our assets. These assets are particularly the asset which need to have faster action because vehicles. And if you see that typically the vehicle life, normal body life is 10 years and the battery life is 6 years in case of a e-car. And we have financed for 5 years. And some of our loans for 3 years have been repaid and some are 2 years repaid. On an average, 50% has been repaid. So balance period 2.5 years. Battery life is still some, on an average 3.5 years is there. If you take out this 6 months of delay, slack period, and once the IRP takes over and RP takes over the control, and since this business model is having no problem in it, only promoter related issues, so we are confident things can be sorted out. What has been provision, we may not have to keep in our book in the time to come.
Okay. So
second, the other group is in pipeline for resolution that I cannot divulge now, and we are confident to sort out maybe within this year.
But within this year, you reckon it will get sorted out? Okay. Okay. Just one quick follow-up to that, sir. So did I hear you say that 50% of this Gensol piece has been written off already, which means the other stays as of now? Hopefully you recover and hopefully resolve this, but 50% has been written off, not the entire thing as yet, right?
First of all, right, that you said written off. It is not written off. It is only provisioning. And if you connect with written off, no, let me touch one point, which is very critical. Good that you have touched this word. In the history of IREDA, cumulative written off is only 135 crore. When we have financed 1.62 lakh crore in last 38 years. So that speaks that account can become NPA, but it is essentially doesn't turn into written off.
Harsh, you track this very closely, right? Yeah. What did you make of his comments and the interview and the results as well? Because I remember day before yesterday, there was a call from us from a global brokerage sales note that it's looking attractive for the value that it's trading at.
Yeah, so it trades at 4. Let me take the valuation first. Let me tackle that. So the valuation is around 4.5 times book, trailing 12 months. Of course, not adding Q1 FY26. It has a profit run rate of around 2,000 crore, right? That was in FY25 Q4. They did a 500 crore PAT, but Q1 FY26 is done 250 crore. He said that around 350 crore has come from additional write-offs which have happened, which likely will not happen. He didn't say that in those many words, but my understanding of it is if he's saying it's a one-off, then hopefully it will be a one-off, and therefore they'll go back towards that 500 crore kind of PAT run rate, which means that they're trading at 4 times book 1 year forward, which is still decently expensive for a 27%. Yes, for a 27% kind of growth clip that it's clocking. Plus it's a PSU. Plus it has sectoral exposure. So I mean, it's just something that we want to flag off. That some of the other power financiers trade at 1.2, very similar kind of setup, but of course a 12% growth versus a 27%. Really, that's broadly the way to maybe look at this. So hopefully this gives you a perspective. But Kunal Shah joining us, Senior Technical and Derivative Analyst at Mirae Asset, Sher Khan. Kunal, what do you make of IREDA in terms of charts? Maybe you don't have as long or as, in terms of duration, the chart that you want. Give us perspective on whatever chart you have in terms of limited chart pattern. And the second piece, I'll also throw in PFC and REC and give us a comparable on between the three, what you like best.
I think firstly on IRDA, I think whatever bounces we have got in the stock on the technical charts that have been sold into, so the structure looks weak. The stock can again test the support zone on the downside, which is around the mark of 132, 133 on the lower end, which is the gap area as well for the stock. So I think overall the trend is weak. I think bounces should be an opportunity to exit the stock on the higher end. Coming to the other two, the REC and PFCs, I think both are looking very good on the technical chart perspective. They have been a big underperformer, and I think now the outperformance is likely to resume into the stock. So both are looking good to me. PFC is the first high conviction bet. Firstly, it has given us a breakout on the technical chart, and you can expect this momentum to continue towards 465, 470 on the higher end in the very short term basis. So PFC is a buy, and REC Limited again still showing some initial signs. Once it surpasses this hurdle of 405, 406 on the higher end, you can expect a swift momentum coming back towards the mark of 445, 450 on the higher end. So both the setups are looking good. PFC is looking much more stronger compared to REC at the current levels. REC above 405, 406 will witness a strong momentum buying.
Okay, but that's Kunal on the specific stocks we spoke about. Give us your view with regard to the index, the Nifty 50. What do you see that's translating at this point? We've seen a few days now, maybe 2 or 3, where we've seen the index close in the red and maybe just between maybe 0.5% or so, not more than that, but it's still in the red. Do you see weakness going forward? Do you see a bounce back maybe next week? How should one look at it?
I think definitely what we were looking at is that the index was consolidating at higher levels on the Nifty 25,600, 25,300 was the range where the consolidation was happening. Today we have broken it on the downside on the results of IT. So I think IT will be a dragger now. So whatever pullbacks you will be getting, you will see IT as an underperforming sector. So that is looking weak on the chart. Nifty has broken the 20 DMA, yes, in today's trading session. But whenever a 20 DMA is broken, follow-up is very important. If it doesn't come in, then we might go into sideways consolidation. So what I'm looking at a broader range for the Nifty indices is 25,000, 25,500. So this is a 500-point range in which I'm expecting Nifty to trade. Within this range, the buyers remain sell on rise on any bounce. What you get towards the 20 DMA, which is placed at 25,266, that would be an opportunity to look on the exit side, or again you can initiate fresh sell positions over there. You can expect Nifty to go toward 25,000, which is the psychological support, as well as the open interest data do indicate 25,000 put writer are active at the lower end. And if we are able to break that and sustain below it, the next level comes at 24,800, 700 zone on the downside. So this is a broad range which I'm looking out for Nifty. For Bank Nifty, again, Bank Nifty in today's trading session has managed to hold the 20 DMA. Which is placed at 56,600, 56,700 zone. And next week, banks are going to come out with results. And I think from there onward, Bank Nifty will take a directional move post that. So for Bank Nifty, again, the broader range for the Bank Nifty is 56,500 to 57,500 on the higher end. That's a broader range. And a breakout or breakdown on either side will have trending moves. So if Bank Nifty breaches 56,500 on the downside, expect further correction towards this gap area of 56,200, 56,000 on the downside. So overall, both the indices are looking on the weaker side. Nifty has already given us a breakdown. Bank Nifty is still left. So Bank Nifty still continues to be on the hold side. Bank Nifty once breaches 56,500, one can go aggressively on the short side for Bank Nifty as well.
What about your ideas? Kunal?
I think two stocks, one on the buy side and one on the sell side. First, I will discuss the sell side idea, and that is CG Power. Overall, just like Nifty, how the way it was consolidating and it has given us a breakdown on the downside. Similarly, the structure looks for CG Power consolidating since the last 1 month or so. And I think now we are seeing shorts getting built up into the stock and facing resistance at the 20 DMA. So CG Power is a sell for me. 667, 668 is where the stock is trading. Keep a stop loss of 680 and look for targets of 652, 640 on the downside. So that is one on the sell side. On the buy side, the counter which looks interesting over here is Swiggy. Swiggy, again, the technical chart looks good. We have already seen good buying from the lower levels on Swiggy, and now even in today's trading session when the markets are weak from the lower levels, we have seen good buying in Swiggy. So this could be a stock that could continue to go on the higher end. So that's a buy for me, keeping a stop loss of 375 and looking out for targets of 400 to 410 on the higher end.
Okay. Well, let's go on to the stock of the day, and that is undoubtedly Glenmark Pharma. And without much ado, let me get to Puneet to try and tell us what's the importance of this deal that Glenmark has struck. Puneet.
Well, thanks so much for that. So IGI, which is one of the wholly owned subsidiaries of Glenmark Pharmaceuticals, has now struck a deal with AbbVie, a global pharmaceutical discovery company, for licensing one of the key drug agreements. Now, let's look at a little bit more detail on that. The agreement for AbbVie is for a lead investigational drug of Glenmark, which is the ISB 2001 is what they call it. Now, this uses the proprietary platform of Glenmark's beat protein platform, and that's one of the key aspects of this particular transactions. Now, let's look at ISB 2001, what it actually is. It's a type of a drug that treats blood cancer called relapse multiple myeloma, and that's one of the key aspects of this particular transaction. It currently is in phase 1 of critical development, but it's received a FDA fast track designation approval in May of 2025, and that's when the seeds were sown of a particular transaction around this particular deal. 79 out of 100 patients showed a positive response, and also the 30 out of 100 of the patients were showed signs that of cancer completely disappearing as well. So that's the important aspect of ISB 2001. When you look at it in the financial terms, Glenmark subsidiary IGI will receive an upfront payment of $700 million, and that will be having an additional royalty as well, which will be in double digit, will be tied to this particular transaction. In all, a total potential value that can be created from this particular transaction is $1.92 billion for something like a Glenmark pharmaceutical, and hence we are seeing a strong reaction on the stock today. When you also look at how will this benefit Glenmark, of course the upfront payment helps a lot, but IGI's annual burn rate is roughly about $70 million. So this will help offset some of the losses. The upfront payment will help offset some of the key losses. They are also, as mentioned, eligible for getting the $1.2 billion payment in the development phase as well. So that could lead to more regulatory payments, and if anything is needed, this sum could help from that as well. What's the final roadmap for IGI now? Now, IGI's financial sustainability and future visions is of course secured because of this particular transaction. The post-licensing deal, IGI should sustain and become self-sustaining without any kind of losses in 3 to 4 years. That's the key roadmap for IGI. The licensing deal also will be more than cover IGI's expenses for the next 3 years. That's the key important aspect. In terms of analyst recommendation, there are 8 buy calls for Glenmark Pharmaceuticals, while 3 are hold. But this could see some kind of change in post the quarterly earnings, and some more commentary on this aspect. But definitely this deal a big positive for Glenmark as well as the shareholders. Okay, thank you for that, Puneet. 11% downside now emerging in a Glenmark after the move today. That is, of course, basis what average analysts on the street are penciling in terms of target price. Does that change materially? And could that be the next big trigger point? Is something we'll have to watch out for. Does that change maybe by next week? We'll wait and watch. But in fact, we also spoke to the chairman and managing director, Mr. Glenn Saldana, who said that IGI will earn double-digit royalty on the back of this pact. Listen in.
IGI is a 100% subsidiary of Glenmark, and I think with the upfront payment itself, IGI is well funded to continue research on the other products that they are currently developing. From a commercial standpoint, once this product commercializes, multiple myeloma today is a $30 billion market. It'll go up to becoming a $50 billion market. And I think with AbbVie's amazing capabilities in terms of commercialization, they could get a big chunk of the multiple myeloma market. And IGI in turn will receive double-digit royalties on their sales. So these are pretty large numbers when you look at it.
Okay, so that's of course with regard to Glenmark, but we'll quickly take Kunal Shah's view with regard to Glenmark. Also, Neeraj Diwan joining us, independent market expert at this hour on the fundamental side of things. Kunal, first to you on the technical charts. The chart just looks completely out of whack.
I think definitely the stock has gone through the roof. And probably if somebody is holding from the lower levels, continue to hold it with the trailing stop losses. Fresh entry is not advisable at the current levels. So the support for the stock on the downside on the weekly charts, what I can see is 1830, 1850 on the downside. So if you get any correction towards those mark, probably that would be a good entry to go on the long side. At the current level, the risk reward is not favorable for fresh longs.
Okay. Neeraj, do you have a view with regard to a Glenmark post the kind of rally that we've seen today, 15%?
Yeah, good afternoon. I feel definitely it's a big deal that they've struck, but then what boils down now is the royalty payments. What kind of sales will that drug have and what kind of royalty payments will come their way. So I think now after the run-up, maybe an upside from these levels should be limited. So I think one should see the inflow that is happening from the royalty payments and then take a call whether, what kind of upside we can get from these levels. So I think at these levels, it's more like a wait and watch. And one should not be chasing and getting into the stock. But the stock has seen a massive rally in the last couple of years. So I think at these levels, the stock should be fairly valued. But then it all depends on what kind of success the drug has and the sales that the drug has.
Okay, okay, if I were to request you for objective advice, Neeraj, at this point, post the 15% rally, looking expensive, would you sell at this point? If you're a holder, would you make a fresh entry at this point, given that there is plenty of potential here? Give us that perspective.
Yeah, if I'm a long-term investor and I've been invested into the stock for some time, I'll hold on to the stock. I'll not sell in today's rally because the potential is there. But then I will not advise anyone to enter new at this price. I think for them, some correction and some more information as for the sales of the drug is concerned and the royalty info that will happen going ahead, that is important to see what kind of upside you have from these levels. So for a new investor, I think we should not invest at these levels. If you're holding it, I think you should continue holding the stock and see the next couple of quarters and how it goes.
Neeraj, good afternoon. Were you constructive on Z? A lot of people were the argument being it is one of the cheapest media assets, promoter is putting in capital, etc. And that those moves have been dashed. What's the impact thereof on what is arguably not a very expensive stock?
It is not an expensive stock, at these prices, it makes sense for someone for long term to invest also into the stock. But then we've been disappointed by the stock time and again. Earlier also at 250, 260, it was a good exit that some of the investors took, post Sony, deal which didn't materialize. And then, nothing. Anything can starts happening, you have a setback. Now again, the setback is there. Promoter will not be able to put in money. That's what it looks like. So I think it's more, it's good value. It can be a good long-term investment, but then it has disappointed. For someone who doesn't have the patience to wait for 2-3 years, I should avoid this stock. But if someone has a long-term perspective, can still look into it.
By the way, we just pointed out that Religare, there was a fundraise meet today. The buzz on the street was a preferential issue to the Burman family of about 1,000 crores, and there's a sharp spike out there as a result of, I presume, that bit of coverage that we did, or maybe the announcement is out, or both maybe. That stock has really zoomed up in trade. Neeraj, I don't know if you've looked at Religare as a business in the recent past, but if indeed this turns out to be true, that the Burman family does some preferential infusion into Religare, is that a net positive?
It is a net positive. In fact, there was speculation whether it would be 400-500 crores or 1,000 crores, and the maximum estimates were 2,000 crores. So they will put in money. I think that today also, if the news is already out, that maybe be the trigger for the stock to run from 255 to 269 the last a couple of minutes or 10-15 minutes. So maybe the news is out, but I think the business is good and there's long-term potential. Burman are going to be serious if they're putting in 1,000 crores in the business now. So I think for a long-term investor, definitely it makes sense. There are a lot of businesses which are there and they can be some of the parts which will develop gradually for this company. So I think Depending on the news flow, there will be short-term movement in the stock, but over the long term, the stock is definitely positive.
Wow, 7.5%. That is some move with regard to a Religare. Yeah, so that's clearly an NDTV Profit impact. That is, of course, Somit breaking down the fact that Religare promoters might be infusing funds, and due to that, likely the stock is up 8% on the back of that. But, sticking with the NBFC pack, Neeraj, I didn't get to quiz you with regard to an IREDA. And we had the management earlier today. The numbers came out. Give us your perspective on some of these power financier names. There was a sales note, and Neeraj quoted that just a few days ago, which said that IREDA looks really good. The stock is down sharply from those highs of nearly 300 a share. How does it look to you at this point? And given the correction today, would it therefore warrant a look at least?
Yes, actually, I was waiting for these results to see what kind of impact the NPA will have.
Sure.
So I think that was a big number. So that I think is already now into the price. So people had been expecting a big NPA jump, which has happened this quarter. And as far as the loan growth is concerned, I think that is positive. So I think that should stay positive going ahead for the next couple of quarters, with IREDA or other power finance companies, with the steps RBI has taken, the liquidity push with interest rates coming down. So I think next 2-3 quarters can be good for power finance. So then even IREDA should do well as far as the loan growth is concerned. So what is already has been accounted for, the NPA is accounted for, but from these levels, I think there will be improvement going ahead. So that, keeping that improvement in mind, I think it makes sense for someone to look at IREDA also at this point of time.
Okay. Kunal, very quickly, any thoughts on either IREDA or the Religare?
So I think Religare has already seen a sharp run-up. So in the last 3 trading sessions, the move has been very sharp. Already the stock has surpassed the swing of 264, 265. So the structure is already bullish. Already if somebody is holding from lower levels, continue to hold. Fresh entry is not advisable at the current levels on Religare. The support for the stock is around the mark of 250 to 253. So if you get any dips towards that mark, that would be a good opportunity to go on the longs.
Okay. All right. What we'll do is we'll please stay with us, both of you. What we're going to do is we'll slip into a very short break. Leave you with an important word from Adani Group's chairman speaking at the 5th annual conference of the Society for Minimally Invasive Spine Surgery. Gautam Adani laid out a historic $100 billion capital commitment over 5 years. Listen to what he had to say.
We are preparing for a capital expenditures investment of nearly $100 billion over the next 5 years. The scale and pace of this investment and its commitment is unprecedented in India's private sector history. As we do our part for strengthening the very spine of India's rise, a spine that must be unbreakable, a spine that must carry 1.4 billion dreams, a spine that tells the world that India's rise is inevitable.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
Hello and welcome back. Thanks for staying with us. That time of the show, it's top of 3 in fact, where we're getting your market voice. Rajesh Kothari, founder and MD, Alf Accurate Advisors, joining us this afternoon. Welcome, Rajesh. I wanted to first off, Harsh here. Good chatting with you. Rajesh, I wanted to start off by understanding from you what your sense is where we are at the current juncture. There's plenty of there's plenty of uncertainty, if I can call it, in the global marketplace. Domestic too, we're not sure. Urban recovery, rural recovery, we're waiting for all of those factors to play out. How are you viewing markets, valuations, and where is it that you're finding favor in terms of sectors?
Well, good afternoon. First and foremost, very importantly, for the first time, the macro picture in India is probably one of the best picture what one could have seen in last 10 years. Let me explain what I mean by this. The inflation is cooling down significantly. The interest rates is cooling down significantly. For the first time, probably in last 10 years, we are seeing the coordinated action, and not just action, but the bold step. Look at RBI, the 100 bips rate cut. When last you heard about this? 100 bips rate cut at one go, which has never happened. In last 10 years, if you look at it, it has not happened. You look at the government, the capital expenditure by the central government and also CPSU, in the first 2 months itself, we have seen 30-40% increase across the various agencies. So there is a front loading of action by government. There is a front loading of action by RBI. And of course, on top of this, Finance Minister has given the tax gift for the middle class, which will also benefit economy from September, October quarter onwards. So in such a good macro environment where inflation and interest rate and the central agencies are working in terms of front loading the action, that makes macro environment really very good environment. Coming to the one of the most important thing what happened in last 12 months, the biggest villain for Indian equity market was the Nifty earnings growth. From 11-12%, it dropped to 4-5%. But as this action comes into place, and as you will see, typically it takes 2-3 quarters for economy to see the actual recovery on ground. I think from September quarters, you will see the growth in earnings. And therefore, for full year, Nifty earnings growth will bounce back from 4-5%, what we have seen in FY25, to about 11-12% in FY26. So macro environment positive, Nifty earnings growth is likely to revive. And last but not least, talking about valuations, while there is a lot of noise that Indian markets are expensive, but moment you look at on PEG basis, and any company, when it is a growth economy or growth company, one should not look at just absolute price to earning multiple. Look at the global market like US. If you look at the S&P 500, earnings growth is just 9%, but price to earning multiple is 22 times. So it's trading at roughly 2.3 PEG basis. Look at India. We are looking at 11% EPS growth and roughly 21.7 times price to earning multiple on FY26. That gives roughly about 2 times PEG. On 10 years basis, India PE is roughly 22 times. So we are fairly valued. We are not expensive, but we are not cheap either. But because of the fall in interest rates, the valuation looks reasonable. And moment you have a 12, 24, 36 months view for investment horizon, I think there is a very good decent upside because the micro is now going to improve from maybe second quarter or third quarter onwards. And you need to be always a little bit ahead of time when it comes to equity market because it is never a rear view mirror driving. So we are very bullish on the market. And I think there are enough opportunities to invest across the various sectors with a 3 to 5 years time horizon.
Good afternoon, Neeraj here. Now, where are the pockets where, and I know it will be a very bottom-up thing, but since you can't talk stocks, I presume, at least let's talk about the themes where you find the largest favor, your highest positioning, if you will.
Hi, Neeraj. So I think, there are opportunities across.
Exactly.
And I think what we do is that typically, Neeraj, is we break every sectors into various sub-segments. Let me explain what I mean by this. So, for example, capital goods, CapEx is a sector on which we are very bullish. We divide into 2 segments, old drivers and the new drivers. So we have a zero exposure to old drivers. What I mean by old drivers, like zero road, zero railways, zero EPC, zero construction, zero irrigation, and the sectors like that. Because growth is going to be only 2, 3, 4, 5% growth. But the new drivers like HVDC transmission technologies, like data centers, like automation, like robotics, like pumps, the nuclear power related pumps, and companies and segments like that, it will see 18 to 25% compounded growth for next 3, 4, 5 years. Similarly, when it comes to consumer as a segment, we have 2 segments. One is FMCG and second is discretionary. So we have a zero exposure to FMCG as I speak with you, at least from last 1 year or so. And our entire exposure is more towards discretionary segment. That can include building material, it includes apparel segment, it includes the retail and the segments like that. Similarly, in pharmaceuticals, there are multiple segments, but we have a zero exposure to companies which are linked to the US economy. So zero of such generics, but most of our portfolio companies are domestic pharma, they are CDMO, they are hospitals and segments like that. So spread across multiple segments, but within each sector, we decide which are the sectors which are going to see the green shoots, which are the sectors where we see the tailwind. Like EMS is one space on which we are very bullish. So we have very good exposure to EMS companies across the biggest company as well as the within mid and small cap space, various names within mid and small cap. So that's how the portfolio is constructed. Banking and finance, of course, is our large holding in our multi-cap AAA IOP. And here, again, we own multiple segments, but affordable housing is one segment which we believe will do higher growth compared to the normal banking segment. So we have a reasonably good exposure to affordable housing segment. And also we have a large corporate banks. So these are the 2 big pockets within banking and finance. So that's how the entire portfolio is constructed.
Point taken, Rajesh. Rajesh, unfortunately we are stretched for time today, but Neeraj, believe we should have a longer chat with Rajesh maybe sometime next week. And Rajesh, of course, you've got plenty of thoughts and we'd love to break that down in a better fashion. So we'll probably accommodate a larger chat next week. But thanks so much for coming in, giving us that broader perspective and we'll line this up for next week as well. But time for our bull versus bear, and Hindustan Unilever is the stock in focus. The stock is up nearly 5% in trade. The company has appointed its first female MD CEO. Mahima joins us, aptly so, to break this one down on a bull versus bear. Mahima.
Right. So, I start with the first point saying that what Harsh said. In fact, that's a positive point. HUL has appointed its first ever female MD and CEO, and this is because Priya Nair has had a significant role to play in HUL's journey in terms of growing its beauty, personal care as well as the home care business. And brokerages are also seeing this move as a positive one, because this will probably augur growth for the company going forward. But the other part is that Rohit Java has stepped down 3 years prior to his tenure end. In terms of the overall growth with respect to where HUL stands, there is a lot of things that will work in the favor of the company going forward in FY26. The management is also confident about demand reviving and growth coming back. There's 8th pay commission, tax slab benefits that are supporting the counter, but the 3-year compounded sales CAGR growth for HUL has been only 6%. So that is concerning, and we'll have to wait and watch out for as to how FY26 stands, although brokerages believe that the benefits of all of this will start coming in from second half of FY26. In terms of where management stands, they have said that they'll go ahead and prefer growth over margins. Overall, their margins will also come at the lower end of guidance, and plus last quarter, management also did cut down their guidance by a tad bit. Earlier, it was 23 to 24% in terms of EBITDA margins versus that of 22 to 23% now, and that too at the lower range of guided margin of around 22% is what the management has said. Now, brokerages like UBS believes that the risk reward is turning favorable for something like an HUL. The stock has been an underperformer in the past 5 years is the concern. In the past 5 years, it's only given 13% to its shareholders. So that's with regards to where the bull versus bear stands. But lastly, in terms of where the analyst recommendation stands, despite of everything, the subdued demand, company not doing very well, there's 28 buy calls, 12 hold calls and 4 sell calls right now for HUL, but the return potential is largely flat as per where what Bloomberg suggests. But today itself we're seeing moves of almost 5% for the counter. So that's with regards to where HUL stands, and of course both the bull versus bear case.
Thank you so much for that, Mahima. Mahima, you had something with regard to leadership as well when we spoke. So what's that take? Give us that take with regard to the leadership change itself in particular, because that's the reason for the move.
Right. So basically, when I was trying to research about how Priya Nair's stint has been with HUL, she's been with HUL since 1995, and she's gone across various segments in HUL, changed her roles and been in those leadership positions. And in her leadership, she's picked up quick commerce in terms of both beauty and personal care. Plus, Minimalist was bought in during her reign. So all of this combined together is going to, work in favor of the company. And hopefully, under her leadership, we'll see volume growth beyond that 2 to 4% mark, which it's seen in the past 2 odd years.
Okay, so that's the take coming in from an HUL. Thank you so much, Mahima, for that. Neeraj Diwan, how do you view Hindustan Unilever? Neeraj, in general also FMCG has done ever so well. So what's the take? HUL in specific and FMCG, how do you play it?
I think with the kind of inflation that we have, so the raw material prices are coming down, so that will augur well for FMCG and HUL also. I think next couple of quarters can be good for them, because even monsoons have been decent so far, and expectation of a good monsoon this year. So I think coupled with good monsoon and low inflation, I think will be good for FMCG. And lever, I think in this price also, because last couple of quarters are not so good for them. But this quarter, coming couple of quarters can be better. So keeping that in mind, I think there is still, even after the move that we've seen from 2250 to 2500, still I think there is upside potential of 500-600 rupees from these levels in the next 9 months to 1 year. So I think I am positive on FMCG and Hindustan Lever also.
Okay, so fundamentally Neeraj is positive. Technically, Kunal, is there a trade beyond this 25-20, 25-25 levels?
I think still more upside is left into the stock. The next level what I see on the upside is 2560, 2580 on the higher end. Probably from those levels, we might see some profit booking coming in. Overall, the stock has changed its trend, so it turns into a buy stock after a good underperformance what the stock had in the recent times. And now the support for the stock on the downside is placed at 2400.
Okay, and FMCG per se, well, some of the others too have had some decent moves post some of the announcements that have come in. And sticking to consumption, all eyes will be on Avenue Supermarts. The operator of the DMart chain of stores is set to announce its first quarter earnings. Mahima is still with us. And Mahima, what to expect from Avenue Supermarts?
Right, so as per the business update, the revenue growth that we are expecting is at around 16% for Avenue Supermarts, slightly lower than what the street was expecting. In terms of where the other three numbers stand, EBITDA is expected to see a growth of around 11%. Margins will slightly dip to around that 8.2% mark versus that of 8.7% earlier. And PAT is expected to see a growth of around 14%, so double digit there. In terms of what to expect, sales growth will slightly moderate, and we've seen that already in the numbers. There will be slight rise in terms of revenue per square feet because the stores that it has added in the past will start to mature. Gross margin contraction will take place because of higher overall operating expenses because of rising competition plus discounting happening, and competitive intensity may put pressure on overall same-store sales growth as well as margins. In terms of key things to watch out for, of course, commentary on quick commerce competition that is coming in, plus discounts being offered to offset this kind of competition, and lastly the trajectory of store expansion and maturity that has been happening for DMart because they've gone aggressive in terms of store additions, and they're still planning to add a lot of stores in the tier 2 and tier 3 cities. So this is something that one should keep in mind while while the Avenue Supermarts results come in any time now.
Okay, thanks a lot for that. Well, retail particularly hasn't had a great run this time. And Neeraj Diwan, if I look at this quarterly performance, I mean, retail has kind of, the updates that have come in have been a bit sluggish, except for maybe a V2 retail. What's your thought here on the retail stocks? Are these dips an opportunity to buy with all the moves that the government is doing around spurring consumption and the pay grades of even the government employees coming up? Or is retail best left alone?
I think there are a couple of things. Last time also you saw even Reliance Retail came out with very good set of numbers. So it is more to do with stock specific and sector specific retail where you can put your bets on. Now I still feel that there is definitely potential in retail, but then what stock to buy? If you see the stocks which are already listed, which are doing well, or the good company, whether it's Avenue Supermart, whether it's Trent, they are expensive. So, for them to show the kind of growth that they've seen over the last few years, to continue showing that at these levels, it's a little difficult. So any sort of disappointment there also is bad for the stock because they're already trading at 80, 90, 100 times. So that is very difficult to, and with kind of competition that is coming in with definitely the brick and mortar store plus online also is giving so much competition to these. So I think it's again very stock specific. So I think if someone can really pick up any stock which is valuation right, attractive, you can consider. Otherwise, I think best to avoid the already heavily expensive stocks.
Okay, so maybe an avoid, especially on the expensive side. Neeraj, not encouraging where that is concerned, but top stocks on our radar today, there's Lemon Tree, there's Fine Organics, there's PC Jewelers. Jasmeet joins us with all of the details on those three. Jasmeet.
Well, right, thank you for that, Harsh. Yes, first one on my list is Lemon Tree. Well, the stock is up 10% in last 5 days and has seen a bit of correction today. Let's understand more about the history of the company and why this trend. Firstly, the company has signed 2 new properties in Maharashtra. One would be in Navi Mumbai with 67 rooms and the other one would be in Jalgaon with 100 rooms. Company currently operates 14 hotels, under which 7 are under construction in Maharashtra altogether. If we look at an overall order book for the company operates 212 rooms with 17,000 odd rooms, of which 111 rooms are still in pipeline, while the rest are operational. Now, next on the list is Fine Organics. While the company's arm, Fine Organic American LLP, has acquired a land. The size of the land is 160 acres located across US. The area specifically where it's located is Johnville, while the site is for housing of manufacturing facility, and this particular site where the company has acquired will enhance company's presence in North America, Central as well as South America. The last on my list is PC Jewelers. While the stock is down 6% in trade today, it's up 40% in past month. So let's understand why this reaction of the stock. Firstly, the company has raised rupees 500 crore by preferential allotment issue of shares. Why this fundraise was basically to reduce the debt. Company has already reduced 50% of the debt in last year, and company aims to reduce further 7.5% in the coming quarter, while the company aims to go debt free by FY26. In terms of business update, company has reported an 80% approximately growth in previous quarter. So this is all for today in stocks to watch.
Thank you so much, Jasmeet, for that. Now, if I were to stick to that consumption theme, Neeraj, would you like any of these names? Because there are some buzzers within that consumption theme today. Varun Beverages, there's been plenty spoken about that one. Maybe a VIP, a V-Mart, a Relaxo. Any of these on your buy list?
Yeah, you have to be stock specific. There's, you can't just avoid the whole sector, but then a couple of names that you took. One was VIP. I think they have been trying to increase their, market share, which had fallen earlier. So if something happened materially there, but then there's other buzz also around VIP. So that again will be depending on the news flow. But generally, as a company, they've been trying to improve their market share, take out their old inventory. So they have been going the right direction. So that can be considered. But then even something like a Varun Beverages, they kind of growth they've been showing, and they continue to grow and get more geography, then more products under their portfolio. So that also is interesting to look at. So you definitely can look at some of these names there in the consumption basket.
Okay, and what about some of the smaller banks, Neeraj? And I know I have to let you go, but just last quick question. Something like an RBL, something like an Equitas, there's plenty of movement there. And valuations also in some form or shape don't look expensive for whatever reasons. Of course, there has to be a reason behind that, but they don't look expensive either.
Yeah, valuation is attractive in a lot of these smaller banks, but I'm more positive on the PSU side. I will look at either the large private sector banks or the PSU bank. So these are the two segments in the banking space which I'm positive on.
Okay, thank you so much, Neeraj. We'll let you go on that note. Always great having you on the panel and speaking with you. So thanks for coming in. Kunal, if I were to firstly take your view with regard to a TCS before I take your BTST.
I think TCS again has given us a breakdown. So clearly the trend is on the weaker side. That stock can test on the lower end, suppose zone of 3,000 on the downside. So whatever intraday bounce you get, that would be an opportunity to exit or initiate fresh sell positions. The resistance for the stock is now placed at 3,400.
Okay, all right. So that's with regard to where a TCS is concerned. Now you can obviously catch the entire conversation we had with management. We've not played it on the show, but you can catch that entire conversation post-market. What we'll also do is take your BTST, Kunal. Give us that.
I think that is SBI Life. In today's trading session, the stock has given us a breakout consolidation on the technical chart, and the stock has also given us a breakout above the 20 DMA in a weak market. So clearly showing a lot of strength. So this could be a good BTST candidate with a stop loss of 1815, looking for targets of 1855 to 1865 on the higher end.
Now the other one in focus today also is a Bharti Airtel, where UBS says that it's expensive now. They've downgraded the stock. Hiral here with all of the details of what UBS has said. Hiral.
Thank you for that, Harsh. So clearly, they've downgraded Bharti Airtel to a sell from a neutral. Interestingly, they've gone ahead and hiked the target price to a 1,970 from a 1,705. Along with a Bharti Airtel, a downgrade for a Vodafone Idea, where the target price has been cut to a 8.5 rupees from a 12. And they've maintained a neutral on Indus Towers, where they've hiked the target price marginally to a 455 from a 450. What they are saying is that with regards to the sector, they're modeling a 10 to 12% price increase in FY26, and the probability of a delay cannot be ruled out. In fact, Indian mobile tariffs are now in line with global emerging markets. So that is one of the positives that you could be looking at. They believe that the mobile tariffs are at the low end and they are higher than the GEMS regions. Now, this could result in operators limiting their price increases at the lower end plans, and that's the reason why a downgrade that has come in there. This in turn could actually limit the revenue flow through of price increases, and the downgrade gives these downside risks and valuations which they believe are expensive. So that's the reason why you have a UBS which has gone ahead and downgraded a Bharti Airtel and a Vodafone, but a marginal increase in terms of target price coming in on a Bharti Airtel, but a reduction in terms of Vodafone Idea.
2% lower for Airtel. Thanks a lot for that, Hiral. Kunal, any trade here? Airtel, would you think of going short here?
See, definitely not at the current levels, but bounce could be an opportunity to go on the short side. Overall, the larger term structure still remains on the positive side for me. The next support for the stock on the downside is placed at 1870. It can come down towards 1870, but probably from those levels, one can look to go again on the long side.
Okay. What else? Of course, we spoke about Glenmark, but a lot of people might be tuning in right now. So Kunal, just trying to understand, for somebody who went long on a Glenmark at around these levels, 2170, etc., what is the upside here, if any?
So if there's an upside, if the stock continues, it could be 2230, 2250 on the higher end. That is the max what I see on the stock. If you're holding long at the current levels, I think your stop loss should be very strict over here. One can keep a stop loss on the downside around the mark of 2130.
But you don't believe there will be an upside, right?
No.
Okay, so whatever view is that Kunal doesn't believe that there will be an upside when it comes to Glenmark, a technical view. So bear that in mind. What else? We've spoken about HUL in detail. There is PTC, which has gained a little bit in the last few minutes of trade. In fact, quite a bit. So keep that stock at the back of your mind. Look at that surge there. 14,616. Quite a strong move in the last few minutes of trade. Fino payment has come off a little bit in the last few minutes of trade. So bear that in mind. And some of the amine stocks are active today. Actually, this pack has been active, Kunal. I don't know if you looked at them closely, but Alkyl Amines, Balaji Amines, Indo Amines, any thoughts here?
I think already they have seen a sharp run up in the recent times, so there could be some profit booking kicking in for these stocks. For alkaline amine, I think the next level of support is at 2200, and if we are able to hold this mark, we can again see a pullback towards 2300 on the upside.
Okay, well noted. I'm guessing you won't have a technical view on Avenue Supermart, so I'll leave that out. BSC has been consistently falling. Any thoughts here?
Yeah, see, I think here the profit booking was due and we expect some further downside into the stock. The next support for the stock on the downside is placed at 2100. So this fall can extend towards 2100 on the downside. Probably there the stock might settle down and we might see some pullback.
Okay, and two swift movers, Kunal. One of them is Ramco Cements, has had a pretty good last couple of weeks. The other one, which is settling lower but has a good decent move today, is Wockhardt.
I think Ramco Cement looks excellent on the technical charts, where on the monthly chart it has given us a breakout. So that's positive, and you can expect this move to continue towards 1220, 1230 on the higher end. So that's a buy for me. Dips would be a good opportunity to enter on the long side. The support for the stock is now placed at 1080.
What about Wockhardt?
Even Wockhardt looks good. The stock has given us a breakout in today's trading session from a falling trend line, and it has been sustaining at higher levels. This move could extend towards 1820, 1830 on the higher end.
Okay, thank you so much, Kunal. We'll let you go on that note. Completely out of time. Thanks for joining us this Friday afternoon. Let's pull up where the Nifty is and see where we're closing in at. Nearly 1% lower on the Nifty. We're now down 220 points. 0.4% lower on the Bank Nifty. So pressure clearly building as we've closed this week. Let's pull it up intraday and thereafter through the week as well. If you can have the weekly chart. There you go. So we have around 1% lower. We're very, very close to the day's low, if not at the day's low. Yeah, just about 5 points from there. So at the day's low, in fact. If we're looking at the heat map as well, the contributors, of course, pulling down the index today are majorly IT. Let's pull up the contributors. That's the texture. Of course, the breadth clearly unfavorable. Some bit of green out there. Pharma, FMCG, and maybe SBI Life within that life insurance pack. HDFC Life nowhere to be seen in the green. So that's how it's played out. But let's look at contributors on the Nifty. Let's see which were the big drags. And HDFC, Reliance, TCS. So it's obviously the heavyweights along with IT, a TCS and a Bharti also, which has pulled down the index. HUL in some form or shape trying to lend support. So are a couple of the private sector banks and SBI Life, but really not there, far and few. 200 odd points lower on the index at close. Let's pull up the intra-week, or rather how the index has done through the week, and that'll give us some sense. 1.1% lower through this week where the Nifty 50 index is concerned. Let's pull up some of the gainers of the week. Let's pull up an HUL. Let's see how that has done through the week. My guess is it's done 7% odd. There you go. So around 7% through the week on HUL, nearly 5% up today itself. Let's also pull up a Kotak, because that's the other big gainer for the week. And there you go. So 4% higher through the week for Kotak. Just 0.5% today. It's been a silent mover, but we did see a bit of a spike after it declared its provisional numbers for Q1 FY26. Let's pull up the breadth of the overall market, the exchange. And where the exchange breadth is concerned, extremely weak breadth today. 650 advances to 1600 declines. It's probably the worst advance decline we've seen, most adverse in over 2 weeks. So clearly not in favor. Let's look at sectors now. Let's position ourselves. Let's see what sectors have done well. Pharma, FMCG are the two which are standing out, not surprised. Healthcare is also just about clinging on to the green. But the Nifty India Defence is where a bulk of the pressure is, along with IT, not surprised with those TCS numbers. And auto also down nearly 2%. So auto also letting up quite a bit after that UBS note, putting pressure on that one. Metals are down 0.5% odd. And outside of that, broader markets also are seeing a bit of a drag versus the Nifty. Let's pull those up. Let's pull up the Nifty mid cap and small cap. And there you go. So that's the Nifty mid cap, 1% lower in trade today. The Nifty small cap also just about 0.7%. So on either side of how the index has performed. Let's also pull up the intra, or rather through the week, how the mid cap and small cap indices have done. Let's pull those up. And there you go. So 0.6% lower for the week. So relatively better off where the small cap index is concerned. It's done well. But the Nifty mid cap is down 1.5%. I want to also try and pull out some sectors which have done well. Let's pull up the Nifty FMCG and see how that one has done. My sense is that that's been one of the outperformers this week. There you go, 1.8% higher on the Nifty FMCG. The other one which has relatively done okay within the FMCG pack is Godrej Consumer. That one also has done decently for itself. IT is the big loser this week. So we'll pull up Godrej if we can. Thereafter, let's pull up IT. And there you go. So that's IT, 3.5% lower, nearly 2% today. And within that IT pack as well, it's some of the smaller counters are persistent. Let's pull that one up. And within the larger ones, and HCL Tech, which has underperformed, 5% lower on a persistent this week. And HCL Tech down nearly 5% as well. So that's where a couple of pockets of pressure within the IT index actually resides. Okay, the BSE 500 top gainers, top losers, before I go across and cover up all the cues for the week. Glenmark Pharma, no surprise there. VST Industries perked up 6% today, along with an HUL within the FMCG pack. EID Parry is also up 4%, so that one's done well. Jindal Worldwide, the top loser, 8% lower, along with a Sterlite, a Metropolis, down nearly 5%, a Samman Capital down 4%. Relaxo, which has been a buzz for a better part of the week, is also down 4%, has corrected after that huge upswing that it saw a couple of days back. Now let's pull up what to watch out for next week, and nothing much on the global side, so we'll go straight to the domestic side of things. Those are some adjustments in terms of dividend that you will see. Those continue to come through. A Wendt and a GHCL Textiles. Quadrant Future Tech will be on our radar as well. Shares to exit lock in 54%, so that's a large chunk that's come through, and those are earnings that you need to look out for. Outside of that, you also want to look out for an Avenue Supermarts coming out with earnings later today. Rallis, Tata Tech, Tejas Networks. Of course, Tech hasn't done well, but Tata Tech will start the earnings season for the ER&D players, which have done well today. So we'll have to wait and watch for Monday as to how that plays out. But completely out of time on this edition of India Market Close. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Also, stay with us because we'll give you a roundup of the day and hopefully even of the entire week as Market Express takes all the action forward.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight to the show. So Nifty and Sensex end lower for the week, dragged by IT, media and metal indices. All the sectoral indices barring Nifty FMCG close in the red. Nifty IT is the top losing sector for the week. Adani Green Energy is in the spotlight as its operational capacity surges 45% year-on-year to 15.8 gigawatts in the first quarter. So the company sells 10,479 million units of energy, marking a 42% increase compared to last year. In quarter one alone, Adani Green operationalizes 3,763 megawatts of solar power, 585 megawatts of wind power, and 534 megawatts of hybrid power plants. With a greenfield renewable energy capacity addition of 1.6 gigawatts this quarter, the company's total operational capacity now stands at 15.8 gigawatts, making it the largest renewable energy player in India. So over the past year, Adani Green adds in unprecedented 4.9 gigawatts of greenfield capacity, consistently generating power well above its PPA commitments. Tata Elxsi reports a challenging first quarter for FY26, with net profit plunging 22% year-on-year. Revenue edges up slightly by 1.79%, while EBIT grows 11.22%, though EBIT margin contracts to 18.2% on a quarter-on-quarter basis. Constant currency revenue declines 3.9%. This is impacted by a 5% drop in media and communications and a 6.5% fall in healthcare revenues due to tariff pressures. So segment-wise, software development revenues hold steady, but system integration services fall sharply by over 36%. Jefferies remain bullish on Mankind Pharma, maintaining a buy rating with a target price of 3,000 rupees. The firm views the company as poised for recovery following a reboot phase, with Q1 and Q2 acting as step quarters, and India prescription growth expected to normalize in the second half of the fiscal year. So synergies from the BSV acquisition are projected to start reflecting, leading to a 26% EBITDA margin in FY26. Starting FY27, Mankind Pharma is expected to achieve 1.5 times the growth of the Indian pharmaceutical market. So Jefferies also highlights a favorable risk-reward profile, naming Mankind Pharma their top pick in the sector. Avenue Supermarts, the parent company of D-Mart, is set to report its Q1 of FY26 results, with standalone revenue rising 16% year-on-year to 15,932 crore rupees, supported by a total store count reaching to 424 as of June 30th of 2025. So sales growth is expected to go slow slightly, with the revenue per square foot showing a mild increase. However, gross margin contraction and higher OPEX due to competitive pressures are also one of the key concerns, and this is impacting the same-store sales as well and the margins. PC Jeweler announces plans to raise 500 crore rupees through a preferential allotment of equity shares and warrants. Now, the fundraise is aimed to accelerate its debt reduction efforts. The company has already cut its debt by more than 50% in FY24 to 25, and further it's reduced by 7.5% in Q1 of FY26, and they are targeting to become completely debt-free by the end of this fiscal year. So the fundraise includes issuance of 9.72 crore of fully convertible warrants to promoters Balram Garg, and 18.05 crore shares to non-promoter investors, subject to shareholder approval via postal ballot. UBS takes a cautious stance on the Indian telecom sector, downgrading Bharti Airtel to sell with a revised target price of 1,970 rupees, which is up from 1,705 rupees earlier. So Vodafone Idea and Indus Towers maintain a neutral rating with target prices of 8.5 and 455 respectively. The brokerage models a 10 to 12% mobile tariff increase expected in late FY25, but notes the possibility of delays. Indian mobile tariff are now broadly aligned with global emerging markets, with lower end plans priced higher than their peers. Hiranba Industries kicks off commercial production at its Gujarat unit, focusing on manufacturing fungicides and insecticides. So this expansion, operated by its wholly owned subsidiary Hiranba Organics, boosts the combined production capacity of the Sarigam facility to 9,000 metric tons per annum. So this new unit is expected to add annual revenues between 375 crore rupees and 475 crore rupees, significantly enhancing the company's manufacturing capabilities and product portfolio. Hiranba is also emphasizing to increase product registrations and shifting strategically towards formulations to add value to its technical products. The earnings season has begun, with TCS announcing its first quarter results. The IT giant made a revenue of 63,437 crore rupees in the first quarter of FY26. While the net profit rose 4% sequentially, the total contract value for the quarter declined from $12.2 billion to $9.4 billion. Now, the company's attrition rate stands at 13.8%, which is the highest in nearly 2 years. Citi maintains its sell rating on TCS, cutting the target price to 3,135 rupees from 3,220 rupees. So the brokerage has flagged a weak quarter, citing a sequential drop in the international business despite seasonal strength. While FY26 is expected to improve year-on-year, sector-wise growth remains under pressure and valuations are still elevated. Citi trims FY26 end and FY27 end earnings estimates by 2 to 3%. UBS flags risk in India telecom sector despite expectations off a 10 to 12% price hike in the late of FY26, while mobile tariffs now align with global emerging markets and are even higher at the low end. Operators are cautious about raising prices on the budget plans. Now, UBS warns this could restrict revenue gains and has downgraded key stocks, citing downside risk and stretched valuations. ADA posts a mixed performance for Q1 of FY26. While net interest income jumps 36%, the net profit drops 35.7%. This is amid a sharp deterioration in the asset quality. Impairments surge 180% quarter on quarter. Largely, this is due to stressed exposures like Gensol Engineering. Anand Rathi Wealth delivers a strong Q1 driven by operating leverage and robust inflows. The firm reports its highest ever quarterly net inflows, with mutual fund distribution and SIPs showing solid growth. Equity mutual funds continue to dominate the asset mix, and profitability sees a healthy uptick. Glenmark Pharma's innovation arm has signed a major global licensing deal with AbbVie, and this is for its drug candidate ISB 2001. So under this agreement, AbbVie will get exclusive rights to develop, manufacture and commercialize ISB 2001 in key markets, including North America, Europe, Japan and China. As part of the deal, Glenmark's wholly owned subsidiary IGI will also receive an upfront payment of $700 million, marking one of the biggest licensing agreements by an Indian pharma company in the recent times. Hindalco also faces pressure as Trump slaps 35% tariff on Canadian imports starting August 12. So the move threatens to inflate input costs for Novelis, Hindalco's US-based subsidiary, which sources key raw materials from Canada. So with Novelis contributing nearly 60% of Hindalco's FY25 revenue, margin compression looks likely. UBS double downgrades Bharat Forge to sell, setting a target price of 1,215 rupees amid mounting global headwinds. The brokerage cites EBITDA pressure, weak demand in the non-defense segments, and cautious consumer sentiment as the key triggers. So with BSE Auto outperforming and valuation stretched, UBS expects 7 out of 12 auto stocks to post EBITDA declines due to moderating demand and rising input costs. Air India flight AI-171, a Boeing 787, crashed shortly after takeoff from Ahmedabad, bound for London, killing 241 out of 242 on board and at least 19 on the ground. So the Aircraft Accident Investigation Bureau's preliminary report, which is due soon, will provide initial insights, including data from undamaged black boxes. So the report details the flight's final moments, pilot actions and possible dual engine failure, potentially linked to fuel switch errors. So it will guide further probes into this tragic incident. The Securities and Exchange Board of India is conducting one of its largest investigations into pump and dump schemes, targeting over 200 listed companies. SEBI raided over 80 premises, seizing data from 150 mobile devices and 100 computers. The probe is centered in Ahmedabad, focuses on shell companies, inflating stock prices to mislead the investors. So the 3-day operation uncovered incriminating evidence, with further analysis ongoing to expose the network behind these fraudulent schemes. India has escalated its response to US tariffs on steel and aluminium, doubling proposed retaliatory duties at the WTO to recover $3.8 billion, up from $1.9 billion after the US raised tariffs from 25% to 50%. So India reserves the right to adjust tariff rates and products to offset losses on $7.6 billion of its exports. So as India-US trade talks resume with the looming August 1 deadline, India aims to protect its economic interest while pushing for a bilateral trade agreement. So the move follows failed prior negotiations, with both sides now racing to finalize a deal in the next 20 days. Adani Group Chairman Gautam Adani unveiled a massive investment plan committing $100 billion over the next 5 years. Speaking at the 5th annual conference of the Society for Minimally Invasive Spine Surgery in Mumbai, Gautam Adani emphasized that this significant capital commitment symbolizes India's unbreakable backbone, a backbone that supports the dreams of 1.4 billion people. He underscored the importance of resilience, drawing a parallel between mending the human spine and strengthening the nation's economic and social framework. In a surprise top-level reshuffle, FMCG behemoth Hindustan Unilever has announced that its managing director and CEO Rohit Java will be stepping down. So in a historic move, the board has appointed company's veteran Priya Nair as the new MD and CEO, making her the first woman to ever lead the Indian FMCG giant. Zee's special resolution on promoter warrants failed to pass at the July 10 EGM held via video conferencing. Promoters plan to infuse $22 billion at 132 rupees per share, which would have raised their stakes from 4.3% to 18.4%. So the move is aimed to deepen promoter commitment, but shareholders reject the proposal amid concerns over funding transparency. The United Kingdom has invested 163.3 million euros or 1,634 crore rupees in French satellite operator Eutelsat to help it compete with Elon Musk Starlink. Now, the investment is part of a larger 1.5 billion euros funding round, also backed by France and Sunil Mittal's Bharti Group. So, which has actually merged its satellite venture OneWeb with Eutelsat in 2023 and has also raised its investment commitment to 150 million euros or 1,501 crore rupees. So, with a fleet of 669 satellites, Eutelsat is now, which basically now holds the position of the second largest satellite operator globally. Non-bank lender Infinity FinCorp Solution has signed a big investment deal with global firm Partners Group. Partners Group will take a majority stake in the company as part of a deal worth 1,950 crore rupees. The investment includes 600 crore rupees in fresh shares, while the rest comes from buying shares from existing investors like True North and Indium 4. So the deal is also still awaiting regulatory approvals. Supply chain software as a service platform Arteria Technologies has raised 100 crore rupees from ICICI Venture, the investment arm of ICICI Bank. The funding includes both primary and secondary capital. So Arteria will use the money to expand its AI offerings, boost growth and hire more talent for its engineering and product teams. Samsung is working on a tri-fold smartphone and it could launch by the end of this year. So the update came from the Vice President of Product Planning at Samsung Electronics during an event in New York after launching the latest Galaxy Z Fold 7 and Flip 7. The company is now aiming for its next big leap in the foldable tech. The tri-fold model is expected to offer even more screen space in a compact portable form, pushing the boundaries of what foldables can do. Tesla will also open its first India showroom in Mumbai's Bandra Kurla complex, a key commercial hub, marking its entry into the world's third largest car market. So the 4,003 square foot experience center follows Tesla's import of $1 million in the vehicles, including Model Y SUVs from China. So despite high import tariffs, Tesla is expanding with plans for a Delhi showroom and a leased service center in Kurla. So the move comes amid declining sales in other markets, with Tesla hiring staff to support its Indian operations, aiming to capture growing demand in the region. NVIDIA-backed Perplexity AI launched Comet, an AI-powered web browser to rival Google Chrome. So Comet integrates Perplexity's AI search engine, allowing users to ask questions, perform tasks, and research seamlessly. So it features an AI assistant for product comparisons and content summarization with data stored locally for privacy. Initially inclusive to Perplexity Max subscribers at $200 monthly. Broader access will follow via invite. Despite media criticism over unauthorized content use, Perplexity introduced a publisher partnership program. India has widened global investors' access to its $639 billion credit market by allowing total return swaps on corporate bonds. The financial regulator at Gift City has approved banks like HSBC and Standard Chartered to offer these swaps, which let foreign investors gain exposure without owning the bonds directly or opening local accounts. So this move actually follows India's booming credit market and growing private debt deals. TRS have already boosted sovereign bonds inflows by $22 billion, while current approvals over rupee-denominated debt plans are underway to extend swaps to dollar bonds, further attracting global capital. Astronaut Shubhanshu Shukla and his Axiom 4 crewmates will return to Earth from the International Space Station on July 14, NASA has confirmed. NASA's Commercial Crew Program Manager Steve Stitch said that the undocking is planned after the highest beta phase and all preparations are underway. The return wraps up the Axiom 4 mission ahead of the next launch, Crew 11, scheduled for July 31st. The Indian Coast Guard rescued 2 U.S. citizens stranded aboard their yacht near Nicobar Islands. Now, they had sent out a distress alert after their vessel was caught in rough seas some 53 miles south of Nicobar. The ICG deployed ship Rajveer, which reached them in time and safely towed the yacht to Campbell Bay. The Supreme Court has asked Election Commission to consider accepting Aadhaar, voter ID and ration cards as valid documents for voter registrations in Bihar's ongoing electoral roll revision. So the court said that this would be in the interest of justice since the current list of 11 accepted documents is not exhaustive. The suggestion comes during the special intensive revision of voter list in poll-bound Bihar. US President Donald Trump on Thursday announced 35% tariffs on Canadian imports. These are set to take effect from August 1. Now, this move, he said, that is a response to Canada's retaliation and ongoing trade barriers that have strained bilateral relations. A New Hampshire federal judge has temporarily blocked President Trump's executive order to end birthright citizenship in the United States. So Judge Joseph issued a nationwide injunction and approved a class action lawsuit representing children affected by the order. He has paused enforcement for 7 days to allow the government to appeal. The ruling challenges Trump's efforts to redefine the 14th Amendment, stating citizenship rights shouldn't hinge on parents' immigration status. A massive overnight Russian airstrike hit Kiev, killing at least 2 people and injuring 16, with President Zelensky saying that the attack involved 18 missiles and nearly 400 drones aimed mostly at the capital, where residents were kept awake for 3 hours as explosions rocked the city. Drone debris hit residential buildings and fires broke out across multiple areas, prompting emergency crews to respond through the night. Top diplomats from the US and Russia meet on the sidelines of the ASEAN summit in Kuala Lumpur to discuss the war in Ukraine as well as situations in Syria and Iran. Russian Foreign Ministry Sergei Lavrov and US Secretary of State Marco Rubio engage in a frank and substantive exchange, exploring ways to ease tensions amid and also resume dialogue beyond the battlefield. So Rubio reveals Lavrov presented a new idea related to Ukraine, which could potentially open a path towards peace, though details remain undisclosed. The talks come amid ongoing conflict and global tensions, highlighting ASEAN's role as a rare venue for dialogue between the rival powers. Armed men kidnapped and killed 9 bus passengers in Pakistan's Balochistan province, stopping buses on a highway and checking IDs before abducting the victims. So, suspected to be from Punjab, the group was taken to a mountainous area and shot dead. Their bodies found with bullet wounds. Now, the group has claimed responsibility, but officials point to Baloch separatist militants who often target Punjabis, accusing Pakistan's governments of exploiting Balochistan's resources. The volatile region bordering Afghanistan and Iran continues to face insurgency over resource disputes and regional tensions. England won the toss and chose to bat first in the third test against India at Lord's under sunny skies favouring batsmen. So the series is tied 1-1 after India's 336-run win at Edgbaston and England's 5-wicket victory at Headingley. Now the England recalled Jofra Archer, marking his first test in the over 4 years, replacing Josh Tongue. India brought back Jasprit Bumrah, rested previously for Prasidh Krishna. So Joe Root's unbeaten century anchored England to breach 250 runs mark despite a slow pitch and India's disciplined bowling. Well, with that, viewers, it's a wrap on Market Express. But please stay tuned to NDTV Profit as there's more lined up ahead on the other side of the break.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Benchmarks end lower this week, dragged by media, metal and Nifty IT, which falls the most this week, emerging as the top losing sector for the week. Sources say SEBI is intensifying its investigation into a large-scale pump and dump operation involving shell companies in what is emerging as one of its biggest enforcement crackdowns. India doubles the proposed retaliatory duties against the US at the World Trade Organization over tariffs on steel and aluminium in view of the further hike in duty by the Trump administration. The government drafts a scheme to offer subsidies worth 1,345 crore to manufacturers of rare earth magnets in the country. Union Minister for Heavy Industry and Steel H.D. Kumaraswamy said this on July 11th. A day after Amazon India launches its 10-minute delivery in India, NDTV Profit's Tamanna Inamdar spoke exclusively to Amazon India country manager Sameer Kumar. After Glenmark's massive deal with AbbVie, MD and Chairman Glenn Saldana says they will earn double-digit royalty on the back of this pact. The preliminary report into this deadly Air India crash in Ahmedabad on June 12th is likely to be released today. Very good evening. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be taking you the latest on the markets, national as well as international news. So let's begin with how the markets fared. All sectoral indices lose in the trade, barring Nifty FMCG and Pharma. Nifty IT and Auto fell the most in trade, in fact. But for more on what happened in the markets today, let's go across to my colleague Harsh.
Well, a tough day as well as a tough week for markets, frankly. So we've slipped over 220 points today and the Nifty was under quite a bit of pressure, led by some of the IT names and the heavyweights. Even though the heavyweights were pulling down the index in terms of contributors, but there was no real damage. But TCS was the real one big pain point in the market, which kind of has hurt markets today. Around 1.8 to 1.9% lower on the IT index, and that pain felt even on the Nifty 50 index, because TCS was down nearly 3% in trade. So that one was the big one. But outside of that, you also saw the broader secular trend being negative, because the breadth of the market, both on the Nifty as well as on the exchange, was sharply in the red. Just about 11 to 12 stocks in the green on the Nifty, and on a day like that, it's very difficult for markets to really find any gainers, and that was the trend. Bharti Airtel was the other big contributor among the losers. Now, talking about the overall breadth as well, around 1,600 losers to just about 600 gainers even on the broader market. So some bit of pressure also creeping in on that pocket. And the broader market's also not doing as well. There's some bit of an underperformance on the Nifty mid cap, which was down nearly 1%. The Nifty small cap also was down around 0.7%. So there was pain there as well. But of course, there were some movers in the green, and within that was the one big name, HUL, which was up 5% on a day like this. Leadership change driving the returns that we saw today, and driving the returns on the FMCG index as well, because that was the one big outperformer. So that's how maybe that's one of the bright spots in the market today. When you're looking at the BSE 500 in front of you, some big gainers, some big losers. But outside of that, for the week gone by as well, Titan was the big loser, 8% lower in trade for the week. The Nifty IT, there was HCL Tech and Persistent, which were the two big losers. There was HUL and Kotak, which were the big gainers on the Nifty 50 for the week. And FMCG was the best performing sectoral index, which was up 2% this week. IT was one of the bigger losers among sectoral indices.
Right, Harsh, thanks for that. And Mahesh Patil of Aditya Birla Sun Life AMC is bullish on sectors that have underperformed. Listen in as he gives his earnings growth projections for the Indian markets.
The underlying growth is not as strong as what we were seeing around post-COVID, right? So there has clearly been a slowdown over there. And a lot of the bigger sectors, for example, right, if you from earnings standpoint, whether it's banking sector, there again, there'll be some impact pressure because of the interest rate cuts, the pressure on NIMs, which will clearly flow in. So there, we will see probably at best a high single-digit growth, which is again a very large part of the overall profit pool. Then even the IT sector, right, you've seen the results coming in again, while things have kind of bottomed out, but again, it will also be kind of a mid to high single-digit kind of a growth at best over there. So given that, I think, and even in the auto sector also, we are seeing that the overall volume growth is still a bit sluggish. So given that, I would say that it will be too optimistic to expect a mid-teens kind of a growth, or a growth in the vicinity of 15% also, which was the expectations, by the way, right, at the beginning of the, in fact, every time at the beginning of the year, we start with around, say, 15-16% growth, which was even the case for FY25. And eventually, we ended up with around Nifty around 5% kind of earnings growth. But I think around 10 to 12% is what we expect, I think, which is possible.
And moving on to an NDTV Profit exclusive, SEBI is conducting one of its largest ever investigations into suspected pump and dump schemes across over 200 privately listed firms. Many reportedly operated out of Ahmedabad. Our sources also told us that data from over 100 computers is being examined. My colleague Charu now joins us to bring in more details on this.
So the market regulator, Securities and Exchange Board of India, is currently conducting a massive search investigation against several privately listed companies, most of them being operated or controlled from Ahmedabad. Now, what we have learned from our sources is that around 200 of such shell companies or defunct companies being revived only for pump and dump schemes could be on SEBI's radar. And this is a very data-driven, very investigative approach that the regulator is taking. It already has confiscated about 100 computer devices, 150 mobile devices, and they are already going through the data that can be collected from these devices. Apart from this, I would also like to inform the viewers that yesterday we spoke about another such company, Sprite Agro, and it is also likely under the scanner in regards to pump and dump schemes with this particular investigation only. On June 30, NDTV Profit had exclusively reported that SEBI is currently investigating a lot of such companies, which are listed in an older time and are defunct but are used to manipulate the market every now and then and dupe investors on the pretext of large returns. Now we have come to know that this is a very large investigation and very data-driven investigation. In fact, a lot of Telegram channels, YouTube channels, and SMSs were used to crack into this. So let's see how the orders roll out, how the developments roll out. But for now, we know that a lot of these defunct companies are on SEBI's radar, and investors really need to be very cautious before dealing with them.
Right, Charu, thanks for that. And the Heavy Industries Ministry has allocated 1,345 crore rupees to a scheme for producing rare earth magnets. In a press conference, H.D. Kumaraswamy, Heavy Industries Minister, and Kamran Rizvi, Secretary of Heavy Industries, said that the rare earth magnet scheme is under inter-ministerial consultation and will soon be considered by the cabinet as well. This comes on the back of the ministry's initiative to incentivize over 5,000 electric buses under the PM E-Drive scheme. Sectors such as cement, steel and logistics are expected to be primary beneficiaries of this move. Let's listen in to the Minister and the Secretary of Heavy Industries on the rare earth magnet scheme now.
We already allocated 1,345 crores, I think. 1,345 crores. We are selecting 2 manufacturers. Yes.
So a scheme has been circulated for 1,345 crore subsidy for manufacturers. It is under 345 crores. It is under inter-ministerial consultation.
Magnets manufacturers or element of processing companies?
We are interested only in magnets. Anybody who gives us magnets will get incentive.
And India has doubled the proposed retaliatory duties on the US at the World Trade Organization. This comes after Trump administration doubled the steel and aluminium tariffs to 50% in the month of June. Let's now go across to Rishabh Bhatnagar for more details on this.
What we picked up from the latest at the World Trade Organization is the fact that India has sent out another notification, this time upwardly revising the proposed retaliatory duties that it has on US goods. Now, the earlier notice that was sent, it was sent in May, and India had said that it would raise or put retaliatory duties on the US to the tune of about $1.9 billion. That means India will be able to collect about $1.9 billion in tariffs. But after Trump doubled the tariffs on aluminium as well as steel from 25% to 50%, India has now sent a fresh notice saying that instead of $1.9 billion, we will be collecting about $3.8 billion and raising the retaliatory tariffs in a manner that we'll double them and be able to raise the double of $1.9 billion. That's what India has said at the WTO, that this is what we've picked up from the notification that was sent out on India's request. This is going on, of course, with the India-US trade talks going on. At the same time, there is a fresh round of negotiations that has been proposed. That's what we picked up from sources. And this fresh round comes as the July 9th deadline now shifts to August 1st. This is the deadline. This is the tariff pause deadline that we're talking about that Trump administration had imposed. So a very interesting sort of trade dynamics playing out between India and the US, not just bilaterally, but even at a multilateral forum like the WTO.
Glenmark ended over 14% higher after its US arm, Ichnos, has signed a licensing agreement with global biopharma giant AbbVie for its novel cancer drug. Now, we spoke to Glenn Saldana, who said that IGI will earn double-digit royalty on the back of this landmark deal. Listen in as he explains the details of the new drug and its effectiveness.
I think we finally hit on a drug which is actually transformational, which is ISB 2001. ISB 2001 is a drug for multiple myeloma. It's a tri-specific antibody, and we've presented some excellent clinical data at various conferences in the US. First ASH, then ASCO, where we've demonstrated that most patients, in the 30-40 patients that we've reported, almost 79% of the patients have an overall response rate, which means the patients get better, and almost 30% actually get cancer free. So it's an extremely promising drug, and as this can actually transform the multiple myeloma treatment, which is almost a $30 billion market today. So with this, we've now partnered this with AbbVie, which is a global major, where we've given them rights for US, Canada, Europe, China, Japan, and Glenmark will commercialize in India and all the emerging markets. And it's one of the largest deals, so $700 million upfront, $1.2+ billion in various milestones and royalties. So truly transformational drug, which basically puts India and Indian pharma on the global map for its innovation capabilities. So IGI is a 100% subsidiary of Glenmark, and I think with the upfront payment itself, IGI is well funded to continue research on the other products that they are currently developing. From a commercial standpoint, once this product commercializes, multiple myeloma today is a $30 billion market. It'll go up to becoming a $50 billion market. And I think with AbbVie's amazing capabilities in terms of commercialization, they could get a big chunk of the multiple myeloma market. And IGI in turn will receive double-digit royalties on their sales. So these are pretty large numbers when you look at it. And most innovative products have a period of 15 to 20 years of exclusivity. So it pretty much becomes an annuity at that point.
Hindustan Unilever gained close to 5% after it announced yesterday that Priya Nair will take over as the MD and CEO of the company from the 1st of August as HUL's first ever woman CEO. The current MD and CEO, Rohit Jawa, is set to step down from the 31st of July. But take a look at this special report on Priya Nair's inspiring journey.
In a surprise top tech reshuffle, Hindustan Unilever has named Priya Nair, a 3-decade company veteran, as its new managing director and CEO effective August 1st. She replaces Rohit Jawa, who steps down on July 31st, ending his tenure just 2 years in, the shortest stint by an HUL CEO in recent memory. Nair, who joined HUL in 1995 as a young manager, has worked across nearly every product category except food. She rose through the ranks, building brands like Dove, Rin, and Surf Excel, all household names across India. Nair was also in the fray to succeed Sanjeev Mehta in 2023, but missed out to Jawa at that time. Today, she becomes the first woman to lead HUL and is one of India Inc.'s most prominent businesswomen. This isn't just a symbolic elevation, it's a strategic shift. Under Jawa, HUL aligned with Unilever's global roadmap and split its beauty and personal care unit into two: beauty and well-being and personal care. However, growth in this segment has been muted amid stiff competition. Analysts believe Nair's India focus and global exposure make her better suited to revive momentum. Nair's influence goes well beyond brand building. She has driven HUL's digital transformation, leading award-winning marketing innovations like Kankhajura Tesan, a mobile radio service with over 30 million users and multiple Cannes Lions wins. She also shaped HUL's rural marketing and mobile strategy, making her a pioneer in new age consumer outreach. Java, meanwhile, exits amid a demand slowdown, muted earnings, and rising competition from both new age and global brands. HUL, long known as a CEO factory, places its bet on a proven leader who blends global vision with local execution. In Priya Nair, the company hopes to script a new growth story.
A day after Amazon India launched its 10-minute delivery in India, NDTV Profit's Tamanna Inamdar spoke exclusively to Amazon India country manager Sameer Kumar. In fact, this is Sameer Kumar's first TV interview since taking on the job. As Amazon becomes latest entrant in India's quick commerce race, Sameer Kumar sheds light on how they are going to differentiate themselves from the existing players. Take a look at the snippet of this mega exclusive interview.
You know, your own journey has also been so fascinating. You've been with Amazon since 1999. This is a bit of a ghar wapsi for you?
It is. I would call it my second innings. Like first inning was from 2012 to 16 when I came with my boss Amit to launch Amazon in India. That was an exciting time. But coming back last year or last November in this role, it's amazing to see the scale of Amazon and how loved we are by the Indian customer and the team that I've inherited. It's amazing. So I would call it my second innings.
Yeah. Put into perspective how, for an Amazon context, India is a crucial market. You said it's one of the fastest growing markets, but why is this a market that Amazon is investing so heavily in?
I think you have to look at the potential of India. Like Jeff Bezos, when he came here for our Sambhav conference, he called it 21st century is going to be India's century. And we believe that. Why? Because it has such a young population. It's aspirational. They want to do well. And so GDP per capita in India is growing quite fast. There will be, I hope there will be soon a big manufacturing base and 1 billion customers. So when you have that customer base, we love to be serving those customers our differentiated product, which is very large selection, do it well with a great value, and provide the fastest speed. If you do that, where else will you find such good set of customer base? So that's why we are excited. 21st century is India's century, and we are part of that.
Let me get to
The preliminary report on the investigation into the Air India Boeing 787 plane crash on June 12 is expected to be released today. The report will offer the first official insight into the circumstances surrounding the accident. While the findings may not be conclusive, it will be vital for Air India and Boeing, as well as advancing aviation safety at large. My colleague Sesai is now joining us with more details on this.
Aircraft Accident Investigation Bureau, which is leading the investigation into the Air India Boeing 787 plane crash in Ahmedabad on June 12th, is most likely to release its preliminary investigation report today. Sources indicate that the report is in final stages and it may be forwarded to the Ministry of Civil Aviation for review. Now, while India is required to submit a preliminary report within 30 days of an accident as per the International Civil Aviation Organization rules, it is not obligated to make it public. However, given the global attention this Dreamliner crash has garnered, the AIB has decided to make the report public. Sources also indicate that this report is expected to offer initial insights into the incident, including factual details about the aircraft, crew, weather conditions, and aerodrome conditions at the time of the crash. Early findings are also expected to indicate the extent of wreckage damage and offer preliminary indications regarding the cause of the crash. Additionally, the report is expected to detail the progress made so far, including the analysis of available evidence. It may also identify areas that require further investigation, is what we are learning. Now, remember, Dreamliners are touted as one of the safest aircraft in the world, and so when AI-171 crashed last month, eyebrows were raised not just in India, but in aviation circles around the world. Investigators are examining all possible theories that could have contributed to the crash, including dual engine failure, maintenance lapses, and fuel switch errors. The findings of the report will be crucial for all stakeholders involved, including Air India, Boeing, as well as engine manufacturer GE Aerospace.
Thanks for giving us that update, Sessa. And speaking at the 5th annual conference of the Society for Minimally Invasive Spine Surgery, Gautam Adani laid out a historic $100 billion capital commitment over 5 years. He said the move symbolizes India's unbreakable backbone, one that carries 1.4 billion dreams. Listen in.
We are preparing for a capital expenditures investment of nearly $100 billion over the next 5 years. The scale and pace of this investment and its commitment is unprecedented in India's private sector history. As we do our part for strengthening the very spine of India's rise, a spine that must be unbreakable, a spine that must carry 1.4 billion dreams, a spine that tells the world that India's rise is inevitable.
And that's all the time we had on this edition of Profit 360. But a quick programming alert before we go. The full conversation with Amazon India's country manager, Sameer Kumar, is coming up at 6 p.m. this evening only on NDTV Profit, so stay tuned.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV.
Hello and welcome. Thanks for tuning in. This is KYC. Today we're going to be talking to a management which or rather a company which manufactures solar cells. It's an industry where there is some headwind but plenty of tailwind. Headwind with regard to tariffs, etc. That's currently providing or rather building up that uncertainty with regard to export. But just the tailwind is extremely strong. Really the question is, can that sustain? But I'll start off with why Premier Energies. It's a large 12,500 crore capex that they have lined up. Is there, and mind you, this is a 50,000 crore market cap company. This is a company with around 2,000 crore of cash currently. It does a top line of around 7,000 crore. Just kind of putting it in a nutshell, this is a large amount. Therefore, how are they planning to fund it? Will it be phased? And if I flip over to question 2 or point 2, is there a risk of cost overrun? This is what I want to know. Also, what I want to also understand is what the demand visibility and the order book looks like. The order book currently is at 8,000 crore. They're going to execute in 12 to 15 months. They therefore build out or continue to build out the kind of order book that they currently have. That's what I want to understand. Margins and price sustainability. Margins have expanded sharply. Can that sustain? And that can only sustain if price sustains. So some flavor around that. Strong competition, especially in the domestic market, going to come from fresh capacity. Foreign market already seeing very stiff competition, given the fact that there is the China factor which is playing out where solar modules is concerned. Why are they not pushing for export-led growth? Why aren't they competing better in markets abroad? only 4% exports. Why aren't they doing that is what I would want to understand. Government-driven schemes, the risk of rising receivables is also the challenge. So therefore, why not do exports? And last one, what about transitions, technology transitions? How are they going to stay on top of it? TOPCon is one of the products which is the latest with regard to where solar module is concerned. I want to understand how are they staying ahead of the curve in terms of competition. But let's quickly understand about the company. It manufactures integrated solar cells and solar panels. The product portfolio includes solar cells, solar modules, EPC, as well as O&M solutions. The backward integration is at play. Backward integration into wafers and ingots. Some amount of perspective I will give as we roll forward where about the company is concerned. But this is the larger picture. Now let me start off by explaining what it is that solar cells actually is. So solar cells are made from wafers and ingots. So wafers and ingots are the raw material for solar cells, which is what Premier Energies manufactures. Thereafter, solar module manufacturing and then the finished product is manufactured. So that's the real value chain. These are just some of the products that are coming up on your screen. The P-type monofacial module. Now, I'll try and help you understand what each of those terms mean. P-type is more traditional. It's the older technology. Bifacial is where a panel has both sides which can generate solar electricity. When both sides can generate solar electricity, that's bifacial. When only one side is capable of generating electricity, that is monofacial. And therefore, what you will understand is a lot of these are products. TOPCon is obviously the latest product and the latest technology that there is. So it captures sunlight, that's what bifacial is, from both the front and the back. Monofacial is where the clear glass is spaced out, or rather monofacial is where the sunlight generates power only from the front side, not the back side. So that's the key difference with regard to product. In terms of the technology that's been evolving, I want to also cover very, very quickly only TOPCon. Let's try and cover that, guys. So, what is TOPCon? I'm going to simplify this. It's a super efficient type of solar panel that's better than the older technology. The older technology was PERC. You saw that on your screen as well. But it's far better than PERC. How it works, it was designed through a special design which allows a tunnel oxide passivated contact, that it allows you to convert more sunlight into electricity than under the PERC technology. The benefits are, of course, you get the more juice or more electricity out of the same amount of sunlight that you are capturing. It has a better heat retention as well, so you lose lesser power, and it lasts longer. So you can keep producing close to its original power for a longer period of time. Mind you, some of these products last 30 years. So you want your product to last for a longer period of time. So this is currently the top product in its category globally. And Premier Energies is one of the manufacturers of it. Now let's also dive slightly into the kind of mix that Premier Energies actually has. And this is where it gets interesting. So they have an annual capacity, right? So this is the mix, domestic versus export. I did speak about it. Export is a very small part of the mix, right? The other piece is that the revenue mix, modules is 74%, cell is 23%, and then there's others, which is 3% of the revenue mix. But let's quickly look at the metrics, and I'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding pattern, the street cred. There's no street coverage for now, but there's valuations and there's guidance that we'll delve into. Let me start off with the income statement. And if you're looking at the income statement, we haven't gone and extrapolated a CAGR number. That's because it may not exactly give the correct color going forward. So because your base was so small and the execution is so strong, just look at the top line growth from 1400 to 6500. EBITDA has gone from 78 crore to 1780 crore, and margins, which were 5%, are now sitting at 27%. Pricing, domestic tailwind, and execution, all three of that has led to the kind of numbers that you're seeing on your screen, but extremely strong. That is very, very evident. Look at your profitability as well. From a negative 16 crore, which is a loss of 16 crore, profitability has actually surged. Negative 8 crore in FY23, 289 crore in FY24, 1240 crore in FY25. And that is what is really impressive. The kind of late teens or rather mid-teens kind of profit margin that the company is making, and the sustainability of that will really be the question. But a clear thumbs up, there's no doubt about that. The journey has been strong. Let's talk about the balance sheet now. And when you're looking at equity and other equity, which kind of helps you arrive at the book value, right? That book value number is inflated in FY25 because of the listing, of course, that's evident. And some amount of profitability also accruing, very, very strong profitability. We saw that in FY25. So those two are key contributors to that book value number. Now, the price to book on this one, wait for it, is 17 times. You have 2,800 crore of book value. The stock market cap is 50,000 crore. So you want to take your eye out and keep your eye out and be careful with regard to this one. Look at the borrowing number, 1,894 crore. It's ballooning. Capex is going up, and this will likely continue to balloon. And the good part is they still have cash of 2,000 crore sitting in the books. So I've given this a thumbs up because despite the borrowing sitting at 2,000 crore, you have cash also of 2,000 crore to offset that borrowing. So really the risk of any default is relatively better, and it does around 1,200 crore of profit as well. Sustainability of that, we'll have to wait and watch, but it does it nonetheless. So for the moment, we've given the balance sheet a thumbs up, despite the kind of debt to equity that this one is sitting at. But something to be careful about is the debt to equity. Mind you, just because we've given it a thumbs up doesn't mean you discount that. Let's look at cash flow from operations. Look at the way it's gone up again, 37, 90, 1300. And you look at the EBITDA and you look at the CFO to EBITDA, the numbers are distorted only because of the large receivables and the large inventory that the company sits on. We've given this a neutral. It's likely par for the course. It's just the way the industry works. Any industry or any company working with the government will face these issues. But at the same time, we are seeing it getting better now versus what it was in FY24. That being said, you should be cautious about this because the cash flow again isn't as high as one would like versus the EBITDA number that we are seeing. Let's look at return ratios now, and you see the way return ratios have zoomed. Sustainability of that is obviously in question, and a lot of that will depend on execution as well. A lot of that will depend also on capex. As the fresh capex comes on stream, you will see ROCE ratios dip a little bit and thereafter maybe rise up again. So this will be something which will fluctuate. But what we have to give credit to the company for is the way in which they've managed it, at least over the last 3 to 4 years, which means that we've seen a surge. Can it sustain will obviously be the question that one asks. Let's look at the shareholding now, and nothing much to talk about where the shareholding is concerned, and I'll tell you why. Because what you really need to look for when it comes to shareholding is the fact that what does the promoter own? Now, you've got 3 to 4 quarters since listing, and therefore the promoter ownership has largely remained steady, and there's nothing much that I can say about that. But you look at FIIs, the holding has inched up. I don't have any names of specific FIIs, but they've inched up. And you look at DIIs, they too have inched up. You have the likes of an Axis Mutual Fund, a Quant, an SBI Life Insurance, a Motilal Oswal Mid Cap, a Kotak Mahindra Life Insurance, all of which have 1% or more stake in the company. So again, that's something to look out for. Let's quickly now look at street cred. Right? Let's quickly look at street cred. Since the IPO, you look at the way from the IPO price, of course, it's a fabulous rally that the stock has seen. It's doubled, more than doubled. But since listing price, not quite. We've been cautious about this. Good from a management standpoint. They've left enough money on the table for investors. That's a positive. But at the same time, is the return extremely good since the day of listing? Not quite. So again, something you want to look out for. We've been cautious. We've given this a neutral. Now, I want to also talk a little bit about street coverage, not quite, but about the guidance and about the guidance that the company has given. let's pull out the guidance, and they've said that they will execute their order book in 12 to 15 months. They'll achieve 10 gigawatts of integrated capacity across ingots, wafers, cells and modules. I described all of that to you by FY28. 2 gigawatt wafer plant. It's a JV with SAS Taiwan, and it's planned for commissioning in FY27. They're ready to invest around 1.2 gigawatt cell line in the US. They're awaiting policy clarity with regard to that. No solid guidance on margins, but hopes to maintain the margins that they're already doing. And they're doing backward integration. I did talk about that, but they're doing battery energy storage systems as well as inverter business. Both of those likely to be margin accretive going forward. So that is the big headline for me as well. That business could well also spur margins. But all of that and more, let's lastly quickly look at valuations. Now, in terms of how this trades at, it trades at around 15 to 18, around 18 odd times 12 to 15 month forward EBITDA. We've extrapolated that. Valuations don't look comfortable. They look quite expensive. When I compare it with a Wari as well, the price to earnings for FY27, Wari trades at 21 times, Premier Energies trades at 30 times FY27. So you want to wait and watch with regard to this one, because it's certainly one of the more expensive ones, and compared to a Wari, it's expensive, and therefore we give this a thumbs down, in fact, where valuations are concerned. It's run away. Can it execute at the kind of pace that they've guided, or even better, will be the question, and which will likely drive valuations as well. Quickly on to ratings. Let's sum it all up. Let's put it all together, and what you'll see is those are the first 4 factors, and then there are 4 more, but valuations is the thumbs down. The only thumbs down is valuation, something you should look out for. And what it gives you is a 5.5 on 8 on your KYC ratings. But we've asked all questions to management. Let's go across, speak straight with the management. We spoke to the Chief Business Officer of Premier Energies, Mr. Vinay Rustagi. Listen in to that entire conversation that Varsha and me had. Mr. Rustagi, let me first start off by understanding you've got a very large capex pipeline, much larger than the cash balances you currently have. Are the internal accruals that you're expecting that strong to be able to fund the kind of capex that you are expected to deliver? And give us perspective on cost overruns and the likelihood of that.
So I think, yes, I mean, that's a very good question. I mean, we obviously looked at all these things in terms of our financing plan over the next 3 years. So if you look at our last year's results, we declared cash from generation of something like 1,400 crores. And with the capacity increasing progressively over the next 3 years, the cash from operations is expected to increase year on year. So if we take that into account, plus the cash sitting on our books as of March, which was about 2,000 crores, we feel together with some incremental debt, we should be able to fund this entire capex without any additional need for equity funds.
Hi, Mr. Rustagi. This is Varsha here this side. Pleasure to have you. Mr. Rustagi, now Premier's growth, or for that matter, any module and cell company's growth is highly leveraged to domestic policy. You have ALMM, you have DCR or Kusum or Suryaghar. How are you hedging against policy changes or the delay in scheme implementation or the competitive pressure from Chinese companies if the global markets soften?
See, I think again, that's a very good question actually. And what we have to acknowledge here is that China is resorting to unprecedented dumping, not just in the solar sector, but in many other sectors of the economy, whether it is batteries, semiconductors, metals, fertilizers, and so on. And, our assessment is that many other countries are now keen, including India, are now keen to grow their domestic manufacturing base. And, irrespective of the kind of low prices that we see in China, solar is one of the critical sectors as far as the Indian economy is concerned. And the government has taken a very, very strong stance against imports and with a view to making India a truly self-sufficient nation over the next few years. So, I think in view of those things, we think the policy's risk to our business is actually minimal. The government is very, very proactive in terms of policy making. There's in fact I would say, a very structured thought process on how to start from the front end and then go to back end in terms of backward integration in a stage by stage phased manner. So the policy is very well thought out. One of the other things that we used to see in the sector is that there used to be a lot of policy changes if you look at the sector until about 2 to 3 years ago. But since then, based on the industry's feedback, based on the government's own learnings, the policy environment has become much more stable. There is a very active round of discussions going on within the industry, between the industry and the government. And hence we have a long-term policy clarity and visibility. So to that end, we don't see any kind of policy risk by way of any abrupt changes or withdrawal of any of the support measures. And indeed, I would say that we have a very, very long-term roadmap for India's solar sector manufacturing in India for domestically. And it's not just India, by the way. There are many other countries, US being one of the other prime examples, where the countries are saying that, we can't be completely dependent on China, whether it is solar sector or any other sectors. And we have to find other alternate sources, including a domestic manufacturing base.
Sure.
So to that end, we are very comfortable with the current structure in the solar sector. And we feel that the risk of any abrupt changes or withdrawal of support measures is next to nil.
Okay. So one thing is competing in the global marketplace and possible insulation of that from a policy perspective. And the other is the fact that there's a fast growing capex push within this sector, even domestically. So what's the risk like with regard to both pricing as well as margins? Give us that perspective. Can this elevated pricing sustain?
No, so what is happening is, right now, I don't think you should look at the current trend in the market to be like a predictor of the long-term direction of the sector. The Indian solar sector is, I would say, the manufacturing sector is still in its infancy. We are currently at a stage where we are self-sufficient in module assembly, but we are quickly growing our cell manufacturing base. The next phase of the growth will be backward integration into ingots and wafers, and then subsequently into polysilicon. Just to give you an idea, India's cell capacity has grown from 5 gigawatts about 3 years ago to about 27 gigawatts today, and is expected to cross 50 gigawatts in the next 2 years. Our own capacities, if you see, we have come from 2 gigawatts of cells to 3 gigawatts right now, and we're going to 8 gigawatts, 8.4 gigawatts next year. So what is happening is that the scale of manufacturing in India is growing very, very rapidly. The entire ecosystem, whether it is aluminum frames, EVAs, back sheets, other chemicals, etc., everything is starting to be made in India. We are companies like ourselves, we are also integrating backwards. So with more scale, with more vertical integration, the costs will come down and there will be much more attractive pricing. And I would say even margins going forward for companies like us.
Can you just quantify on that margin front, sir? Because you are, doing backward integration and a lot of capex. I understand, for maybe 1-2 years may be difficult for you, but overall, over the next 3 to 4 years, what target you have when it comes to your EBITDA margin?
Yeah, so I think it is very difficult to give you a number in terms of the target that we have as a company. We don't give out any guidance also. But what I will say is that this is a very, very capital intensive business where the pace of change in terms of technology is particularly high. And the typical life cycle of an investment is between 3 to 5 years. So what that means is that every time we invest in a capacity, let's say for cells and modules, we need to recoup that investment in a period of less than 5 years and make enough return on it. And that means fundamentally it is a business where the return on capital employed should be somewhere in the region of 25% plus for a business to be strong, profitable, and keep investing going forward. So that is the kind of targets or the number that we will be aspiring for in the middle to long run.
Okay. So point taken. I want to try and understand what the transitions to better product are like, and what are you doing in terms of staying ahead of the curve with regard to product?
Sure. So, we see, in our core solar business, we are transitioning from the mono-PERC technology to TOPCon, which is the dominant global technology today, gives much better efficiency, power output, etc. And more than 75% of our output from next year onwards will be in the form of TOPCon products. So that is one. Secondly, we are obviously backward integrating, which means we will start making our own ingots and wafers, reduce our reliance on imports, increase the share of domestic value addition. Third thing we are doing is that increasingly solar and storage will go hand in hand. Solar is a great technology. It is cheap. It is modular. It is environmentally friendly. It is very low risk. But it has a great limitation. The limitation being that it is only available in the daytime hour when the sun is shining. And that puts a lot of pressure on the grid. So really for solar to become a genuine 24/7 source of power, we need lots of battery and storage capacity, which means that when you can produce power in the daytime, you can store it and then also use it in the evening hours or the night hours.
Sure.
So there is a critical need for storage, and we've announced recently a plan to set up gigawatt hours of storage capacity, improving our product portfolio.
Okay. So in a rush, we're stretched for time, and therefore very quickly I'm going to wrap 2-3 questions into one. So, sir, the current execution of the order book is 12 to 15 months. What is the visibility on growth going forward? Why aren't you focusing on exports, especially since Indian contracts have a higher receivables, which is reflecting on your balance sheet? And where should margins lie net? Are you currently expecting the current margin to be sustainable and therefore ROEs to be sustainable? Sorry, I've wrapped all of this into one, but please give us a perspective.
Sure. Let me try my best. So I think number one, in terms of the demand outlook today is very, very strong. It is the best thing about the demand outlook is that the growth is the entire sector growth is very broad-based. We are seeing very strong demand from the rooftop solar market, the agri solar market, the corporate market, and so on. And in fact, we expect a growth of 10 to 15% to be the norm, wherein the solar sector should start adding up about 50 to 60 gigawatts of capacity over the next 5 years on a per annum basis. So the demand outlook is very strong. In terms of the exports, I think India is very well placed in terms of exporting solar products worldwide. We are the only country outside of China which has got the kind of scale and vertical integration and the technical know-how to become a genuine alternative to China over a period of time. So there's a very attractive market outlook, particularly with many other countries now saying that we can't be completely beholden to China going forward. So in the short run, there is a little bit of an uncertainty, particularly because of the US market and the tariff decisions that are currently kind of pending. But as soon as these decisions are clarified and hopefully a trade treaty is signed between India and the US, we think that there will be a very attractive export market for our products over a very long period of time, because the cost of making solar modules in India is less than half of what it is in the US. So that is for the export market. In terms of margins, like we discussed already, currently we are enjoying good margins. I think with the market maturing and the capacity growing, there will be a little bit of moderation, but our expectation is that the margins will settle down, in a very attractive range, somewhere north of 25% in the 3 to 5 year period, which is still very attractive for us.
Completely out of time on this edition of KYC. Thank you for joining us. All of you viewers, stay tuned to NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal.
They make for great investors because they are risk aware. To my brother, it was, listen, you have to run a household beyond just the budgeting. That data does not necessarily mean that it's a woman who's opened a demat account. Our money is getting invested, but it's done by my father. Only 1 out of 10 women were like, okay, I take a call on where my money should go. Her first thought is that how do I save it better or how do I budget it better? 70% women didn't have health insurance, and I'm talking, this is the mass middle income of India. Woman wants whatever is the solution to be very time efficient.
Hi, thanks so much for tuning in. This is MoneyWise on NDTV Profit, and I'm Alex Matthew. If you're a woman, I've got a question for you. Do you manage your own finances, or is it something that is done for you by your father or your husband or your partner? And if that's the case, would you do it differently if you were managing your money yourself? And if you're a man, if you've been managing the finances of your partner and yourself, a question to you. Have you contemplated what your partner wants with her money? A lot of our interactions with money are driven by our early experiences. And while many stereotypes are being challenged now, young boys are often spoke about the earning mindset, the ability to provide for a family. Girls, on the other hand, are spoken to about having a saving mindset. How are you going to be able to run a household if you can't budget, is often the question that is asked. And the point is, that shouldn't necessarily be the case. Joining me today is Preeti Rathi Gupta, founder of Lakshmi. Thanks so much, Preeti, for taking the time. And the reason I wanted to talk to you is because the business that you are in is effectively financial planning for women by women. And I thought, who better to have this conversation? Do you agree with the setup that I had in that the way that boys and girls are talked to about money, even today, is often like that?
Absolutely. So I think this is where the problem stems from. It's our social conditioning. It's a very implicit messaging that we give in our households. I come from a household that talks money all the time. But even for me, the implicit messaging was that you've got to be a great homemaker, manage your budgeting really tight and be careful about your spends. But it was never, whereas to my brother, it was, listen, you have to run a household beyond just the budgeting, but all financial needs, you're responsible for everything that a family might need, right? So financial security should come from you. Our schools, our colleges, they teach you how to earn money. They don't teach you how to manage your money. And, and I'm just like, I keep thinking about this all the time, that say just like we learn science in school, we learn, mathematics, if we actually learned money management, from there on, I think that gender differentiation or that gender bias around money management would completely disappear. But unfortunately, that doesn't happen. And the truth is that every woman, when she starts earning her money, her first thought is that how do I save it better or how do I budget it better? It is not about growing the money. I mean, I have interesting anecdotes. I've run Anand Rathi for many, many years. And we would recruit fresh chartered accountants every year, about 100 to 150 of them. These are qualified accountants. And, when we did the induction, my first question would be, it was a room full of boys and girls. And it would be, how many of you manage your money? And the boys would all raise their hands. I do trading, I do intraday trading, and I've managed 20% return, and I've managed 30% return.
And these are all 22, 23-year-olds.
Oh, yeah, absolutely. They're just, very, very young. This is their first job. And the women hardly raise their hands. And then when I would ask them that, what do you do, when you earn money? And they said, oh, we do, our money is getting invested, but it's done by my father or my brother. And, it was just very, very disturbing. But I think that aside, I just feel that inherently, women are great money managers. And I think that's more disturbing, that you have all the attributes, but you're not doing it.
So let me ask you this, and before we get into the ideal scenario, some parts of that are changing, and the data is showing that incrementally a lot more women are coming to the fold. And I'm talking about mutual fund investing through equities, etc. The SIP book, a lot more women are going down that route. Why do you think that is? Is it because of conversations we're having right now? Is it because more people are aware of the need to separate their finances?
I think they're both the things, but there is one more thing, and I think that we completely miss out when we look at data around how many women have come, how many mutual fund folios do women have, or how many demat accounts do women have. So for example, on demat accounts, the data is amazing, right? So from total demat accounts, we've gone from, I think, 2-3 crores to about 15 crores, right? But the women demat accounts have gone from maybe, I think, 60 lakhs to about 2 crores now, right? So if you look at in the overall picture, it's still a very, very small percentage. And having said that, that data does not necessarily mean that it's a woman who's opened her demat account.
That is a thing,
Right?
because when the SEBI came out with its study, I remember very distinctly that one of the headlines read, women are better traders than men. And then it came out that it's maybe not the women that are trading, it's their husbands that are trading on behalf of them.
Absolutely. So I think it's very important to try and understand how many women are actually making that decision, or it's just their money being invested on their behalf by somebody. And we've done, and because this data was not really available, we actually did a Lakshmi and Women Money Power report, which actually we did it across 8 cities. We met 4,000 women.
Wow. So what are the questions that you asked, or what are the insights that you were seeking?
Absolutely. So we were exactly figuring out that, while the data says that 30% of folios today in mutual funds or 30% of AUM is held by women, right? But do 30% women really invest their money? And that's what we aim to sort of go and find out. And I mean, the results were not shocking, but they were, even for us, I think they were a little surprising.
So what are some of the key insights that you got?
So very interestingly, I think almost 96% women said that we don't go and access any financial tool, financial app. 70% women didn't have health insurance, and I'm talking, this is the mass middle income of India. So it's not even, I'm not talking to low income women. These are women who are earning their money, and across 8 different cities. When it came to investment, almost 60% of them had no clue of where their savings are going. About 1 in 3 women knew, okay, I know that my money is being invested, and only 1 out of 10 women were like, okay, I take a call on where my money should go.
1 in 10?
1 in 10. So when you look at the 30% figure, you should take it with a pinch of salt. The way I would convert it is that maybe 3% of that AUM is what women are actually, taking a call on. They are the ones who've taken a decision on where this is to be invested. And then that number just seems
very paltry.
It does. And I have to say that, the reason we started Lakshmi was, of course, there was this mission, but just look at the opportunity.
It is a fantastic opportunity. But let me ask you this, and please, and stop me if I'm making stereotypes. This is not my intention. The intention is to help people understand how to manage their money. But in the interactions that I had, even in the newsroom before I had this conversation, because I was seeking insight on what the challenges were. And one of the points that was made, even by women who are managing their own money, is that they say, look, when it comes to running a household, even if both partners are contributing and are working towards something, my priorities are entirely different. I look at my child's needs, for example, and I look at the cost of their education first, and I will then look at my own needs. So in order of priorities, it's very different. Whereas the man will think maybe, hey, you know what? We need to save for our retirement, or we need to save for a new car, or a new house, or a vacation, several other things. So the question to you is, in your interactions and the way that you deal with women, is this one of the foremost reasons why you think there needs to be a separation in the way that they manage their money?
I mean, definitely we need a differentiated platform. And, I think over the last 3-4 years that we've started Lakshmi, the one question we get asked all the time is, why do you need a different platform? Why do you need a separate platform? There are so many platforms. But I think there is the need to, there is a latent, unmet, underserved need. And the way you sort of find a solution for that is, build it as per the behavior of women, the way they look at money. And you very rightly said, right? They will always, if she's a mother, it will always be about her children, about her family, and then, she comes at the end. So the other sort of highlight of our study was when we asked women that, are you thinking about your retirement? 2% women said yes.
Wow.
Just 2%, right? So I think that is one behavior, but I think there are finer nuances to it. So for example, when women look at money, they're actually not talking about returns. They're not saying, I want a 20% return, I want a 25% return. There's no sort of aggressive stance to say that if I manage my money, I'm in competition with the world. It's more about saying, okay, this is my financial goal. This is what I want my money to achieve. So it's, again, using the same tools, same products, but I think women are looking for different outcomes.
So I have a difference of opinion here, and this is obviously based on anecdotal evidence. I don't have mass studies to go by, but in interactions that I've had over the course of the last couple of years, I've had my own partner's friends who've come to me because of the industry we're in and saying, look, my aunt is getting 23% XRR or return over the last 4 years, and I'm getting 18%. I want to get that. So are these mutual fund schemes correct? So there is that as well. There are women who are having these conversations. What I want to understand from you is, from your interaction, a lot of people tend to say women are risk averse. Do you agree with that in the sense that, are they incapable of taking risk?
Absolutely not. So I think they make for great investors because they are risk aware.
Okay.
Right? So I think there is just a very, very small percentage of women who are aware of the nuances of the financial world, and they will come to you and say, okay, I want this percentage of return. But a large population, and this again comes out of our research, that she's thinking of her child's education, she's saying this is what I want to achieve with my money. When a woman puts her money, she wants to know what it's doing. She wants to know where it's going to go, what it's going to achieve. And that is a great attribute, actually, because we've seen how men and women build trust, and you're part of the financial services industry. You hear so many men and women. Men will build trust with a transaction. Yeah. If I get a great opportunity in your office today and I say, listen, I have a platform that will double your money in 6 weeks. I bet you all the men will say, here is 1,000 rupees, come on, right? Or more.
Right.
But the women will come to me and they will ask me questions. Oh, where is this money going to go? When am I going to get it? What is the security? Whom do I reach out to if I don't get this money? So I think women are asking a lot of questions that will actually tell you that they are very risk aware. And what has been lacking is, financial services has been talking in a very male-coded language.
Yes.
And I think what they're looking for is information that is relatable, that is suited to their behavior. And I think that's where the gap is.
So let me ask you this then. Because you've been doing this for some time and you've been interacting with so many women, you've been giving them financial advice. When a woman looks for financial advice, what are the few questions that she needs to be asking? And of course, she will have her own. Sure. But broadly, what are the contours that you think that the conversation should have?
Well, I think the contours are essentially, so I think a woman wants whatever is the solution to be very time efficient, right? So as opposed to asking which are the top mutual funds I should invest in or the top scripts I should invest in, I think for her, and we've seen this because we've built Lakshmi based on her, her needs and her behavior, is what do I need this money for and how long can I keep it away? Very interesting, I think asking a woman what's your risk profile is harakiri. Because then she's saying, I don't want to risk my money.
Right.
There is no risk profile, right? So I think you have to really sort of, the way she should ask about it and the way we as financial advisors should sort of explain it to her is that